Good morning and thanks so much for joining in. You're watching NDTV Profit. This is all you need to know and my name is Alex Matthew. Let's start with the headlines this morning. Unhappy pilots ground Vistara flights, go on mass sick leave. The management scrambles to resolve a crisis and passengers are stuck. US markets are off to a weak start. The Dow is down as rate cut hopes hang in the balance. Indian markets, meanwhile, are off to a great start on the first day of the new financial year and they pin hopes on the July budget. The day after the oath, you will see a barrage of work, according to Prime Minister Narendra Modi, and he asks the RBI to create a framework to fund innovation. Kpi Fashion goes for a demerger to unlock value as the stock continues to languish with negative returns. Now let's talk about international markets. International news. US factory activity unexpectedly expanded in March for the first time since September of 2022, and that's on account of a sharp rebound in production and stronger demand, while input costs also climbed. That is a Bloomberg report. The Institute for Supply Management's manufacturing gauge rose 2.5 points to 50.3 last month, according to the data that was released yesterday. While barely above that 50 mark, which indicates an expansion, it has halted a 16 straight months of shrinking activity. As far as the markets went, US stocks ended mixed overnight. The Dow as well as the S&P 500 dropped 0.6 and 0.3% respectively, and the Nasdaq gained about 0.2%. You've got let's talk about the Asian markets as well and see where they're trading, because you have what was a very slow start to trade in the morning, very narrow gains for the early risers. The Nikkei 225 gaining about 1/3% or thereabouts, and you have the onshore market in China that's up about 0.1% or thereabouts. The Hang Seng is up as much as 2.5% as we speak. And remember, quite a lot of the interest in risk assets this week has been on account of better data coming in from China, and let's see how that pans out for us here in trade today. As of now, though, it is indicating a bit of a negative start, but of course that could change in the next couple of hours. Agam is joining in to give you some perspective on the F&O Qs. Agam, it was a great start to the new financial year and fresh records and all of that. What levels are you looking at right now, though?
Still 22,000 on the Nifty. 22,000 to 22,500 is what we're expecting the Nifty to trade within. And well, I reckon that consolidation will continue as long as we start getting earlier cues from the Q4 earnings. But that said, what's really stood out is that very earlier on in the series, we are starting to already see a substantial amount of unwinding in futures. And, that may perhaps beg the question of whether or not, why are traders so uncertain about the direction of the markets? Because we're looking at the open interest once again looking at a decline coming through, even as the Nifty advances and makes its move towards 22,500. In fact, it's tested that level about a couple of times. And the Bank Nifty futures, the picture isn't very different. In fact, Bank Nifty is where we're seeing a sharp 40% cut in open interest, even as the index advances by around 1%. Today, of course, we'll be keeping an eye on a whole host of these private sector banks because of the Fin Nifty expiry as well. Speaking of which, let's talk about the options market right now. And yesterday, again, we saw a lot of writing around the 22,500 and 22,600 calls as well as puts. Consolidation on the charts after we saw that advance coming through. And of course, on the in terms of your overall open interest, we're now starting to see traction higher around the 23,000 mark, where we have a little more writing around the 23,000 call. It also means that at least at the moment, well, traders are not really expecting the Nifty to move as high as that. And of course, on the lower end, we're now starting to see a lot more put traction being built between 22,000 to 22,500. And finally, coming down to your Fin Nifty as well. Now it's going to be about the 21,200 mark in today's day of trade. Keep an eye on that one. That's where we've seen a lot of accumulation in calls as well as puts. Coming down to stocks. Longs coming through for Hindustan Copper, Coforge, though Coforge was largely flattish. I wouldn't exactly call that longs, but SRF, ICICI Prudential and Godrej Properties did see a good amount of longs building up. And of course, about a short covering for Adani Enterprises, Adani Ports. We have yet another note on Adani Ports this morning. Tata Steel, Metropolitan, MCX as well. All of them seeing about a short covering. So we'll be watching out for that. And of course, the Fin Nifty expiry today, Alex.
Absolutely. Thanks so much, Agam, for getting us those details. Now, it's good news for the Exchequer. Very strong numbers coming in from the GST collections in the month of March. They stood at as much as 1.78 lakh crore rupees. To put that number into perspective, here's a report by Janani.
As the end of the year nears, as is the GST collections for the month of March, we're looking at the second highest monthly GST collections in the month of March at 1.78 lakh crore. This records 11.5% annualized increase on a YOY basis. But why is this figure really important? Because this puts the total GST revenue collected in this year at over 20 lakh crore. Now, net of refund, this comes to 18 lakh crore, which is already a significant milestone for the authorities. Let's get a breakdown of this number. Now, SGST, which is the State Goods and Services Tax, came at 43,746 crore. Central GST came in at 34,532 crore. Integrated GST, of course, which is the IGST that's settled between states, came in at 87,947 crores. Almost 40,000 crores of this is through imported goods. Cess charges, of course, cess collections came up to 12,259 crores. 996 crore of this was again on import of services. I want to leave you with one last figure, which is what has been driving this month's collections. Now, the authorities state it is domestic transactions, which have in fact risen by over 17.6%. We'll continue to bring more details on this particular story, but as of now, these are significant numbers and a good GST collection for the year so far.
And that bodes well, in fact, for what is to come into the new financial year as well. Let's, however, shift gears and talk about corporate news. And we've got Aditya Birla Fashions in focus. It's aiming to vertically demerge Madura Fashion and Lifestyle. There was a notification that was sent to the stock exchanges. Apparently, the board has approved this and the management is going to be studying the potential for this demerger. We've got Sesha joining a bit more. Sesha, give us the context here and what does this mean for the company?
Right. So Madura Fashion will be demerged into a separate listed entity is what the company has said. Now, this means that Aditya Birla Fashion and the demerged Madura will act as independent growth engines for the company. All investors will have identical shareholding in the newly formed entity. Now, let's understand why the company is doing this. In the last few years, Aditya Birla Fashion has invested in multiple businesses with a long tail of businesses that are presently either loss-making or yet to stabilize. However, the Madura portfolio has primarily been a cash cow, even though in the past 2 quarters it has reported consecutive sales decline. But however, that's temporary given the mass slowdown that we are seeing across industries. Largely, Madura has a proven track record of delivering consistent high return on capital. Now, Aditya Birla believes that the demerged entity of Madura Fashion will have a strong balance sheet to power its future growth aspirations, while Aditya Birla itself can focus on the rest of the businesses which are cash guzzling, such as pantaloons, ethnic and luxury segments. Having said that, Madura Fashion consists of 4 lifestyle brands, which is Louis Philippe, Van Heusen, Alan Solly, as well as Peter England. The lifestyle brands itself contribute to 44% of the company's total revenue. However, Madura overall contributes to 70% of the company's revenue. Now, after demerger, Aditya Birla Fashion believes that it can raise capital within a year to beef up its balance sheet. So the stock has been a laggard, and especially when compared to Trent, what we have seen is that Trent and Aditya Birla Fashion, which started off with similar MCAP, is now Trent has a MCAP which is more than 6 times of Aditya Birla.
Absolutely. Thank you so much, Sesha, for putting that into perspective. But let's stay with this and talk about the financials of the deal, or rather the demerger, and what this might mean, because at the end, Sesha was pointing out that the stock has been a laggard. In fact, over the last 5 years, it is -2%, and there's been quite a bit of a chop and churn in the interim. Mahima is joining in to tell you what this could mean from the perspective of the stock and for the investors. Mahima, I think investors have had to have a lot of patience with this. What does this mean for them?
Absolutely, Alex. So if you see in terms of stock performance, Aditya Birla Fashion hasn't done very well in the past 5 years, as you mentioned. Even in the past 1 year, it's been down around 2%. 1 month, the stock has taken a hit of around 8%, and 2 months, it's been down around 12.5%. Now, this is because the earnings of Aditya Birla Fashion have not been very well. Now, in terms of how Madura segment contributes to ABFRL's consol, well, Madura segment contributes around 6,000 crores to the consolidated level as of 9 months FY24. Now, this constitutes around 63% of the total revenue of ABFRL. Even in terms of EBITDA, it contributes around 75% of the total consolidated EBITDA. So if this particular segment gets demerged, the benefit will be that all the premium brands that are there in the ABFRL's profile will generate a different kind of revenue and generate a different kind of profits as well. Well, the EBITDA margins are also better for this particular segment. It stands at around 15.6% as compared to the overall EBITDA margins of 12%. So basically, the demerged entity could, augment the business. It will also help the business sustain the competitive environment that is there in the retail sector overall. So overall, this will be the financial impact in terms of the demerger.
And we'll have to see how the valuations pan out as well, whether the multiple gets revised for this demerged entity. Thanks so much, Mahima, for getting us those details. We will stay with this story over the course of the day as well. But now let's talk about auto sales data. And remember, the first and the second is when auto companies announce the wholesale sales for the month gone by. And we've got Puneet joining in to give you some perspective on quite a few of the auto companies that have reported their numbers so far. Puneet, what are the key takeaways?
Yeah, hi, thanks, Alex. So let's start with the numbers which came after the market closed, starting with Hero MotoCorp. Now, sales for the company is down 5% compared to last March versus an expectation of a 4% growth. So that has been really disappointing numbers coming from Hero MotoCorp. Plus the inventory also has gone up from roughly like 25 days to 45 days for Hero. Now, do note that certain festivals are moved to April this year, such as Gudi Padava and Navratri. So we expect certain inventory build-up from the likes of Hero, but the numbers haven't supported that. Exports have done good, but it's only like 3 to 4% of its total sales. Moving on to TVS Motors, we see that the results have been good, up 12% on a year-to-year basis versus a higher expectation by brokerages of roughly 19%. The motorcycle business has done really well, coming at 22% growth compared to last year, while its export business has done really, really well this year and has contributed meaningfully to its sales. EV sales has been one of the other factors that has contributed to roughly 2 lakh vehicle sales for the whole year. And this is a good EBITDA margin business, so it keeps contributing to TVS. Coming to Ashok Leyland, now this was expected to have a 10% fall in sales compared to last year, but it has reported a 4% fall. So a lower fall compared to its last year numbers. CV cycle has been subdued for all players, including Tata Motors as well as Ashok Leyland. But one key factor which differentiates Ashok Leyland is the bus segment. The bus segment currently has been doing really well, and they are expected to continue to do well for FY25 as well. MHCV sales have been down roughly 7%. And this was expected to go down 12%. So overall, Ashok Leyland has managed to somewhat get some growth, and for the whole year also they have a 1% growth. And the other players, the two key factors are passenger vehicles have done very well for all players, including Maruti, while for two-wheelers, the one key trigger will be Bajaj Auto numbers, which are expected to come today.
All right, thanks so much. Thanks so much, Puneet, for getting us those details. We have to slip into a very quick break. More stock-specific action on the other side, so do stay tuned.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can account.
Welcome back. You're watching All You Need to Know. Now, news from the aviation space. Passengers were left stranded yesterday after a large number of pilots of Vistara went on sick leave at the same time. This has to do with a salary structure that Vistara is trying to put through ahead of the merger with Air India. And we've got Aditya joining in to tell you what this is all about and why it's a bone of contention with the pilots. Aditya, what are you picking up?
Yes, Alex, that's right. The salary structure revision for the Vistara pilots has created this situation wherein the pilots have received a mail from the company stating that the salary structure, which was earlier used to be a minimum of 70 hours per month, has been revised to 40 hours per month, and that as well they would be able to get only if they turn up for 15 hours, 15 days per month. So this has basically created a situation wherein pilots have started reporting sick. This is what I'm picking up from my sources, that pilots have started reporting sick to duty and they are not turning up for the flights, which is creating a massive shortage of staff, and hence the airline is facing troubles in carrying out the normal operations.
Right. Thanks so much for getting us those details. Of course, you'll find more details on that story on the website ndtvprofit.com. And we will, in fact, get you more over the course of the day as well. Let's talk about some of the stocks that you should watch out for on the back of business updates and otherwise, in fact, notifications sent to the stock exchanges. We've got Varsha joining in at the start to tell you about a few of those stocks. Varsha, what are you picking up? Morning.
Good morning, Alex. So a few of banking and financial stocks that did come up with some business updates. So let's start with South Indian Bank, wherein they've reported total deposits of almost 1 lakh crore for FY24, which saw a growth of 11% year on year, while gross advances saw a growth of 11%, and CASA growth was almost 8% for the company. Now, while CSB Bank also came up with some of its business updates, where total deposit grew 21% and gross advances grew 18%, while growth in CASA was only 2.5%. Then we have IRDA, wherein the company's loan sanction amount was up almost 15% year on year, and loan book outstanding as on 31st March stands as almost 59,000 crore, which is up 26% year on year. But if you see in Q4, loan sanction amount doubled for the company. Lastly, we have IIFL Finance, wherein they've received NSE nod to acquire 284 crore worth shares in NSE Limited, and the shares will be acquired from Fairfax India Holding Mauritius Investments through secondary market purchase, and this shares will form a part of current investments, and this represents almost 0.18% of equity. So these all are the banking and financial stocks that we need to watch out for today.
Right. Thanks so much for getting us those details, Varsha. Let's quickly talk about a few more stocks, including Infosys as well as Bharat Dynamics and NMDC. Mika is joining in with those updates for you. Mika, what's on your list today?
Yes, so first we have Bharat Dynamics, the toll exchanges, that they've recorded a turnover of 2,350 crores for FY24. Now this is 5.6% lower on a year-on-year basis, and the company has attributed this to the geopolitical situation in Europe as well as the Middle East, which has affected their supply chain. On calculations, the Q4 FY24 revenue stands at around 834, which is a year-on-year jump when you look for the quarter, and the company is informed that the order book is at 19,468 crores. Then we have NMDC that gave us a monthly and a year-round update. The total iron production for March of 2024 was down 13% year-on-year, while total sales was also down 18% on a year-on-year, but this was for the month of March. The production from Chhattisgarh and the sales from the Chhattisgarh region were up in March on a year-on-year basis, while Karnataka production and sales were down. And when you look at the full financial year for FY24, iron ore production was up 10.5% year-on-year at 45.1 million ton, and iron ore sales was up 16%. And then we have Infosys, which has received a tax demand of rupees 341 crore. Now the company is still evaluating the financial implication and has notified exchanges that it will appeal against the order. Additionally, its subsidiary has received a refund order of 15 crore. Mind you, yesterday we spoke about how the company expects around 6,329 crores of a refund from the income tax department, whereas it also received assessment orders or tax demands of 3,058 crores, giving the net receivables at 3,271 crores.
Got it. Thanks so much for getting us those details, Mika. Let's lastly focus on AU Small Finance Bank. The bank has announced the merger of Fincare Small Finance Bank with itself. This comes after the RBI granted its approval for that merger on the 4th of March. Pragati is joining in with the key details and what to watch out for. Pragati, what can you tell us about this?
Yes, right. So the merger of AU Small Finance Bank with Fincare Small Finance Bank has come into effect from 1st April. Now, this scheme of amalgamation was approved previously, and after several regulatory approvals, especially by the RBI on 4th of March, this has come into effect. Now, what essentially is happening here is that the Fincare unit will now become AU Small Finance Bank's 6th business group, because the bank currently had 5 groups, but with this merger, Fincare will become a part of the 6th business group. Significant benefits to AU Small Finance Bank also coming in. For example, its paid up equity share capital will now be at 742 crore rupees from the previous 669 crore rupees. It plans to serve a combined base of more than 1 crore customers, which is a significant increase from the previous customer base. About 43,000 employees joining in, more than 2,300 physical branches as well. And even previously, when the merger was announced last year, AU Small Finance Bank already said that from the merger, it plans to benefit from Fincare's gold loan capability, gross advances, and even the pan-India presence. Now, some management rejigs also happening. For example, Rajiv Yadav, who was in Fincare Bank, will now be the Deputy CEO of AU Small Finance Bank.
Thanks so much for getting us those details. By the way, that's another story you can read on the website ndtvprofit.com. And that brings us to the end of this particular edition of All You Need to Know. But before we end, take a look at this. Arun Bansal, the Chief Executive Officer of Adani Airports, is speaking about his outlook for the Indian aviation industry. Listen in.
As we as an airport operator, Adani, we are doing few investments which will facilitate passenger journey tremendously. Number one is the investment in digital tools. So we are digitizing a lot of processes which will for the benefit of the passenger. Number two is to increase the physical infrastructure. As you know, we just yesterday opened the Lucknow new terminal, where we will migrate all the domestic and international flights. And the new terminal is almost 80% larger than the combined T1, T2. We are building a new terminal which will also be commercial in Guwahati, which will be significantly bigger than existing T1 and T2. We are building a new airport which will be commercially operational from Q1 next year in Navi Mumbai. We are also going to start a process to build a new terminal in Jaipur and also in Ahmedabad. So 2 different levels of significant investment. We are doing new physical infrastructure, but also digital tools.
And is there any more budget are you putting in the airport businesses?
I mean, we are investing physical infrastructure, and digital needs significant amount of capex, and we are committed to invest that to cater for the growth of the passengers we see, as the Secretary also talked about today in his speech.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future,
as we've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
you can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Very good morning. You're watching India Market Open and we're set for an exciting day. A lot of turbulence overnight.
Pun intended.
Pun intended. Yes, I am talking about whether, if you took a Vistara flight in the last 24 hours, you would have definitely felt the turbulence of not taking off at all.
15 flights cancelled today as well, as I learned.
Today as well, and yesterday about 50. It's an interesting story we'll be covering ahead on the show as well. Could have an impact on your indigos and spices simply because one's loss could be the other's gain. But the endemic issue of what's happening in the aviation industry is also interesting to cover.
Yeah, it's scary to now take connecting flights, Tamanna, because you do not know if you will miss your connecting flight. It is a different airline because you do not know the schedules as they stand right now from your port of origin or the port of connectivity.
So you have a growing domestic aviation market, a lot of new planes coming. Where are the pilots?
Exactly.
So exciting story to cover. But focus today on what's happening overnight globally. And that's been quite exciting as well. It's a turbulent day for the US markets, negative actually, largely. The Dow was down about 240 points. If you pull up the Dow futures, you will see that pain continuing. So remember, the US markets last night responded to things like Powell's comments saying that, we're in no rush to reduce rates, the inflation data which came in, the PCE data, as well as US factory data which surprised, highest level in about 16 months at 50.1, 50.3. It was not expected, and it's showing you once again that it's a strong economy. So is there really an incentive to cut rates? Those questions start once again. Look at the 10-year responding to that quite sharply, 4.3% and above, actually. Quite a jump on the 10-year treasury. Crude is looking painful as well. Those geopolitical issues seem to be rearing their head. The Iranian consulate was hit in Damascus by a missile strike. Could this be the beginning of a conflagration in the Middle East? Once again is what we're wondering. Brent is not only over $87. Last I checked, it was closer to $88. So that's going to be one bit of worry, maybe weighing on our markets. Asian markets, let's pull up Asian markets. Started about mixed, and yes, you're seeing that happening. But the one exciting story for me was Xiaomi. The stock is up 15% because they've launched their first EV, and their advanced bookings are apparently insane. Neeraj, would you buy a car made by the same company that makes your phone? Is it just the same thing? You can outsource a phone and you can outsource a car.
Yeah, well, it's software on wheels. Yeah. So in some sense, you could argue that at some point of time, we might start seeing this happening all over the world as well.
Yeah.
Kpi Tech says this, for example, right, that they are helping car companies being software leaders, but that is because they are not able to help themselves in some sense, right? That's not Kpi saying, but I'm saying this. So yeah, I never know. Would you?
Apple car, Samsung car, yeah, why
Apple
not?
shelved that project, unfortunately, for themselves. But yeah, but you are absolutely right, Tamanna.
Yeah, they shelved their project, and then now you have a Xiaomi which has, started putting on its EVs at a discount to Tesla.
Yeah.
So that's where that Chinese story. Just one word on gold. What is happening with gold? Up about 9% just this month, hit a record high once again. I think US gold futures at 2270 rates. So gold is another interesting story. I don't know if that's, what that's telling you about the market. So for those who are watching and wondering what equities are going to look like, you're probably going to see a bit of weakness today.
Yeah, and one of the things could well be crude, Tamanna, you rightly put it. One, we are having this Middle Eastern issues only getting amplified, and world data on demand starting to look a bit stronger, which effectively augurs well for crude. Hitherto there was a demand issue. It may well still remain because demand may not really go back, go bonkers per se. But if demand picks up a little bit, you hit the nail on the head. Crude would well be the defining thing in a very near term. Let's see what shapes up there. But yeah, I mean, just taking the cue from what Tamanna has laid out in terms of the setup for the globe, the implied open, just for a minute before we move to what the trade setup for the day could look like. So the implied open, on expected lines, you would argue, a bit lower in trade. Now, if you just look at, independent of what happened to the globe, if you just look at what our indices have done, they're kind of inching towards that greed zone, if you will, with global cues being sedate today. So the perfect recipe for a kind of muted outing in the session. And this is despite private banks showing zeal. So the good part for the market is that the private banks are showing zeal. Even HDFC Bank is participating. Yesterday, if you looked at the list of the stocks which by weightage lent to the Nifty gain, HDFC Bank was right up there, So you're starting to see some bit of traction in this one yet again. And if this continues along with the private banks, that's a bit of a crutch then the market can sit on. And that's yesterday's weightage-led movers, and HDFC Bank right up there with the kind of gains that it linked in. And yesterday, Frank, by the way, this chart is very good because yesterday you saw the economy-linked stocks. Me and Tamanna were talking about it in the closing show yesterday. Everything linked to economy. So you had metals, you had Adani Ports, Adani Power, you had Larsen & Toubro, you had HDFC Bank. Everything linked to the economy did really well in trade yesterday, large caps, and could well continue doing well in the session today. I don't know how you think about it.
I think it was more
sort of everything except maybe autos, your realty, your media.
Yeah.
It was a different mood yesterday. So,
Yeah.
But yeah, you're absolutely right. The economy push is
the
in
heavyweights,
in the heavy hitters. Absolutely.
Heavy hitters, that kind of stood out. And it could be interesting. By the way, it's the key movers of yesterday, some very interesting names there. So PNB Housing up 20%. Very interesting to see what the technical experts have to say about that today. Indostar Capital up 5% with some serious buyers out there still waiting to buy. Indus Towers had a massive move yesterday on that CLSA note maybe. Tata Steel, Adani Ports. So clutch of stocks. And because there are a lot of newsmakers today, the show will be tight packed for talking about all the newsmakers as well as yesterday's movers, Tamanna.
Yeah.
And I dare say, sorry, just before we get to specific stocks, telecom could be interesting because I see conflicting notes there. For some people, Bharti's active subscriber addition is a great thing. For some people, overall addition except for Jio remains muted. So difficult to say which way the cookie will crumble, if you will, on whether Airtel gets a benefit today of doubt, or do we see some bit of correction in Airtel, Vodafone Idea, etc. Small pocket, but could be interesting.
Yeah. No, we'll get to specific stocks. Just quickly wanted to go through the fund flow numbers before we do that. FPIs actually turned sellers yesterday after 3 trading sessions. DIs were still buying, so FIs were not really participating per se in what you saw in the markets yesterday. 522 crores, 1208 on DIIs. But I think the big story perhaps that you will see, and that theme that you will see, is on auto stocks, and we'll just pull up a clutch on them. Most of the numbers are out, and if I were to put it in, say, 2 or 3 headlines, so to speak, I would say two-wheelers on the road to recovery, passenger vehicle sales decent, but export figures have been a bit tepid for most of these companies. Tractor sales have definitely not been great. I'll just, let's see if we can run. I picked up a note from MK on them, which sort of puts it together and what you should look out for. So their top picks are TVSL and Escorts. For MK, they say CVs are potentially poised for a down cycle. So that's one to look at, and volume trends were largely a mixed bag. The CV weakness is going to be the big story. We're going to be hearing from Shashank Srivastav of Maruti a little ahead on the show on their numbers as well. So stay tuned for that. Aditya Birla Fashion is the other, I think, stock to watch, which might have a bit of flow today. They're going to demerge their Madura Fashion and Lifestyle. This was something that was being speculated by the market for a bit. So just for some context, Madura Fashion has 4 key brands which contribute 44% to their total revenue, and those are on your screen right now. So that includes Louis Philippe, Van Heusen, Alan Solly, and Peter England. The demerger ostensibly is to allow, your ABFRL to focus on pantaloons and other digital and luxury brands, etc. But we'll have to wait and see how the street responds to it, what real value unlocking you're going to see for investors in this case. We did a small comparison with Trent, and we can just pull that up. Sesha will have a detailed story on that ahead as well, where compared to Trent, the stock price of ABFRL was about 6.2% down. The MCAP is also more for Trent than ABFRL. Just one more on the radar and sort of related to auto, but not really, is Uno Minda. I'm not sure how negative this news will be, but definitely something to keep in mind. So they've received a communication from 2 key customers, Honda and Scooter India, on a global recall they had to do. The global recall was because there was leakage of oil from the engine, and that leakage was because of one specific part that Uno Minda makes. And they make that in their Bawal, Haryana factory. So it's a ceiling plug cone or some such. And my colleague Puneet from our research team, pulled out more details on that, so the company has insurance, of course, for any product recall, but this segment is roughly 26% of revenues for Uno Minda. So that's one that perhaps I will watch. But there's so much on the list today, Neeraj.
Yeah, but this is interesting. A large customer like Honda Motorcycle and Scooter saying that they have had to recall because of Uno Minda supplying on that, because of the issue with an Uno Minda part supply. That's the ceiling plug, as they've said, is interesting. I don't know how large is Honda motorcycle and scooter for Uno Minda as a client, but it's certainly interesting. So yes, I take on board that. May see a negative reaction, so watch out for that one. Couple of updates that have come in. So firstly, CSB Bank, the Q4 update, they reported a total deposit of 29,719 crores, which is a 21% uptick YOY. And the gross advances also up about 17.91%. So both deposit growth and advance growth actually looks pretty decent for CSB Bank. Remember, they have a large gold loan business as well, with Manappuram, Muthoot, etc. having done what they have done as stocks. CSB Bank hasn't quite done that. Could these results be one of the key triggers that drives the performance? So could be interesting to watch CSB Bank today. So from a newsmaker perspective, that stands out. Watch out for JTL Industries. JTL was up 9% yesterday, by the way. We got the update at 4:30, but clearly somebody knew something, because their annual sales volumes, they reported post-market hours, highest ever annual sales volumes, 341,846 metric tons versus 240, which is a 42% uptick. It therefore, by math, comes out to be a decent number for Q4 as well. So watch out for JTL Industries, could be interesting, and a clutch of brokerage notes. But before we get to brokerage notes, I dare say do watch out for the cooling solution companies. IMD yesterday said that extreme heat waves are likely in coming months. So we've known that some of these Voltas, Blue Star, Symphonies have done well thus far in anticipation of this. But extreme heat waves is not something that we've heard an official statement. And this might just spur the sentiment on some of these companies. So watch out for these stocks as well in the session today. The Symphonies of the world. 1 month hasn't done anything. The last 10 days or 50 days, some of these stocks have moved. Maybe there could be more in store. So watch out for these as well. But a clutch of brokerage, I mean, I don't know if you're missing some other stocks, but a lot of stocks will react on brokerages as well, Tamanna.
Yeah. No, just a couple, and I don't know if you'll see much of a reaction, but I read a business update I found interesting. Loans sanctioned were up 14% year on year, while their loan book outstanding was 27%. So figures aren't bad. What Harsh from our research team says is that perhaps the growth figure could have been higher. So I doubt we're going to see a negative stock reaction. I don't know, I'm curious to see if an Indigo or SpiceJet will react at all to what's happening with Vistara in two ways. One is loss of any market share for one player could be an advantage to another. But also on the other side, the problems that Vistara is facing is endemic to the industry right now. So it's not going to be about just one player. So that's something I would watch. In brokerage notes, Neeraj, I thought the MS one on India property was interesting, because look at what's happening with property right now. And this is exactly what I was asking Hemang Jani on the show yesterday when he said property looks good before an election. And I was curious about that, because typically it's the opposite, and that's what MS is saying. They estimate a slower, next 2 quarters to be slower, because RERA approvals will be held up due to the elections. You're going to have a change of government, not just at the center, but in several states as well. They expect companies to guide 10 to 20% Y growth versus 30 to 40% earlier. So you're going to see a drop over there. They've downgraded DLF. They expect their Q4 FY24 pre-sales to disappoint. They've upgraded Godrej Properties with a price target of 2,500, equal weight on Macrotech, overweight on Prestige. Prestige is interesting because that was, the stock of the day yesterday. Let's just pull up Prestige very quickly. Target price of 1,400 is what they have given. So you're not that far off. And underweight on Oberoi Realty. So that was one note that I thought was interesting today as far as a hot sector is concerned. Yeah, most certainly. And speaking of hot sectors, Citi came out with a largely blanket avoid, if you will, on IT. But the one that stood out for me from amongst all the others, they've downgraded a clutch of names, including the target prices on TCS, for example. The one that stood out was Emphasis. So the Citi on Emphasis note, a Citi note on Emphasis has a sell. The target price reduced to 2,255 versus a current market versus the earlier target of 2,515 and the current price of 2,461. So they have a sell with that target price lowered. They have revised the FY24 to 26 earnings estimates by
0 to 4% to incorporate changes in operational parameters, and they assign a multiple of 24 times versus 26 times earlier, given concerns around the pace of demand recovery. So clearly, everybody's talking about this. Nomura today has a note which is talking about very cautious commentary possible from IT majors in this quarter. So watch out. While IT had a uptick yesterday, and we spoke about it, global markets plus HCL Tech plus Infosys. Today may be the reverse. By the way, Infosys seems to have gotten some IT demand as well. So, yeah, 2 days on a trot.
Balance it out.
Who knows? It's a small one.
But the taxman said, "Okay, what has happened? We're going to be giving money. Let's fix
we can't do that. Yeah. So let's take a small chunk out there. But it's interesting. This is jokes, by the way. I mean, I'm sure they follow their processes. But it's an interesting one. So watch out for IT today. But watch out for Adani Ports today. Yesterday was amongst the best performers. Citi has given out a note saying it's their top pick. They've raised the target price to 1758, which, based on the current market price, is a 27% uptick. Now, why do they say so? Of course, they've opened a positive catalyst watch on the earnings on Adani Ports as well. Why do they say so? They say that they expect Adani Ports to report strong volume, revenue and EBITDA growth. The strong volume growth should lead to a core port EBITDA growth of 29%. You know, at a point of time when everybody was talking about how the global economy doesn't look that great, etc., here's a port company beating its volume guidance and likely to score a 29% EBITDA growth, which is pretty stunning. And they say that the valuations leave ample room for upside given the quality and the scale of the underlying business. And they, of course, increase their EPS estimates, etc. Standard disclosure, of course, that Adani Ports is a part of the Adani Group, and the Adani Group owns NDTV, and you're watching NDTV Profit. But that takes nothing away from the note that is written by Citi. And it also begs to question about the pace of global recovery that everybody's talking about. If a port company, which is largely dependent on global and local growth, is actually clocking in the kind of numbers, it'll be very interesting to see what JSW Infra numbers or Gujarat Pipavav port numbers look like as well. So watch out for that. And a clutch of other brokerage calls. Now, we made a table of this. That data patterns, HAL, Lao Pala, Saregama, Aditya Birla Cap. I mean, just look at the brokerages and the buy calls and the target prices. So data patterns, Jeffries has a buy call, a target price of 3545. HAL, a buy call, target price of 13900. Lao Pala by BNK is a buy call, the target price is 462, which I think is some 30-40% upside to the current market price. Saregama, a buy call, target price of 441. Aditya Birla Capital, Tamanna was speaking about Aditya Birla Fashion. Aditya Birla Capital has a buy call on Macquarie, or rather outperform from Macquarie, a target price of 230. Just the nature of brokerage calls today is very, very wide, Tamanna.
Very wide. Just add Citi on Zydus, which has a sell target with a price target of 650, down from its 750 earlier. And while they expect improvement in base business margins, but higher sales of GE Rev Limited seems to be the issue. So Zydus maybe. Lots more coming up though. Lots more coming up on brokerage notes. But should we go across to editor's cut, or you?
Yeah, just one small segment, Tamanna. And what's one piece? This is something that our colleague Chinmay pulled out from the NSE report that they come out every year. And the net inflows by retail investors in the cash segment. Now, we know that generally the numbers have been good, but look at this data. It's stunning to say the least, because 2023, the numbers came off, and came off quite rapidly, right? So 5,200 crores, this is NSE official data, we have nothing to do with it. From 2022 numbers of 88,000 crores. So 2023 was a disappointment. The first 2 months of 2024, we've seen a number of 6,000 crores already.
In the cash segment.
In the cash segment. So
do you think they're moving from derivatives?
Yeah, I mean, well, it is certainly a question that we should try and
look at that volume there and compare, because either a lot of new people have come in to pump in fresh money, but then that should show in your SIP inflows as well.
Yes.
Or there is a bit of idea that, okay, if you burnt your fingers in the F&O market last year, you're being
therefore,
careful.
So clearly, that could well be right, that 2020 was a year of derivatives. So the cash market only 5,200 crores.
Correct.
But 2 months of FY24 is 61,000 crores. The whole of 2022 was 88,000 crores. That's the kind of participation that we're seeing from retail right now in the cash markets right now. Pretty interesting.
Astonishing. Absolutely.
Okay, editor's cut. And it's an interesting data to an interesting conversation, Alex. I presume it's around autos.
Absolutely, you're absolutely right. In fact, as our viewers will probably know, the first and the second of the month is when you generally get a sense of the wholesale data for auto companies in India, but they don't necessarily give you a breakdown of the individual segments. Still, there's quite a lot that you can glean from that. Remember, March was the data that we're talking about, and therefore you get a picture for the whole of FY24. Harsh, we're still waiting for some key data. Bajaj Auto, I think, is imminent. But then you've got a sense of quite a few of these sectors. Let's start with two-wheelers and then let's progress through the others as well.
Well, yes. So, Alex, on the two-wheeler front, March slightly weak is how one can sum it up. But overall, FY24 has been heartening because it's been a bit of a beat overall for the full year. But March slightly on the weaker side. Less than expected. It's possibly also something to do with the electric two-wheeler side of things, because your subsidies are going to go away from April, and therefore the offtake there was slightly weaker. On the retail side of things, of course, strong numbers, but when you're looking at the OEM or the manufacturers selling to retailers, that number was a bit softer on the March side. In fact, it saw a bit of a decline as well. So,
and Hero was significantly below expectations. I think the expectation was for a positive number in the month gone by in March, but they reported a decline in sales volume.
Yes. So, in fact, if we can have those numbers, Hero, in fact, was on your screen. 543,000 roughly was the estimate. It's come in at just about 490,000. So, around your 10% off versus your estimate. So, yes, Hero probably leading the trend there. TVS was slightly better, but it saw growth of 12% and thereby better. But outside of that, it was still below expectations as well. Oisha, choose to believe that till it's range bound, till it doesn't hit the 80,000 kind of mark in a sustainable kind of way. It's currently at roughly 76,000. Till it doesn't hit that 80,000 kind of number in a sustainable manner, a re-rating, a significant re-rating is not something that one can
We'll have to also consider the appetite of new launches that they have in the offing. Let's talk about PVs as well, because Maruti Suzuki, not too much to speak of, and SUVs continue to be the story to track.
Yes, absolutely. SUVs continues to be extremely strong. 31% continues to be the kind of market share that SUVs it's holding up at a fairly high base. So that's a fairly good kind of a number. But where overall PV is concerned, also not a bad set. The base has gotten reset, it's gotten higher. So FY25 from that perspective would be interesting to look for, because the growth number likely should be lower given the higher base of FY24. So PV is definitely the bright spot in the entire auto space, no doubt about that.
And we'll have to see how the EV segment within that also starts ramping up. Of course, we have a management conversation with Maruti Suzuki lined up for you, and I believe there is going to be a chat about what their strategy on EV is. But let's also talk about the CV side, and I think I will add tractors into this as well. What's the picture there? For tractors in particular, it's a little miserable.
Yes. So I'll choose to have two separate conversations there. One on the CV side of things, weak set of numbers, that seems to persist. And the expectation is that it should persist even into FY25. Of course, you have some commentary where Tata Motors is suggesting that Q2 FY25 onwards, possibly you could start seeing a pickup in CV. But overall, analysts still seem to be quite soft in terms of their outlook on CV going into FY25 and for FY25. So that's the outlook on the CV side of things. On the tractor side of things, things could be slightly different. It could depend on monsoons, it could depend on Rabi crop, it could depend on... So there are several factors which will
as of now, it's not looking good.
No, not looking good at all for tractors either. Of course, seasonality also coming into play a little bit. Also, the early festive season also could possibly start to is possibly also playing out.
So to me, Harsh, what seems to be the big takeaway as things stand is that rural consumption is a bit of a question mark at this point, because generally you would associate your motorcycle sales and read Hero MotoCorp in this and tractor sales, which is by definition something that's driven by rural, and both of those are languishing. That seems to be the takeaway for me. Is that something that you concur with?
Yeah, absolutely. So I do believe that rural is possibly a bit of a drag at the moment, and a rural pickup could see a good pickup both on the tractor side of things as well as on the two-wheeler side of things. At the moment, as I said, PV being the bright spot, but outside of that, for two-wheeler and your tractors to really pick up, you will require rural to start to participate.
All right. So on that note, let us know what you think about the numbers and whether or not you're enthused in any particular segment. As Harsh has pointed out, PV continuing to be the bright spot. There's more to talk about before the start of trade. Do stay tuned. Lots more coming up on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
You have a missed call. Let's be real, guys.
All right, back with India Market Open right here on NDTV Profit. Pull up the implied open and show you what we are likely to do this morning. Likely to start off on a sedate note. The question is that how we will stay for the day, or can we do better? Now, this is the time when we get you option strategies. Usually our colleague Agam does it. Today Tamanna and me have volunteered to do this piece, and let's get in Ajit Rambia, who's the founder and CEO of Ajira Ventures, to talk about some of those option strategies. Ajit, good morning. Thanks so much for joining in. This is Neeraj here. Good morning. And
good morning, Ajit.
And before we get to the option strategies, Ajit, just a quick check. Are you constructive for today and the rest of the week, or do you believe the markets could be sideways to maybe even down?
Markets are volatile, Neeraj. Like we believe up to the elections, the scenario, like yesterday we closed at high, and today the SGX is showing 100 points downtick. So this times markets will be volatile. We have a bullish bias though, but but they will be volatile.
In fact, that implied open is showing mild weakness and maybe global factors, etc. as well. Hi, Ajit. Good morning. Tamanna here. Wanted to know what would be your strategy on the Nifty and the Bank Nifty today? What would you advise our viewers?
And speaking about the indices, we have a resistance for Nifty at around 22,530 levels, which is the recent top, and the support is placed at 22,300 levels. For Bank Nifty, we have the resistance at 47,800 levels, and the support is well placed at 47,300 levels. Though the market will remain volatile, we may see a downtake, and then again buying will come. It will like that.
Okay. With that in mind, Ajit, what are your option strategies for the day? Let's start with the first one.
Yeah, we like IRCTC. So IRCTC has given a good breakout, and the counter could see new highs in the coming weeks. So we suggest a bull call spread for this counter, where we buy one call of 980 at rupees 30 and sell one call of 1030 at 13 rupees 50 paise. So the investment for this strategy is just rupees 16 rupees 50 paise to capture a possible gain of 50 rupees.
Could you just explain this, Ajit, for our viewers? So what is it that you're doing and why is it that you're doing this?
So we are bullish on this counter, IRCTC. It has given a fresh breakout. So we are buying at the money calls and selling our target calls. So we remain bullish at 980 levels by buying a call at the money, and we reduce our cost by selling a 1030 call at 13 rupees 50 paise. So our cost remains at 16 rupees 50 paise. That's the maximum that we can lose. And we feel that this counter will cross 1030, so we can gain the full 50 rupees.
Okay, so you're constructive. You're just reducing your cost by selling that April 1030 call, but in order to reduce your cost. But otherwise, the outcome of this, or rather the thesis of this, is that you're constructive on IRCTC as a counter.
Right.
Got it.
So we are bullish on this counter. Yeah.
What about the other call that you have, Ajit, on PNB? What is your strategy there?
Yeah, so we are again bullish on PNB. After a very good consolidation, it is now ready for a limited up move. So we initiate a bullish butterfly strategy in it, whereby we buy one April call of 125 at 5 rupees 10 paise. We sell two calls, April calls of 130 at 2 rupees 95 paise, and again buy one call, hedge it, of 135 rupees at 1 rupees 60 paise. So the cost of this strategy is near 80 paise, which is its maximum loss possible, and you can earn 5 rupees if it closes at its target price of 130.
Ajit, I'm curious, why is this called a bullish butterfly strategy? Can you explain that?
Yeah, so we are bullish on, there's a limited space for PNB to go up as we feel. So we buy one ATM call, sell two calls of 130, which is our target price, and again hedge. So we are one short as we buy one and sell two. So we hedge it with buying 135 call. So everything is covered, and the maximum loss that we can incur is just 80 paise.
Okay. The other thing, Ajit, is on some of the stocks that did really well yesterday, just a follow-up there, and just trying to get a sense of, is there a strategy that you may have? So a couple of names from the derivative space which had a fabulous outing: Indus Towers and Adani Ports.
Adani Ports and?
Indus Tower.
Indus Tower. So Indus Tower is making new highs these days. I don't have the charts right now, but it is a real good counter, and we are bullish on it.
Okay.
Yeah.
Fair call. Ajit, we'll leave it at that. Thank you so much for taking the time out and giving us that perspective. Really appreciate your time. So that's the view on some of the option strategies. I appreciate your time, Ajit. And pretty interesting.
Yeah.
I was wondering if you'll bring up an auto name, because autos have been the buzzword, right, the last few days?
Absolutely. Autos have been the buzzword. Their annual sales numbers is giving a clear picture of what the reality is. And while it's largely positive, the fact is, in the overview, it's a bit of a mixed bag. One of the leaders, definitely in the passenger vehicle section, is Maruti. The stock has been in focus because it crossed the 12,000 mark. Now, you know, that's seeming like an old story if you look at what's happening with Maruti now. Just about a couple of weeks ago, we were celebrating the 12K mark. It's at 12,595. Now, my colleague at NDTV, Mugdha Mishra, caught up with Shashank Srivastav of Maruti to speak to him about the sales numbers for this year, for the whole of last year, and of course the quarter. Listen in.
Yeah, so multiple of factors. You know, there's no one factor, but multiple factors. First of all, the economy did really well. And as you know, there is a very high correlation between economic growth and the fortunes of the auto industry. So it's been, in that sense, very good overall economy. We saw some really good capex expenditure by the government, especially in the rural infrastructure and so on, which also is related and has a multiplier effect on the demand for automobiles. Third, we saw, as Maruti Suzuki specifically, we introduced the 4 SUVs, and that impacted our sales very positively because SUV is now the biggest driving force for growth in the industry. 26-27% growth for the SUV sector, whereas the overall growth in the industry is around 8.5%.
You spoke about rural. So what has rural growth been for Maruti, and how do you see it panning out from here on?
So rural has been very positive. In fact, this year, the growth is around 11.2%. That compares favorably with urban growth, which is around 7.2%. And in fact, rural, our overall contribution of rural sales in our total portfolio now is around 45%. So that's pretty large. For the industry overall also, it is it's grown to about 33-35%. So rural has been doing well. Apart from those capex expenditure on infrastructure that I spoke of, it has been a normal monsoon. Although at the beginning of the year, we were a little afraid that the El Nino will probably reduce the monsoon as such. But it came out to be roughly the average, long-term average was pretty close to that. Kharif sowing was pretty good. Rabi sowing going on is very positive. So I think that has affected positively the sentiment, and we do hope that in the future the rural sale will continue to show a positive progress.
And what about your urban? What is the expectation from rural and urban growth for 2025?
Yeah, so pretty much similar. We do expect the rural growth to continue, especially if you have a normal monsoon. Of course, it is dependent on monsoon because that affects agricultural income in a big way, and that affects the sentiments quite disproportionately. So, and as you know, car buying is a discretionary purchase, so sentiments are very important. So we do expect rural growth to continue to be in the positive territory.
You know, earlier it was assumed that rural and small car segment are closely related. But since rural has shown growth, but the small car segment still struggling, do you see that the income in the rural areas have shown significant growth?
Yeah, absolutely. In fact, if you look at the data from 2007 onwards, the rural growth I'm talking about auto industry has been higher than urban growth in all years except one, which was I think 2012. Otherwise, it's been always on the higher side compared with the urban growth, and largely because the rural incomes have been rising faster than urban incomes. Also, as I mentioned about the infrastructure getting better, so sentiments are quite positive. So yes, these are the factors which have helped rural become so big now in the auto.
Now, let's talk about WagonR has been one of the most successful products, and that's mainly because of commercial vehicle usage, the taxi usage. Now, what is the segmentation between personal vehicle buying and commercial vehicle buying, and what is the trend there?
Yeah, so you mentioned about the higher commercial usage. Actually, that's not true so much anymore. WagonR is the #1 vehicle in the industry, in fact, for the last few years. It's the only brand which is selling in the industry more than 200,000, sold more than 200,000 this fiscal year which just ended. There is a lot of personal buying in Wagon-R. In fact, the proportion is quite high. Earlier, people used to feel that since CNG is also an option available in the Wagon-R and it's a significant portion of the sale, people used to think that it's largely commercial which takes. It's not true anymore. In fact, if you see cities like Bombay, Pune, Mumbai, Pune, where the penetration of CNG in Wagon-R is like 70-75%. But it is largely the individual buyer. Of course, there are commercial vehicle sales as well. So that trend for usage of CNG vehicles for personal buyer has actually been increasing over the years, and it's quite substantial now.
All right, so that was Shashank Srivastav talking about the growth story coming up ahead. But the other big story today is that the aviation space. Passengers were left stranded after a large group of Vistara pilots went on mass sick leave. The pilots were asked to sign up to a new pay structure. We have Aditya joining us with the latest and in fact exclusive sources on the story. Aditya, very good morning. Now, as I understand it, the issue or the genesis of the issue is because the Tatas are trying to bring parity between what happens with Air India pilots and staff and crew and Vistara staff and crew. So that is where this entire problem began, isn't it?
Yes, Tamanna, you're absolutely right. So the pay parity which Tata Group is trying to bring between among their airlines, the Air India, Air Asia and the Vistara. So the pay parity rule has basically resulted into an email that was sent earlier this month to the pilots of Vistara, asking them to sign a new pay structure of 40 fixed hours per month. And this was done because the airline wanted to bring the pay structure in line with the other carriers of the group, and pilots were asked to sign this pay structure by March 15th. And because they were asked to sign this pay structure by March 15th, the pilots have gone on a massive sick leave because of a massive reduction in the pay from 70 hours to 40 fixed hours every month. And the pilots were, although offered a sum of rupees 3.5 lakhs for the first officers and a sum of rupees 4.5 lakhs for the captains for signing this new pay structure. However, the pilots have decided to go on a mass sick leave, and we are gathering from our sources that nearly 20 to 25 pilots from the Delhi base itself have gone on a sick leave, resulting into the massive disruptions for the airline, and airline has been facing the operational issue since then.
Absolutely. In fact, we'll get a report from my colleague Maitri. She is at the Mumbai airport right now, capturing what's happening there with passengers. Thank you so much for all of those exclusive details, Aditya, there. Talking about that story. Ajay Attorney is now joining us. He's editor live from alounge.com. Very good morning, Ajay. I hope you haven't been caught in a Vistara flight in the last 24 hours because I know you're constantly traveling. But, my question to you, and also from a perspective of our viewers who might be wanting to know what the stock impact is, if any, is this advantage for the others in the fray, and Indigo and a Spice?
Hi, Tamanna. So luckily, I wasn't caught up in one of these flights which got delayed. But I think this is one of those issues that arises at all airlines from time to time. This has happened at Indigo. This has happened in the past at other carriers as well. So it's a passing storm. It will pass. And I think hopefully the pilots and the Vistara management are able to sit across the table and hash it out between themselves. But I don't think this is a significant up move for one of the other carriers. I mean, Indigo will always be ready to, absorb any pilots which are available in the market because it's the same A320 fleet for both of them. But so far, we haven't heard of any such moves being made in the market so far.
Yeah. Just a sense of whether the issue is endemic. Essentially, you have a huge growth in the aviation sector right now, more and more passengers, but a fight for the same pool of talent and pilots. You saw that a few months ago with another private carrier where they actually took their pilots to court who did the same thing. They went on mass leave and then they quit and they joined a rival. Do you think that that's an issue that is eventually going to hit everyone, or do you think an Indigo, for example, will be immune?
See, this issue is more about a discontent between the pilots and the management, and perhaps rightfully so, because anyone would feel bad when their pay is going to be, revised downwards, and that too substantially. I mean, during COVID it happened, and then pilots were discontent, but they were happy at least they had a job at that point of time. So now they are coming from a position of strength because like you said, the pilot pool is limited. The opportunities are many for them. And I think the only thing that holds them back is the fact that there is this DGCA rule of a long notice period. So perhaps these pilots want to go to the merged Air India, but time will tell if there will be a resolution to this. Other airlines, like I said, have seen this issue in the past. There will, in India, apart from Air India, there's no union for crew members. So these kind of things happen from time to time. And unfortunately, passengers get caught up in it, but eventually they solve for themselves.
Okay. Ajay, much appreciate, and we'll leave it at that. Thank you so much for taking the time out and giving us this perspective. I'm glad, like you said, not caught in any of these flight mishaps, so good for you. But thanks for joining in and giving us that perspective. In fact, our colleague, Maitri Sheth, is joining us from the Mumbai airport with a ground report of what's happening there with regards to this issue. Maitri.
Flight cancellation and delays by Vistara are not ending, and what we have got to know just now is around 12 to 15 flights have already been cancelled from Mumbai itself for today, destinations both domestic and international. This has happened after Vistara cancelled around 50 flights yesterday, and so far around over 200 flights have already been cancelled by the airlines. This has come after pilots called in sick in mass. After a few days after the airlines company has said that had asked the pilots to sign up for the revised salary norm and working norms. According to the working norms, pilots need to show up for 15 days in a month to be eligible for 40 hours of flight time, which according to them is quite lower than what they were getting before. This has created a lot of concerns, and passengers are also concerned. Not a lot of communication is actually possible at this point of time, and also it is advised to the passengers to kindly track the status of their flights before leaving for their destinations.
Okay, Maitri, thanks. That's an early morning thing out there for Maitri, but hopefully some of the passengers are okay. The question though, as the reason why viewers we've done all of this is to try and understand, of course, there is a consumer issue out here, but there's also an investment angle to this. And that is what we bring in with Nirav Ashar, Head of Equity Research at Latin Malharal. Nirav, good morning. Thanks for joining in. Indigo was facing challenges. There was a lot of talk around how Vistara Air India combined is gaining market share. Could it dampen the spirits, etc.? Do setbacks like this strengthen the case for an Indigo or maybe even a SpiceJet stock?
Yeah, good morning and thank you for having me on your show. Definitely, I think this is a very unfortunate incident as far as the passengers are concerned and the entire industry is concerned. At this point of time, I think this can be viewed as a pressure tactic by the pilots to basically extract their demands. And of course, the entire industry has been tarnished because of this unfortunate development. But we have to understand one thing, that such things do happen when we have seen an exponential booming of the aviation industry. We are seeing a huge amount of strain on the overall infrastructure, where we have airports which are constantly crowded. There is a huge amount of pressure on the ground staff. On the entire infrastructure, I think it looks completely strained. We have a shortage of parking space, etc. So a huge number of infrastructural issues which still need to be addressed, considering the fact that this industry is on an exponential growth curve. So I think it reflects very poorly on the entire industry. There is a very little chance of any poaching happening at this point of time as far as the pilots are concerned. So hopefully I think this issue should get resolved. And especially this is in light of the fact that we've seen such good numbers, the amount of passengers which are being handled by the airports. I think just going through the Delhi report where they've handled close to 6.5 crore passengers handled during the 11-month period. At the same time, Hyderabad has handled close to around 2.6 crore passengers. So it's a huge amount of traffic which is being handled. It's definitely going to create some amount of strain and tension. And I think hopefully this should get resolved.
Okay. Well, let's see. Does it materially move the needle for Indigos and the Spice Jets or no? But so that's the fundamental call. Now let's get in a techno funda perspective, if you will, for the first time on NDTV Profit. And after a long time, we're talking to him as well. Rajat Bose joins in with his thoughts on markets and other things. Rajat, great having you. Thank you so much for taking the time. I really appreciate this. Good morning to you. Neeraj here with me is Tamanna. And Rajat, just wanted to understand, how are you seeing this last few days of an up move into the market? As much as people were talking about there being higher valuations and a scare of all of that, the market seems to be climbing the wall of worry.
Well, Neeraj and Tamanna, very good morning to both of you, as well as thank you for having me. Thank you for letting me come on NDTV Profit. What I find about the market, let me just put things in perspective. I would be quite brief, but still certain things have to be mentioned. See, one thing, this is a one-way traffic for most of the time. Whenever you see a correction, that correction is very small, short-lived, and then sharp upswings are happening. This is primarily because there is a lot of money that is coming into the market. And because of that, although there are stocks that are trading at 90p, that are trading even in the triple-digit PE multiples, but yet those stocks are also being bought. There is a different thing that is happening. That is, we have seen that because of this money influx into the market, the asset prices are going up, and they will continue to go up so long as this money supply is there into the market. Unless there is a huge... See, what we learned from reading books like Kindleberger and all, that is that at a certain point of time, IPOs, QIPs and all that comes, and then there is a big correction. Such kind of big corrections are not happening for the simple reason that the money supply continues to be there. Now, under such circumstances, what you should do? There is a big problem that has been already tracked down by SEBI. That is, mid caps and small caps may face liquidity problem at the time when people try to liquidate their positions. But that is the reason why I would say that this upswing is going to continue, but you should be mostly concentrated now on quality stocks, large cap stocks, where you have got good liquidity. And say today I would be talking about a little bit of a correction that I'm expecting, but it is not that a reversal signal is there and all that. The reversal signal simply can't happen because there are, over the last 20 years, we have seen that those who have not participated in the stock market have lost out. So you have willy-nilly no choice but to come here and buy. So that is the thing that is happening. So long as the money supply continues, Neeraj, you would definitely appreciate that. You see, look at the Fed balance sheet. Maybe 20% of what it was during the COVID period, the bonds, $9 trillion worth of bonds. Now it is maybe 6.5 or something. But still, there is a lot of money. And Jerome Powell has already said that next there would be an interest rate cut or something.
Right.
Whether inflation comes back or not, that's a different issue altogether. But as of now, asset price inflation will continue. If you say that, what should one do? As I said, that now it's time that you should be mostly focused on quality stocks. Coming to today's...
Rajat, it's such a pleasure to hear you after a while. But what I think viewers would really be keen to know from you is, and let me get to the brass tacks, especially on the Nifty.
Can you speak a little louder?
Can you not hear me, Rajat? Is that better? Is that better?
Somewhat better. Yeah,
okay.
Yeah, now it is better.
Okay. So I think what viewers would really want to know from you, Rajat, and I was complimenting you saying that it's great to speak to you after so long, is what is the kind of levels you see on the Nifty and Bank Nifty? Nifty tested 22,500 yesterday briefly, couldn't hold on. Do you think there's enough steam there?
See, first I would talk about the Nifty primarily because this is actually encompassing the whole market. Nifty needs to take out 22,525 to 22,530. If you look at March and April, there had been a number of tops around that level. First, it was 22,516, then there had been 22,517, and then 22,524, 25,526, and yesterday it was almost 22,530. So this level needs to be taken. But there is something that bothers me today is that almost 8:1 advanced decline ratio. Whenever you see such kind of ratios, this ratio goes up to that level, there is some kind of a correction, and that correction can happen for another reason. There is likely to be a bullish crossover between the 9-day EMA, which is at 22,181, and the 20-day EMA, which is at 22,201 as at the end of yesterday's close. Now, this is a bullish thing, but I have seen that before it gives its effect, there is a minor correction that happens. In that kind of a correction, what you should be looking at, you should first look at whether it falls below 22,393. If it does fall below 22,393, then there is a possibility that it may come down to something like 22,300 or maybe 22,250 kind of level. But these two moving averages would not be breached. That's what I tend to think. And on the way up, after today, I'm expecting some kind of a correction. But after that, there would be a run. And the next target would be 22,735, which is a very critical Fibonacci level. It needs to be taken out. But some of you would be knowing that I have been telling in my, maybe Niraj would be knowing, that is, I've been giving a target of 24,100 to about 24,150 for this upswing. After that, there would be, whatever reason, I don't know, whatever reason, going forward, from there, we would see a significant correction, just as we saw in October 21 to about June 2020. June 22. So now, to talk about your, say the Bank Nifty.
Rajat, you'll have to allow us. We need to slip into a break right now.
Okay,
so we'll come back from a break.
Sorry.
No problem. We'll come back from a break, continue our conversation with you and Nirav Ashar. We also have to take Rajat Bose's stock ideas and also ask Nirav Ashar about some of the newsmakers. Stay tuned, viewers. We'll be right back.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing. Profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Welcome back. We're just about 30 odd seconds from pre-open rates and the first pre-open rates to hit. We are likely to see a bit of a soft start today in the markets. Maybe some profit booking after yesterday's roaring run of the day. Global factors have also not been very, very positive. But we're speaking today with Rajat Bose and Neera Vasher, and we'll continue this conversation. Rajat, just before we move ahead, very quickly, what are your top picks for the day?
Well, my top picks are Godrej Properties. I would say that you buy it, your stop loss should be below 22.69, and on the upside, the targets will be 24.59, 25.40, and 26.25. This is a short-term call, and the other one that I've chosen is the HDFC Bank. Put a stop loss below 14.47 and keep a target of 15.10 and 15.25. It's a short-term upswing because of a shorter pattern in HDFC Bank. But as I said, I only expect a short-term upswing in HDFC Bank.
Okay, just keep with those graphics because both these stocks, viewers, have a fundamental connotation which we'll ask Neera Vasher about. For HDFC Bank, from one of the brokerages, we've gotten this note which says that when the FI ownership data for HDFC will be out in a few days, if the FI ownership is down about 4% in March shareholding, there is a possibility of MSCI weights going up and triggering inflows of about 2 billion into the stock. Maybe one of the reasons why the stock was up 1.5% in trade yesterday. So that is the first one. And the other idea that Rajat Bose had, let's get Godrej Properties. Tamanna highlighted this in the trade setup, viewers, that the Morgan Stanley note on Godrej on real estate has a large uptick on Godrej Properties.
2,500.
2,500 target
They've gone
price.
overweight with a price target of 2,500. So MS is also fundamentally positive on Godrej Properties in a note which is otherwise not very positive on real estate, at least for the next 2 quarters. That's because of election cycle, etc. So that's interesting. Just let's pull up a few of those pre-open rates and see what's popping in those first few minutes. My eyes now on ABFRL. They're going to be demerging their Madura Fashions unit, and that's 10% up this morning. A lot of auto stocks are responding. TVS Motors, I can see, about 2.5% up right now on the rates that I'm watching. Yeah, there you are. Prestige, which again was doing very well. But apart from that, even your Nifty stocks and M&M and all of those counters, those auto counters, and iSure I saw was doing fairly well. Yeah, about 3% up. Tata Motors, around 1.5% up. So you might see some action, early days yet because it's just the first few minutes, but you might see some action in the first few seconds of trade, and this might be something you want to watch out for. Hero Motor, not that great. Hero Motor, though, overall, some of the best numbers in the two-wheeler segment as well, but that stock showing a bit of weakness on opening trade right now. Neerav, let me come to you on, where would your bet be right now? Would you look at the auto pack at all, or would you stay away after all the movement that we've seen in the last couple of trading sessions?
Yeah, I think there's been quite a sharp run-up as far as the auto sector is concerned. So I think we expect the auto sector to take a kind of a breather in the days to come. We've seen some very good movement in the passenger vehicle makers. We've seen good movement in Maruti, Eicher Motors. Two-wheeler makers have also done quite well. We've seen a good move in Bajaj Auto and Hero MotoCorp. So I think broadly we would like to stay away from autos for the time being.
Stay away from autos. What about metals? We should pull up what some of those metal counters are doing this morning. I want to see what Hindustan Copper is doing, Tata Steel, JSW Steel, all of them had seen a lot of excitement yesterday, largely on the China factor. Cooled off today, at least as of now. Nirav, any positive view on metals at this point?
Exactly, yes, because one, we have the China factor, and secondly, I think the commentary from the steel majors during the previous quarter, they said that there's nothing to complain as far as the domestic markets, the domestic demand is concerned. The domestic demand continues to be very, very robust. It is the overseas markets, that is the Europe and US, which have been doing slightly badly, and there is a muted demand over there. Those markets continue to be under pressure. But on account of that factor, we've seen some imports which were increasing in the domestic markets, the fear of dumping, etc. But now I think with the global scenario also improving, I think it's a win-win situation as far as the metal industry is concerned. Plus, of course, the China factor is also positive. And the third important factor for the entire industry is the consolidation which we have seen in the metal sector. I think all players have achieved a certain size and scale, and they are scaling up operations also. And there is a lot of pricing discipline which is there in the industry. Of course, now we've seen that iron ore prices also beginning to cool off. They're at a low. So I think it's a win-win situation as far as the metal industry is concerned, and that will reflect in the numbers, in the quarterly numbers, which are to be announced soon.
What are your top picks here, though, Nirav, in metals?
I think we like Tata Steel, we like JSW Steel, and Jindal Steel and Power.
Rajat, on the charts, anything that you'd pick on metals?
I think NMDC Steel and Hindustan Copper, they are very good bets for the short to medium term. In fact, metals, minerals, these kind of stocks will do well going forward. So keep an eye on them. There would be lots of opportunities.
Okay, before we get to Harsh though, this is big news for Tata Technologies. Tata Technologies and BMW have signed a contract. The JV with BMW aims to establish automotive hubs in Pune, Bengaluru, and I think Chennai. It's an agreement with BMW Holdings Netherlands. Now I presume this is for ER&D services, presumably for BMW worldwide. This is a big deal. There is a downgrade that is coming on Tata Technologies today. It is not a cheap stock, but this agreement is a big deal. It's a 50% agreement with Tata Tech and BMW. Remember, we've seen ER&D companies do this. Kpi Tech executed something like this with Renault and Google being in a JV. I'm not saying it's the same, but there is some semblance of this happening, wherein an auto company is joining hands with a software company in order to bring out the best of both worlds into a single business. And this is obviously being done by multiple auto companies worldwide in order to take on the competition that, as Tamanna was saying on the trade setup today, coming in from the tech companies / telecom companies, because they are turning auto.
Very soon, I think auto companies and OEMs are also going to become tech companies.
Or take help of.
Or either way. Also for Tata Tech, I think it's an important one, because the only problem, or the only, I would say, headwind for them was too much of concentration on their one largest client. And this sort of perhaps evens out those risk factors. And of course, it's a big deal. BMW is a big deal. And that means at some point, perhaps some of that technology might be available in India as well for larger parts. It would be great to have a conversation with them and understand where this goes.
Yes.
So hopefully we can get Tata Tech on. Yeah.
This is big. And just sorry. So one, just keep an eye out for ER&D stocks, and whether Kpi Tech actually reacts a bit negatively to this on all the pre-open rates. Too early, maybe 9:15 we'll get to know. But it is Tata Technologies which is in focus, and I think post 9:15 there'll be interest there. Harsh, sorry to keep you waiting, but just one more stock that I want to mark before I get to Harsh, and that is Aditya Birla Fashion. Something that Tamanna spoke about on Trade Setup again. The stock is up 10% in the pre-open session on the Madura Lifestyle demerger. So watch out for that. We'll talk to Nirav Asher about it. But first, let me go to my colleague Harsh, who is joining in with the top brokerage calls. Harsh, we'll have to make it quick, lack of time. But what are the key brokerage notes today?
Well, yes, first off, City on Adani Ports, 90-day positive catalyst is what they've opened up as a positive catalyst watch. They're expecting strong volumes. Now, mind you, it's a double beat with regard to expectations on the volumes front. Despite a revised volume guidance as well, that's also been beaten by Adani Ports. What they're expecting is core EBITDA to grow by 29%, consolidated EBITDA to grow by 27% in FY24. Q4 expected to be a strong quarter, a beat of sorts. They've revised their guidance upwards for FY24, 25, 26 on both EBITDA as well as EPS, and by quite a bit, 20%, 18%, 16% on EPS for FY24, 25 and 26. They're valuing Adani Ports now at 1758, a 28% upside to yesterday's close. They believe valuations are reasonable at this point. Quickly moving on, Jefferies on both aero and defense. Within that note, you have data patterns, in particular 40% upside given by Jefferies on this one. They are expecting revenues to rise 5 times all the way through FY30. Indigenization as well as export to benefit the company. They are expecting ROE and reducing working capital intensity to be the drivers. Risks, of course, being some management bandwidth as well as obsolescence of tech. But outside of that, very positive on the overall aero and defense space as well. Jefferies.
Okay, well, and that's a 7% uptick on data pattern, so pretty strong note there. And that stock is up and about, but Adani Ports too, after 2.5% uptick, is up another 1%. So watch out for both of these names. Just so many stocks to talk about. Okay, we'll have to play a bit of a rapid fire with Rajat and Nirav for the next few minutes. And then we'll get into details post-market open. But we just have 4 minutes to market open. So playing a bit of a rapid fire here. Rajat, to you first. Adani Ports, 1.5% up today, up 2% yesterday. Is there more in store?
Yeah, Adani Ports is going to go up, and it is going to cross 1400, and thereafter it can even move up further. It is on an uptrend in the short term. So if you are buying into it, then put a stop loss below 1350, and it is going to do well.
Got it. Okay, Rajat, thanks for that. Nirav, again, a quick question to you. You would have looked at the announcement of Tata Technologies. Is this a big deal or is it too expensive a stock?
I think sentimentally it's going to be a positive as far as the stock is concerned, but we have to see the broad contours of the deal. But I think definitely it's a turning point as far as the stock is concerned.
Turning point as far as the stock is concerned. This is a big statement from Nirav Asher on Tata Technologies. Now, data patterns is the third one. Or maybe Aditya Birla Fashion. Let's try and talk about that because that's up 10%. Yeah. Maybe you don't get a chance to buy. So maybe I can ask Rajat about it, but I can ask Nirav about it. This Madura Lifestyle demerger, Nirav Asher. Would you be tempted to buy into Aditya Birla Fashion and retail?
No, not at the moment, because I think this stock has really been a disappointment, at least as far as the last 1 year is concerned. And I'd like to study what kind of deal they want to work out, because they want to separate all the divisions, which will have a different capital structure, capital requirements, etc. So I think would require more detail on the plans going forward.
Yeah, I'm liking this rapid fire round, Neeraj. This is good. I should do this every day. I have a couple, and this one is for Rajat. IREDA. Good business update. Stock is up in pre-open session. Do you like IREDA at all? Do you track it?
IREDA.
Not too much data because it's a relatively recent listing, so not too much on the charts, but otherwise.
But only when IREDA moves above, say, 150, then you can expect it to scale up to something like 160. Unless 160 is taken out, there would not be any sustained upswing.
You know, another one I want to look at this morning and look at what it's sort of settled at the pre-open session is PNB Housing. PNB Housing got a huge booster in terms of its credit ratings. It had a positive note, a little tepid in the pre-open session. Nirav, do you like PNB Housing?
Definitely, yes, because there's been a marked improvement in the asset quality. I think the gross NPAs have gone down from around 8% to close to around 2%. So I think this is one factor, and the business per se also we expect improvement because housing itself has been doing quite well. Realty has been doing quite well. So I think definitely this will reflect on the housing finance companies also. So they should also do well. So PNB in particular should do well.
Okay, 1 minute left. Rajat, just one quick word on the other one. Indostar Capital, have you had a chance to look at it at all? Was up 5% yesterday, very likely will be up today.
I couldn't hear you.
Indostar Capital, Indostar Finance. Have you looked at that stock at all, Rajat?
No, I don't track it.
Okay, fair call.
I can't find it right now.
No problem. Understandable, but 5% up today as well. Remember, yesterday was up 5% on very low volumes and a lot of buyers. So, Rajat, 20 seconds. If I had to ask you for one top stock today, which one would that be?
One top stock today would be, I would say that you go for Adani Ports. Adani Ports is going to go up, and because it is the port in our country now, it has beaten Navaseva, and its uptrend has got so much of strength. Last 7 sessions, all green candles, so it is going to go up, and one should continue to remain in it, and one can buy a fresh as well.
Rajat, coming to you post-market open, but here's how we are starting off this morning. In the green, for sure, rather in the green for specific stocks, but I must say you could almost argue that this is in the green because the implied open was showing a lot lower. I think there's some positive news flow for the markets at large. Bring up the mid caps and the small caps maybe, because those indices might be interesting. In the green for the mid caps, small cap was up 2.5% yesterday, marginally in the green. Okay, so not in the green but kind of flattish, but that's not a bad start. Let's get the heat map up and see what specific stocks are doing. Even Stevens, which is the first thing. Now let's talk about the gainers. Adani Port, Rajat Bose's top recommendation, is the top gainer as well today. 1.77% higher. For viewers are wondering why. Amongst other things, Citi has a brokerage, Citi has a note out there. The target price is 27% higher than the closing price yesterday. Bajaj Auto on those sales numbers, 1.3%. There is strength in NTPC, ONGC, BPCL, Power Grid again. PSUs and economy-linked stocks, much like yesterday, are doing well. The quantum of red is slightly increasing as opposed to the quantum of green maybe, but still, there are some decent movers. L&T margining in the green after the kind of move that it had yesterday. Again, a stock on which Citi has put out a positive note. What is not doing well? Apollo Hospitals, 1% lower. There is a weakness in Wipro, in Fee. So IT is sluggish, if you will. Reliance is sluggish maybe. ICICI Bank is slightly sluggish. So while yesterday was a big day for private banks, in today's session, even HDFC Bank and ICICI Bank are just kind of a bit sedate. But Tamanna, you have to say for all the sedate news at the global end, we are doing fairly okay. And Adani Ports and Bajaj Auto are not complaining.
Early minutes in trade, but definitely better than what was expected. I think Bajaj Auto sales numbers have surprised on the upside from the first cut that we can see. Definitely better than expected. That's the input that we're getting. So Bajaj Auto doing fine. I just quickly want to pull up how your broader markets are doing, the indices, before we get to the specific stocks, and just get a sense of where the broader markets are compared to the Nifty and the Sensex. Definitely more positive, and that's a trend that continues from yesterday, about nearly 0.5% up on the small cap 250, both in the green. The mid cap index also in the green. So you're seeing a bit more sort of a positive sentiment there. Let's look at ABFRL. That is the stock of the morning. They're demerging Madura and Madura Fashions, which has 4 big brands. So we'll look at what ABFRL is doing this morning. 10% up, like pre-open. So you know that circuit is continuing for the stock. IREDA is the other one that was on our radar. It was one of the stocks that we talked about on the trade setup as well. Up about 5% now is the business updates which are being seen as positive for IREDA. Adani Ports is something that Neeraj spoke about. A couple of things over here. The business updates actually was the first trigger. Then you've had a City note, which has also been positive. Tata Tech and Uno Minda, stocks which have been in news. Tata Tech came in just a few minutes before opening trade with that BMW deal that they have signed. So that's a big story. They've talked about it today. Uno Minda is something that we pointed out, and you're seeing a bit of a negative trend. So two of their big customers, including Honda, have had to recall some of their products because of a specific part that Uno Minda has made. They have insurance to cover it, but there is a bit of a sentimental hit that you're seeing more this morning. So those are some of the, I think, first cut of movers. But would you say, Neeraj, that a bit of a careful play overall?
Most, and that's actually summing it up perfectly. But just want to mark a few stocks aside of the ones that Tamanna has highlighted, and let's see if they're moving around. So Indus Tower had a big move yesterday, just highlighting a few which did really well in trade yesterday. It's a bit lower in trade today, as is PNB Housing, which is up 20% yesterday, and I think it's not started off in the best possible fashion, a bit quiet, a couple of percentage points lower. Indostar is up 5%, if I'm not wrong, in the pre-open session at least it was. And let's see if it still is. Yes, up 5%. Madhusudan Kela increasing the stake there. JTL Industries, it reported an annual sales uptick of 42.25% after a 9% uptick yesterday, up another 3% today. CSB Bank, the Q4 update looks strong. I wonder if the stock is reacting duly, up about 3%, so not bad there. And some other brokerage names on which there might be reactions. So Jefferies, the note on data patterns with a target price of 3545, that stock is up 5%. La Opala, BNK has a buy with a target price of 462. Wonder if La Opala is reacting. No, not really. Saregama, again, BNK has a buy with a target price of 441. Wonder if that is reacting. Hardly. And Dollar Industries, Elara Capital has come out with a note saying that it's doing something pretty interesting, up about 3%. Of course, last stock, Aditya Birla Fashion is not the only one. Aditya Birla Capital, Macquarie has an outperform rating, a target price of 230. That stock is up about 3% as well. So not bad going for a clutch of mid caps, though I must say on the Sensex we are now about 0.2% lower. So the first 5 minutes we've kind of drifted with a marginal downward bias. And Rajat was talking about this. Rajat, a quick reference, you were talking about the possibility of a corrective move today. Where is it that you would go out and take a contra buy call today? At what levels?
The contra buy call could be your Tata Technologies, because Tata Technologies is the only stock that was coming down among the ER&D companies. And one thing I would like you to investigate, that BMW earlier, or maybe they are still having joint venture or some, not joint venture, kind of sourcing out things from LTTS. And this is the second company they are now tying up with. So is LTTS losing out on this, or it is only a separate deal that needs to be seen? So LTTS actually is showing a bit of a downtick.
Good point there, Rajat. And definitely is Tata Technologies gain at the cost of LTTS is something, you're right, we should definitely investigate. But Tata Investments is another one that's had a complete sort of turnaround after several days of drubbing. You've seen second trading session in a row with that stock about 5% up, with no real trigger once again, but Tata Investments doing fairly well. Rajat, anything that you would prefer in the auto space at all as per the charts? What do you make of a Maruti?
Maruti can at best go up to say another 500 points. And see, so far as I understand that this auto data that has come yesterday is not very positive. It might affect not just because the rural demand is not so much there. So it could be that tractors as well as stocks like Hindustan Lever might be affected. So one needs to be a bit circumspect about the auto stocks now. Maruti was trying to go up for the last 3 sessions, but it has not been able to manage to do so. So I would be a bit circumspect.
I was just talking about Symphony in the opening session, and that stock is doing well, up about 6%. The reason, though, is a bit scary. It's on the back of extreme heat waves predicted. And you're in for a hot summer. The IMD predictions are looking bad. We shouldn't even say anything, Neeraj. At least we can sit in an AC studio. Imagine people who can't. But yeah, that's positive for Symphony. Nirav Asher, is this a stock that you track, Symphony?
Yeah, it's an expensive stock, but I think water coolers, basically the space which they are present in, these coolers, I think they have a very strong demand in tier 2, tier 3 centers, especially in the rural areas, because of the affordability element also. So I think this company will continue to do well, not only on account of the domestic demand, but even the export demand is quite strong. So I think definitely this is a stock to look out for. As far as the extreme heat conditions are concerned, it should augur extremely well for this company.
Nirav, if Symphony is expensive, would you venture into a Blue Star or a Voltas, because they will benefit out of this as well?
Definitely, I'd like to look at Blue Star, because this stock is a stock where we got our coverage also. And apart from the domestic air conditioning, they have a very strong presence in commercial air conditioning. So a lot of metro projects, a lot of hospitals, a lot of malls, etc., where they've got their presence. And the prospects are very, very strong as far as Blue Star is concerned. They've recently done an expansion worth 1,000 crores. So I think the best is yet to come as far as Blue Star is concerned.
Okay, best yet to come as far as Blue Star is concerned. Well, some interesting movers that we're seeing in the session today, and Tamanna highlighted Symphony. She managed to spot it. Pretty strong showing by that one. I was trying to look at some other A group stocks which may have done well. TCNS Brands is up 12%, of course, related to this only, the ABFRL piece. There is Bajaj Consumer, which is up 6%, if I'm not wrong. And Kpi Green, a management that we are going to talk to in about 15-20 minutes from now, is up about 5% as well. So do watch out for that too. Rajat Bose, the Symphony, Voltas is up 3% too, by the way, today. So Rajat Bose, Symphony, Voltas, Blue Star, etc. These cooling solution companies, do you like the charts here?
I would prefer Voltas to Symphony, because Voltas' chart is much better compared to Symphony. So my choice would be Voltas.
Your choice would be Voltas. Okay, 3.5% higher for Voltas. So do keep an eye out for that as well. Rajat, a lot of conversation around cement companies trying to make a bit of a comeback. Has anything stood out for you, both on the charts or on data that you might have processed? Rajat?
Yeah, Ambuja and ACC, these two you can look at. And after that, maybe you will have a look at, say, Sri Cement. I don't track Sri Cement so much because its share price is too high for common people.
Okay, that's interesting too. Sri Cement at 26,000. Yeah, not too many people would go out and buy it. It's strange, but people tend to do this, right?
No, but Rajat, why is it too expensive for you? Is what I want to know. Maybe for common people, why are you finding it so expensive?
It may not be expensive for me, but Sri Cement was my biggest faux pas in my investing career. In the year 2000, or I think late 1999, I bought 200 Sri Cement for only 10,400 rupees, and I sold it after it became a 5-bagger, and I still rue the fact.
I think a lot of people would be doing that for a Sri Cement, for a Bajaj Finance, for a Motherson Sumi, and countless other stocks. So yeah, Rajat, join the gang. The gang is called Everybody. I'm sure of it. Okay, the other one which is doing well, by the way, is JTL Industries, up 6% on that note. And Uflex, I think they've started a plant, if I'm not wrong, and that stock is up about 6% as well. So pretty strong showing for some of those. Okay. Well, gentlemen, I think we'll need to take a break here. So we'll need to thank both Nirav Asher and Rajat Bose. Nirav, great having you as always. Thanks for taking the time out. And Rajat, fabulous talking to you for the first time on NDTV Profit. Look forward to talking to you more often.
Same here.
All right, that's the view from our two experts. And on the note that the broader markets, just before we hit that break, can we pull up the advanced decline ratio very quickly and just see if the breadth is looking okay. Yesterday was very strong, but the advanced decline ratio, and look at that market breadth, it's not buckling down. 3:1 in favor of the advances on a day when the Nifty is a bit quiet. So the broader markets are telling you a story, and that's what we will do. On the other side of the break, talk to two managements, both from the broader end of the spectrum. One will apprise us of what's happening with metals by and large, and the other one is talking about what's happening within their ecosystem and the kind of order wins that they are doing. Stay tuned, we'll be right back.
Hi, I'm Tanuj Bhojwani and I run MedPlus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some...
Back with India Market Open right here on NDTV Profit. Now, metals are a case in point to discuss. The China data that came out, the Chinese PMI data that came out over the weekend, on Sunday in particular, was very constructive. The private Caixin survey as well as the Chinese official numbers clocked in metrics which were higher than the previous few months. And if indeed the Chinese recovery or the perceived recovery continues, it could be pretty constructive for metal prices, arguably metal demand. Now, how constructive could this be, if at all? And what would the implications be for Indian manufacturers? Let's get in the perfect voice to put that into perspective. Rajesh Gupta, MD of Lloyd's Metal and Energy, joins us right now on the show. Mr. Gupta, great having you. Good morning. Thanks so much for joining in, Neeraj here.
Good morning, Neeraj. How are you?
Very, very well. Thank you so much. And I hope the same with you.
Yeah.
Just trying to understand, what do you make of the recent news flow around Chinese economy, and how would you read into that and the implications on the Indian metal sector?
So Chinese data coming out, I always believe is not fully acceptable, at least to me, in many ways. And you never know what to do with it exactly because the data swings very erratically based on the holidays and things like that. For example, the next 6 days are going to be holidays in China. Incidentally, I was in China for last 5-6 days, and I think I can give a little bit different approach rather than the data, which I'm sure many of your analysts and viewers already have. I was in a region or in various regions of China with various visiting various steel plants. And number one, I think the people, there does not seem any unemployment, what we keep hearing about. There does not seem any issues in terms of traffic, in terms of shopping areas, in terms of restaurants or hotels. They're all much busier than what they were, say, 6 months back when I last visited them. I think these anecdotal data help, according to me, a lot in understanding the market. In terms of the PMI data, etc., coming in, definitely the manufacturing cycle is a little bit down than, say, a year back, a little bit better than just before the winter. And again, I think that is also very seasonal as far as China is concerned, because from November to February, they are very, very slow in terms of their manufacturing process because of the weather, because of the holidays, etc. So I believe that the Chinese growth story is still there. When I visited the smaller areas, I still saw a lot of development that would take place, areas which are still quite backward, and I could see highways being built, railway tracks being built all over.
Sure.
So I can see that a lot of growth is still going to happen there.
Got it.
Data-wise, I think you are the expert.
Well, as you said, not too many people are experts on Chinese data, but let me just try and hypothesize then, Mr. Gupta. If indeed the PMI numbers are an indication of what could happen, let's assume that over the next 3 months, the numbers look largely northwards and largely better than what they have been in the last 3 to 6 months. What would the implications be for demand and pricing for Indian manufacturers like yourselves?
So, number one is that the exports spurt that has happened from China in the recent few months will reduce dramatically.
Okay.
Their destocking would have taken place by then anyways, because they have all reduced production. So that spurt of export of steel would reduce, number one. Number two, the spurt is around 2 times last year versus the year before that, is around 50 million to 100 million tons. Number two is when their manufacturing goes up again, then it's also the manufacturing of the downstream products, whether it is cars, whether it is capital goods, and of course infrastructure, what I mentioned earlier. So if their steel making goes up, then the iron ore prices go up. Right now, the Platts index is around $100. It goes, 100 to 110 is swinging in the last 2 months in that region. And I think it'll remain there for the next 1 month or so. But if the PMI index is really true, then the manufacturing goes up and the stocking of iron ore happens. So that will go up, and that will again lead to a little increase in the steel prices, I believe.
A very good morning, Mr. Gupta. This is Tamanna Inamdar here, and great to speak with you. I found your insights on your own impression of China very interesting, because, as you say, that data is circumspect. I think another aspect of this, which people are not quite comprehending fully, is not just where Chinese demand is going, but the kind of supply constraints that they're forcing. Maybe not real supply constraints, but then, for example, copper manufacturers trying to cut their output, etc. Is that a concern that you see on the horizon in terms of what that is going to do to your margins and how it's going to impact you?
No, I don't track copper particularly. In steel, they're not constraining. If they cannot sell, they don't produce. They have a lot of trade actions against them all around the world, so they don't want to export beyond a certain point. So that's why there is constrained manufacturing. In copper, I think it's a demand and supply game. So when there is no demand, people reduce supplies. I mean, there's nothing wrong in that. So that's part of the. I don't think it's constrained at that level by anybody.
Right. And what would your sort of take be on the Chinese recovery story that the world is sort of betting on? Are you seeing the green shoots for that?
So the Chinese recovery story is it really gone bad to that extent? When you consider that, year on year, so it's definitely a slower growth than before, and that will continue. Yeah, and I think the growth will be slower over the next few years also. But slower growth in such a big market also big economy also has a lot of impact.
Since we have you here, Mr. Gupta, I just want to get a sense of how you are looking at ending this financial year with all the turbulence we've seen in metal prices and what your outlook is.
So this financial year has been good for us. The turbulence in metal pricing right now, our productions are maximum in iron ore, and going forward we'll be going into steel. But in iron ore, the markets have been pretty good during the year, and we see the same thing for the rest of the year. Most of our manufacturing, most of our markets are in the Indian market, which is a little delinked from the Chinese market in terms of many aspects.
And the demand is looking robust in the Indian market. Do you expect demand to pick up once again post the election season sort of slack is done?
So the last 2 years, demand in steel has been around 13%, if I'm not mistaken, every year. So that's around 32% over 2 years. I don't see 13% coming back this year, but 13% is something that I have not seen in my 40 years of career. So even 8-9% of steel growth is a very good growth. But if the economists are talking about the economic growth remaining at 8%, then I think next year again it will go back to double-digit growth in steel.
Mr. Gupta, I'm wondering, the port data seems to be suggesting that shipments, both cargo as well as containers, are not looking that bad. If indeed infrastructure spends pick up again post the election verdict and real estate cycle being where it is, why are you a little bit skeptical about steel demand?
No, I'm not skeptical. 13% is relative. 13% is something which is, it's in a dream, right? 13% in any commodity growing year on year for 2 years in a row is a dream. That dream cannot continue, I think. And double digits after 25, 26 is, I don't see how I'm skeptical. I'm maybe being more realistic. That's my nature. You know me by now, Neeraj. But I'm not skeptical at all. I'm in the steel business. I cannot be. Steel people have to be bullish. That's the nature, right?
Okay, fair call. One last question from mine at least. Based on your assessment of whatever the Chinese data might portray and versus the domestic demand, which you say is slightly different from what happens to China any which ways, how do you see pricing for the rest of the year?
So, if you look at the current year pricing, the markets at a certain level, I think that will be steady for the next 3 months, maybe four months, and then post just around monsoon or just before that they will start. Just around the monsoon time they'll start going up. That's my take on the pricing in the steel market. Because the destocking at the stockists at the user place is happening in a very rapid way right now.
All right. Just one last point, Mr. Gupta, on your fundraise plans. You've announced, I think, about 5,000 crores of fundraise versus QIP for CapEx. Is that on track? You're not going to be resorting to debt. Do you have any clarity on how you aim to deploy those funds or anything that you can update there?
So right now we have obtained the board approval and will be going in for the EGM approval for the fundraise. It will be through QIP and maybe partially through promoters' input as well. So that the dilution of the equity is not as dramatic as we want it to be. This fundraise is for our long-term capex projects, which are in the next 6-7 years, like I told Neeraj earlier, around 30,000 crore rupees. And it's more from a cautionary view that we are trying for this, that we are going for this fundraise. And we are positive that this will happen. And number one, number two, no debt. That is a very, very firm mantra in our company, and we will maintain that.
That's a really, interesting outlook and a positive one, I would say. No debt, says Lloyds Metal. Thank you so much, Rajat, for speaking with us today. We're going to take a very short break over here, but we're right back talking about another very hot space, I would say. The management of Kpi Green joins us to talk about their outlook on the solar energy play and much more. Stay tuned.
AI is revolutionizing how we work, play and connect. It's not just about the tech, it's about the impact on humanity. Discover the secrets behind the world's most powerful technology, from enhancing our lives to shaping the future. Don't miss All About AI, your ultimate guide to AI brilliance.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Welcome back. You're watching India Market Open. Now, I would say current theme and one which will be recurring for a while is going to be India's focus on hybrid energy, and that includes with a big focus on solar energy as well. The company we're talking about and talking to today is a leader and Surat based. The stock has been on a roll, definitely. Kpi Green. If you pull up the chart of how it's looking in the last 1 year as well, there's definitely been nearly a 300% increase in the last 12 months. So now what's sticking? Quite a few order wins recently has kept the company in news, but what is the outlook on the actual execution of these order wins and the transition that India is attempting? To speak more on that, I'm joined now by Farooq G. Patel. He's a CMD of the KP Group. Mr. Patel, a very good morning, and thank you for speaking with us here at NDTV Profit. Let's begin by talking about some of your latest approvals and orders which have been in the news. 10 megawatts of solar power projects under the IPP segment. You have, some under the CPP segment as well. Can you give us a bit more texture and color on these? How crucial are these projects and what is the execution timeline?
Thank you, Tamanna. And very good morning to you and your listener also.
Thank you.
That we have got the recently RT 2.6 megawatt CPP order in our kitty. Altogether, in this year, we can say in Kpi Green, we have already completed 445 megawatt altogether with this. And we have the order in hand today is 1178. Say 1178 megawatt is still to be execution in pipeline. 10 megawatt IPP. With this IPP, we have completed IPP about say 140, 160 something altogether. So we have the very good bandwidth with the order We have the very good new order also in our hand. In IPP also we have the order of 240 megawatt DC for the GVNL, 50 megawatt again for the GVNL, what we are trying to energize in this year. So company will in this year, means in 2025 by March, we are trying to do the 500 megawatt IPP altogether. This is our internal goal are setting. And as you know, the hybrid policy is very lucrative from the government. And the of course for that because of that we are getting much more order, and we have a very good bandwidth in the in the we have the very good land, and we have very good evacuation also. So the order pipeline is very strong. Execution, of course, the KP team is itself is a very
Mr.
strong
Patel?
team.
Is it largely government, the order book, or your clientele is largely government? And is it state
In
government?
CPP, of course, in IPP, you can say the government order is very big.
What proportion? What proportion?
You 90% is a government order in IPP. We have got the one order from the Maharashtra government of 100 megawatt, 100 and 200 megawatt from the GVNL, again 50 megawatt in the hybrid. So altogether, government order in IPP in AC side 350 megawatt.
Okay, and
in AC side.
This is between the Maharashtra and Gujarat governments largely.
Maharashtra and Gujarat government, and already we have energized 100 and almost 60 altogether. We have already energized in IPP in KPI. So you can say we have the very good bandwidth, and when we are talking of the 500 megawatt 2025, the government order are already in hand. In CPP, of course, the CPP is the forte of the private players, and we are doing in CPP as a EPC and getting the annuity income for the 25 years on a lease and the O&M also. So over there we are getting, we have got the very good order over there also. Altogether in KPI, when we talk, it's about as I told you, 1179 megawatt order in our hand today, after execution or after say energize the past order.
Okay, and what is your outlook for how much that order book will grow in terms of the size?
See, as a group, I can say that by 2025, as I told you before, 10 gigawatt we are going to plan out. But today we have the order in group is 2200 almost, you can say, is in our hand. We have already energized 1274 as a group in KP Energy and KPI both. So 1274 is already energized, and 2192 is in our hand. So altogether 3 gigawatt order with the execution we are having today. For by the end of 2030, 10 gigawatt is our goal, which we are going to achieve in a very near future.
Mr. Patel, good morning. Neeraj here. What about execution, and how is that shaping up? Are there some bottlenecks there? And if not, and if execution is going as per plan, what are the numbers looking like for FY25 and 26?
Good morning, Neeraj ji. We have the very good capacity of the execution. As you know, today the problem is in renewable energy is the execution part. But as you know, we are in this field from last 15 years, and we have a very good capacity, and the team are very strong. 300 plus engineers and the retired regulatory people and retired so scientists also are there, and the people who were in this field from the big organization, they are already joined and they are joining us. So for us, we are trying to match the bandwidth of the say business with the, of course, with the education team, and without education we cannot reach to the goal. So we are taking care of that point also, Neeraj, and we have the very good today also the strong team. What we have today is in our hand. We will 100% achieve of this 2200, but we are not going to stop over here. We are going to reach by 2030 10
Most
gigawatt
certainly.
goal with the government goal.
Most certainly. So, Mr. Patel, if that is taken into account, how does it look like in terms of numbers? How much do you execute in FY25? How much do you hope to execute in FY26? And what would that translate into, let's say, on EBITDA for the next 2 years?
See, for the EBITDA, you can strong today. The EBITDA of the group, and if I say the KPI and the KP Energy, as you know, KP Energy last year was 442 was the total top line, and the bottom line was the 43 and the Kpi Green was 647 last year I'm talking about.
Yes.
And the December was the 737 last year 23. This year of course we have closed this year on 31st March, but we cannot declare that figure, but you can understand that by 647 in a whole year and 9 months we have achieved the 737. So of course we are trying to go by the 4 figures in the KPI Green also, and the PAT also will be very smart in this year. And the EBITDA is say EBITDA is last year was 211. And this year we are trying much better than the last year in the KPI at the same time.
Mr. Patel,
yes,
sorry to cut you, just there is paucity of time, but here's my question. Your trailing 12-month numbers show that you've done very well in FY24. I'm just trying to see what are the targets that you've already declared. I don't want you to violate your silent period, but whatever you've already declared in presentations, what is the expectation for FY25 and 26?
Expectation of the EBITDA is much more than the last year, number one. Number two, it will be trail with the year to year, as you see, Niroji, and very clear that we are growing with the 60% EBITDA, and we will be grow like that, more than that you will expect.
Okay. Well, we wish you all the best for that. Congratulations on all the order wins as well. And thank you for joining us and explaining the business prospects currently, Mr. Patel.
Thank you very muji, Neeraj ji and Tamanna ji. Thank you very much. So nice of you. Thank you.
Not at all. And well, just want to mention that as we wrap up this leg of India Market Open, the markets are absolutely flat. The Sensex is 0.07% in the red. So hardly a move there, but Tamanna, very strong market breadth, and that's the hallmark of today's trade as well.
Look at the broader markets though, Neeraj. Like if you pick up the Nifty Mid-Cap 100, you have 73 advances to 27 declines. So that is where the action is. Just a few noteworthy sort of names before we get into that break. ABFRL looking like the stock of the morning, up 13% now. And a positive flow there. Adani Power is another one that we highlighted as well, up about 5%. I would say Prestige is the third I would choose. Of course, property or real estate companies are not doing too badly. Godrej Power also decent this morning, as is Voltas and Symphony. That still for me is the big highlight this morning.
Beautiful music, a great symphony.
No. Such heat that we are going to be facing, climate change, and of course we all have to suffer it. You may as well make something of it if you have investments in these two stocks. With that, it's a wrap on India Market Open, but stay tuned. We will be joined by Piper Serica's Abhay Agarwal next on Talking Point.
AI is revolutionizing how we work, play, and connect. It's not just about the tech, it's about the impact on humanity. Discover the secrets behind the world's most powerful technology, from enhancing our lives to shaping the future. Don't miss All About AI, your ultimate guide to AI brilliance.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right. Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. The case for a chat today, well, you can't not talk about metals, especially after the Chinese data that has come out. So, and the fact that the global growth is looking okay. So our rising port volumes, I'm using that as an analogy, a hint of improving or healthy global macros. That's the first point on our radar today. Metals, will they rise higher on stronger Chinese growth numbers? And the Chinese PMI number, is that a lead indicator for that? I think that's the second question that we'll ask our guest. In addition, to talk about how would consumption volumes pivot? Will they move higher, staples, or will it continue to be confined to premium consumption? Our guest today is Abhay Agarwal, founder of Piper Serica. Abhay, great having you. Thanks for taking the time out. I hope all is well.
Yeah, thank you so much, Neeraj. As always, a pleasure to be, on the show talking to you.
I know the pleasure is entirely ours, Abhay. I assure you that. Let's start off, Abhay, with maybe wondering if the world has gotten it wrong in the first quarter about what will happen to growth for the rest of the year. US data not looking too bad. Europe, I was reading a Gavical research note which spoke about how the Europe data is not looking all that bad in the last couple of releases. China PMI data that came out was also looking better than otherwise, and we know that India is looking okay. So some of the large pockets, are they turning at the margin, and what would that mean for risk assets like equities?
I think we have been tracking China, especially Neeraj, for last 6 months for a couple of reasons. One is that whenever China local consumption gets into distress, we have seen that the Chinese large manufacturers try to get into cash by dumping at cost or below cost their products, and that creates a deflationary cycle unintended globally. And I think Indian companies, a lot of them in chemical space, agrochemical, metals, have suffered because of that over the last 6 months. But whatever research we did, we also started seeing over the last quarter, starting January onwards, that dumping has ceased and stop being a problem. And the pricing power was coming back in a lot of categories, especially bulk drugs, metals, chemicals, agrochemicals. So I think the data coming out now of China of PMI increase and to be followed by better domestic consumption, cleaning up of the real estate exuberance, if I may say that. I think that is all my guess. I'm happy to make a bet that is behind us now. So all the pain that the Chinese economy, Chinese domestic consumption, Chinese exporters had to go through are largely behind them, and now we will see Chinese economy recover. The good thing about the Chinese economy is that it's not so dependent on foreign flows, unlike India, where for our capex and capital formation is still dependent on international global flows. China is not. It has a lot of domestic capital. So I think China will grow this year and grow at a level that will surprise the analysts, probably driven by domestic consumption. And this will lead, as you said, your bigger question, will the global growth outlook will be better than estimated? My bet is yes, it would, because I don't see any reasons of, the consumption falling off, interest rates are going to trend down. And when that happens, consumption goes up, the macros continue to improve, especially for India. So I don't want to be sanguine or careless, but I would bet that the global growth, global macros will improve from here on.
Okay, so two investing implications, and I'm coming to that before I come to the macro again, Abhay. The first one, let's talk about the Chinese data since you're tracking it so closely. Usually, China growth is associated with a cyclical uptick in metals. Do you see that happening?
Yeah, I think that is a natural outcome, Neeraj, because there is a limited supply of metals that comes into the global markets, and the Chinese exporters have been the largest ones there, and they have had no pricing power because they have to keep the factories running, and that puts pressure across the board. In a down cycle we saw last year, where global consumption of metals didn't fall off the cliff, but at the same time it wasn't growing in a manner that people were used to. And on the same side, you have supply coming in continuously. I think that is going to even out. And the natural implication will be that the commodity prices, especially metals, will firm up from here on. However, I don't think it will be a very sharp uptake. It could happen in some commodities because we don't really track the exact monthly demand and supply data. But barring some, I think there will be gradual recovery. So if anybody is going to make a bet about sharp recovery in metal prices, I think they would also be wrong. But at the same time, I think the recovery over the next 12 months will be on the higher side. I would expect that generally metals as a commodity basket will not be surprised to see a double-digit growth in pricing from here on over the next 12 months.
Mm-hmm. We were talking to Lloyd's Metal earlier, just to try and get a sense of how is business looking like. And of course, he rightly said that the Indian business looks materially different from what China data may or may not show independently. And was sanguine about volume growth, though mentioned that 13-14% for the last 2 years was a dream. Dreams don't get repeated, so maybe we see 8-9% volume growth. With that and the pricing numbers or estimates that you may have, Abhay, can we see a constructive rally for Indian metal companies in the current calendar, or are there better pockets and more predictable pockets to look at?
So I think these are exclusive things, So I think metal space as by itself, you look at most of the Indian metal manufacturers have not shown any performance over the last 2-3 years. So I think this year may be a year that driven by the volume growth and plus pricing growth, the margins may expand and the balance sheets may get better, improve. The only problem I see in this sector, Neeraj, is that because it's a highly consolidated sector now, just like cement. So anytime there is a volume and price pickup, the companies start working on the next capex cycle to grow, and they have this, all of them, rightly so probably, passion for continuously increasing capacity. And that is why this industry goes through its ebbs and flows, where supply comes up right at the time when the volumes are tapering off or pricing pressure is there. So that is the nature of this industry. So with that caveat, if somebody wants to play a recovery cycle in this space for next 12 months, you have to look out for those purple patches when exactly I think where we are getting into, which is volume and price uptake to play that. But I don't think that these are for long-term investors because these are very cyclical industries at the same time. Neeraj.
Got it. Abhay, the other aspect about this growth numbers, right? And if global growth picks up, what it does to inter-country exchange of commodities and goods, etc. I mean, I was reading a note from Citigroup on Adani Ports this morning, talking about how yesterday the company spoke about comfortably beating the revised guidance. And I'm trying to think if what a port company in India has done is indicative of what the kind of demand is, or is it an isolated case? So my question therefore to you is the strong data release about cargo handled by Adani Ports a company specific thing, or do you think that companies engaged in world trade could actually have a decent run for the next 6 to 9 months, considering that world growth seems to be doing a bit better than what people were factoring in?
I think it is a mix of both, Neeraj, because I think Adani is an exceptional manager of ports business. They really get it. And that can be also seen in the string of pearls acquisition strategy that they have come up with, where they have been acquiring some of the strategic ports and then turning them around, increasing cargo. So I think port management is a very, very complex business. It's a lot of heavy engineering, constant capex, constant improvement in operations, trying to get bigger and bigger ships closer to the port. So I think it requires a very big player that understands that complexity. And there are very few players in the world who do that, like Dubai Ports and Maersk and some of these other guys. So I think Adani is almost at that level. So the fact that their numbers are improving, I'm not surprised, because I think they're a good operator, and in a macro environment where trade into India and outside India is going to only grow, they will benefit more than other operators. At the same time, other operators will also grow. But from an investment perspective, it's not a buy recommendation, or it is not, we may have the stock in our portfolio. With that disclaimer, I would say that, in an environment like this, one needs to look at the best operator who has the balance sheet strength, technical capability, ability to attract talent, get customers, a vision. And I think Adani Ports rates right up there, on top of that list. So I think it's a mix of both. Adani being a great operator of ports, plus the macro pickup in the trade business.
By the way, standard disclaimer, viewers, Adani Group owns Adani Ports, and Adani Group also owns NDTV, and you're watching this conversation on NDTV Profit, so just wanted to lay that disclaimer out. But Abhay, this has been fascinating thus far, to just get just the brass tags out of the way. Just anything else on the global macro, Abhay, that stands out before we need to slip into a break? But before that, anything else on the global macro that stands out for you, that you will keep an eye out for? That is crude in the picture right now, and it's perking up because of the geopolitics. Does that come into the fray, or anything else?
No, crude, I think it's a red herring. It has always been. Last 30 years that I have been investing, I've heard this, many times. Crude is going to go to 150, 200, 250, and then, just when people are, gearing up their portfolios for very high crude prices, it corrects. So I think crude has an automatic mechanism, like most commodities, where the large suppliers understand that it is dysfunctional to break the market by charging too high a price. So I'm not worried about crude prices. It will always spike. That's the nature. I'm not worried about commodity price spike. Geopolitical risk, unpredictable, always there. But what I'm looking at, Neeraj, more to answer your question more closely, is the interest rate correction or fall globally. And once that happens, I think that will start a virtuous cycle of capex, which will further lead to demand and then further lead to consumption and further capex. So I think we can, and people are not budgeting for it, frankly, driven by interest rate cuts, we can get into that virtuous capex cycle over the next 2-3 years, which will see the risk assets also perform well.
Okay, Abhay, stay on. So much more to talk about. We need to slip into a very quick break, but please stay on because we'd love to talk a lot more about some of the other things, including talk about some of the capital market plays that Abhay Agarwal had highlighted in the last time that he spoke to us on our show, Portfolio Manager. Talk a bit about that. Talk a bit about the big news development for the day, which is Tata Technologies winning a contract or signing a JV with BMW. It's a bit of a landmark announcement. We talk about that as well.
Hi, I'm Tanuj Bhojwani and I run MedPlus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Back with Talking Point right here on NDTV Profit. Tata Technologies is a stock in focus after executing a joint venture agreement with BMW Holdings Netherlands. What is this about and what would it mean maybe for Tata Tech? My colleague Puneet Johnson to give some perspective here. Puneet, good morning.
Hi Neeraj, good morning. And as you rightly said, this agreement is very, very key for Tata Technologies. Looking at the key details as per the exchange filings now, this JV expected to deliver automotive software, which includes software-defined vehicles. Now for the premium vehicles, there is a very high content for software, and Tata Technologies works with a lot of these EV as well as the premium players. While they said that the automotive software-defined vehicles solutions for BMW is what they are going to offer. The current stake is 50-50 by both parties in this particular JV, and they say that they will establish automotive hubs in Bangalore, Pune as well as Chennai in India. Now the focus will be delivering automotive software and as well as SDVs, the software defined vehicles for BMW, while they say that this will lead to transformative solutions for business IT solutions as well. Currently, it's very interesting that lately JP Morgan had written a report on the ER&D segment where they had an underperform rating on Tata Technologies, which had a target price of roughly 800 rupees, which is roughly 20-25% below the current market price. Now, they had said that high client concentration was a key factor which was a problem for Tata Technologies, and JVs such as this with the likes of BMW will be key to get out of this high concentration. They had also mentioned that 46% was the current revenue from these anchor clients such as VinFast previously that they had worked with in 2021, and they say that they needed big evidence such deals like JV with BMW to have a positive view on the stock. So this JV is going to be definitely a very big key trigger for Tata Technologies, and more details are awaited from the same. Back to you.
Puneet, thanks for putting this into perspective. Viewers, lest you get confused, the JP Morgan note is of the past when this announcement had not come in. Now that it has come in, we may well see JP Morgan change their stance as well, because clearly their note suggested that there is not enough ability to scale up non-anchor clients, and the anchor client exposure is 46%. This may help Tata Technologies balance it out, and which is why I think we're seeing this 5% uptick on the stock today. Abhay, now coming on this one, 6.5% actually, but coming on this one, Tata Technologies, ER&D stock, that space has behaved very differently than the traditional IT services, and which is why the valuations given to these stocks. Do you think that announcements such as these, or the ones that KPI has done with Renault, or some of the other companies in Japan, or LTT is doing it not just in the auto space but otherwise as well, does it keep the interest alive in ER&D stocks?
I think, Neeraj, the ER&D companies are exactly what the IT services companies were in late 90s, early 2000, growing very rapidly, acquiring customers, and customers looking at them not only for saving cost or saving prices or reducing cost arbitrage, but for getting talent, which they could not get in their country, not available as easily. So I think the ER&D play, investors need to look at it with a 5 to 10 year perspective and look at it as a space where near-term valuations will stay elevated. So it's not a value buy, but it's a classic growth space where the bets you make will make you the similar returns that IT services companies made for 10 to 15 years starting early 2000s. I think it's a secular growth path. The whole world is looking at Indian talent in this space, and the companies that can manage that talent, get bigger and bigger contracts, I think they'll all win. So we are very bullish on this space, ER&D. We are also bullish on the whole EMS space because that is also mimicking in terms of growth the same sector. So I think it's something that investors should definitely look at with a longer term perspective.
Got it. Now, which brings me to my next question, and which is consumption. And Abhay, hitherto, for the last so many months or quarters, if you will, premiumization, premium consumption, the upper end of the K-shaped curve that we've spoken about for so long now has done well, both in numbers and in terms of stock price performance. Could this now change a little in that staples and FMCG? Can they make a comeback? Or do you reckon that it will not be one at the cost of other and both can do well?
I think on the staple side, we have had a different view. We don't think that, and I personally, whatever data I've looked at, I don't think that there is any slowdown in growth in staple consumption. What has happened is that there are very competitive domestic players, regional players who have come in and taken market shares in some of these staples categories across food, personal care, and other such categories. And the larger companies have been slow in reacting to that competition. And I think it is now that they have started reacting to that competition. So I think the overall market is still growing at, in terms of volume, at close to 7 to 8% at least across categories. It's just that the larger companies that are listed are not able to get a large part of that growth. They're getting a smaller part of that growth. So they have gone back to the drawing board in terms of optimizing their cost structure, optimizing their product portfolio to cater to this new competition as well as the new demand from customers. So I think we are in that adjustment cycle, and I think in another quarter or so, the volumes for the larger players will again start picking up. Is the bet that we are making. So we are not in a hurry to add any large staple or FMCG or personal care company to the portfolio right now. We'll probably wait for a quarter or so to see how they are redefining their competitive strategies.
What about the others, the premium stuff? I mean, I'm just using names, but Landmark Cars and Ethos and a clutch of other names which are niche consumption. Yeah. They've done very well thus far, Abhay. Yeah. Do you think the momentum can continue?
Oh, absolutely, absolutely. I mean, any which way we look at it, Neeraj, I was in Middle East whole of last week and traveled through multiple airports, and it was remarkable that at all airports, the largest buyers of any product in the duty-free shops and in the city were Indians, and they were just lapping up stuff. It was like flying, and this is across, and it's not restricted to only alcoholic beverage. It's like
you included, Abhay.
I wish I was busy observing more. So.
Sorry, but please finish your point. Yeah.
No, so I think what is happening there, Neeraj, is that this premiumization is very evident, and companies like Ethos and all have been hard at work for many years, but it's only now that they have come to the forefront and are being recognized for the work that they are doing, and they are all category creators, and these category creators will continue to grow. The good thing is that these industries are consolidating very fast, even at an early stage. So some of these companies will benefit a lot more than the new entrants as they build their brand and try and explore newer subcategories, like in case of Ethos, used watches or trading in second-hand watches, premium watches. I think this is a big space that will continue to grow. This premiumization story is aspirational. As the country gets richer, it is going to aspire for better and better quality stuff.
Got it. Abhay, last question. I've asked you a lot from my end. I would love to understand from you. Presuming that, whatever cash levels you might be or not be sitting at, and however constructive you are, what is your top overweight position and why, Abhay?
So I think some of these positions, we are in the process now, Neeraj, of annual rebalancing of our portfolio, where we cut the allocation to some of the stocks that have run up over the last 1 year and have gone higher than our model portfolio weight. So our number one holding is Jio Financial Services right now. Then we have CDSL and we have Maruti, Reliance, Dr. Reddy's. These are some of the stocks that have done well for us, so their weights have gone up. What we are looking to do now, Neeraj, is that we are last year, our model portfolio indicated the next 12-month return of 40%, and we did about 57%. But now the new model portfolio we have is indicating, forecasting a return of 18.5% for the next 12 months, and which is expected because a lot of return has already been made last year. We are overweighting large caps in our portfolio from 30% to 55%, reducing the small and mid cap to about 40% and keeping 5% cash in the portfolio. So that is the portfolio strategy now, because we see more value in large caps that have gone through time correction over the last 3-4 years, especially in insurance space and some of the other spaces. Pharma will continue to be a large part, and on terms of contrarian bets, it continues to be agrochemicals and some chemical names. So that's the overall portfolio tilt, Neeraj, at this point of time.
Great. And viewers, standard disclaimers, of course. None of what Abhay Agarwal has said is a recommendation. It is merely him disclosing what their positions are. You can please do your own due diligence and research before you try and act upon anything on the back of his confidence into some of the things that he's spoken about. But Abhay, always a pleasure talking to you. Thank you so much for taking the time out and speaking to us today.
Thank you, Neeraj. It's my pleasure. Look forward to being back on the show sometime.
Thank you. Most certainly. And viewers, thanks for tuning into this edition of The Talking Point.
AI is revolutionizing how we work, play and connect. It's not just about the tech, it's about the impact on humanity. Discover the secrets behind the world's most powerful technology, from enhancing our lives to shaping the future. Don't miss All About AI, your ultimate guide to AI brilliance. Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target, what's good for long term, when to buy, when to sell. How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the company.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Benchmarks trade with marginal cuts after a flat open. Sensex trades at 73,900 while the Nifty is at 22,400. Most sectors trade in the green, led by consumer durables, media and realty. On the other hand, IT and financials see signs of weakness. And woes deepen for Vistara as the airline asks pilots to sign a new pay structure by March 15th. Sources say more flight cancellations and delays expected during the day. Meanwhile, Aditya Birla Fashion jumps over 12% in trade as the company evaluates vertical demerger of Maruti Fashion. And Tata Technologies gains on executing JV with BMW to deliver automotive software for the auto giant. Hello and welcome. I am Agam Vakil and you're watching the F&O show, a show in which we take you through all that is happening in the futures and options space in Indian equity markets. A quick look at how markets are faring at this point in time. Subdued cues coming through, aren't looking at too much as far as the benchmarks are concerned. Before I take a look at the markets, we also have the manufacturing PMI coming in at around 59.1 in March versus 56.2 2 in February, so a little bit of an improvement there. But we'll continue to give you an update on the PMI data. For now, of course, the benchmarks went marginally in the green and then eventually moved back and slipped back into the red for now. But the weakness is marginal, and there has been consolidation through and through over the course of the day. Of course, as far as the Bank Nifty is concerned, the picture is not very different. We are looking at very subdued cues as far as that index goes as well. But this one is absolutely flat as it can be. What we have seen is traction as far as banks are concerned of late, and of course the Fin Nifty will also be in focus, considering we have the weekly options expiry coming in today. This one is under a tad bit of pressure, down by around 0.25% as we speak. Now let's take a look at how things are faring as far as broader markets go. And broader markets, of course, remember yesterday we saw a lot of strength, and that to a certain extent has been maintained as far as the mid-cap index is concerned, which is up another 0.5%, and the small-cap index also up by just as much. The real question is, what do you do with futures? Now, coming down to the Nifty futures, we saw a lot of unwinding in yesterday's day of trade with respect to the open interest overall. As far as the April futures go, your OI still stands at a little over 200,000, but we are looking at very sharp decline yesterday, and even in terms of Bank Nifty, where in fact the open interest declined by as much as nearly 40% yesterday. So today, while we do have a little bit of traction in terms of an increase, it's not substantial. And again, the Bank Nifty is flat at the moment, so it's something that we're going to have to wait and watch out for. But consolidation continues. But let's talk about the options market. Again, we are now looking at a lot of consolidation around the 22,500 mark. It does seem like this is now becoming a little bit of an important level to keep an eye on. And 22,500 is what's going to determine as to where the Nifty will go ahead. Remember that yesterday we hit a life high momentarily, of course, and then of course we saw the Nifty once again take a step back, and the question really is that where do we go from here? And we continue to see that traction coming in around that mark. Of course, as far as the Bank Nifty and the Fin Nifty expiry is concerned, Fin Nifty options expiry specifically, the underlying as far as the Fin Nifty goes, that is currently at around 21,100. We have seen a little bit of weakness there, but not too much to speak for otherwise. And again, it's something that we will all be keeping an eye on in today's day of trade. But what about how are things faring out? Let's get in an expert opinion here. We have Ruchit Jain, a CMT lead research analyst at 5paisa, and Brijesh L, retail research at IDBI Capital, who's joining us on the show. Good morning to both of you. Thanks so much for joining in. Ruchit, your view on the Nifty at the moment. We've tested and maybe tried to move over the life high. We've hit a new life high yesterday, but we haven't been able to sustain above that. Is a consolidation on the cards, or can we in fact expect some sort of direction going forward?
Very good morning, Agam. Agam, there is no doubt about the broader trend, that the broader trend for the market still remains positive after a corrective phase of about 800 points in Nifty. In the later half of March, during the end of March, we resumed that uptrend. So we are quite optimistic on the market. And if you look at retracements of the recent corrections, then we can see that up move getting continued towards 22,700 to 22,750 level. But that's from a short-term or positional perspective. From a 1 or 2 days perspective, I think there could be some consolidation, maybe ahead of before the RBI policy. Because if we look at the data, then Nifty has about 2 to 3% short built up in today's trading sessions. Very less, but still that short built up is there. And even 22,500 call option has significant open interest built up for this Thursday's expiry. So I think for next couple of trading sessions, we may continue to trade within this range of 22,500 to 22,300. And in case if we get any such dip towards 22,350 to 300, then ideally that would be good levels to look for buying opportunities for next targets of the 22,700. So buy on dips, I think, is a good strategy that we are advising for our clients as well. If you're trading the index, next 1 or 2 trading sessions, we may trade within the range. And in case if we get a dip towards 22,350 to 300, take that dip as a buying opportunity.
All right, that's the view as far as the Nifty is concerned. Brijesh, good morning to you as well. How are you trading this particular index at the moment?
Yeah, hi, morning. So I think I do agree with Ruchit. So net, the bias overall structure for the Nifty is positive. I have a sense that Nifty may go back to 22,800 level. That should be the new level, which we may see over the next couple of days. But then from this expiry point of view, 22,500 is the price where there are a lot of call writers are there, which are again active. So this may market might find support resistance at those points. On the way down, 22,300, 22,200 is the trigger where again there is a demand zone. So Nifty specifically, I think it can be a range, but then there is some amount of strength in the Bank Nifty and Fin Nifty. Fin Nifty right now the data is slightly negative, but my understanding is that once the Fin Nifty starts trading about 21,300 in the futures, I think there again the momentum might pick up in the Fin Nifty as well. So Nifty, Fin Nifty and Bank Nifty is looking positive. There can be some positive bias, whereas for the Nifty futures, there can be some range bound kind of a trade. Overall structure is positive. Anytime there is a correction, I think this is a buy on kind of a market. As long as 22,000 on the Nifty is not broken, corrections in the both Nifty and 46,000 levels for the Bank Nifty. As long as these two levels are not broken, I believe correction should be viewed as a buying opportunity.
Okay, so let's shift focus to the Bank Nifty, and of course, Brijesh has given his view on the Bank Nifty. So I'm going to talk to Ruchit about his view here. Ruchit, how are you addressing this index?
So along with the Nifty, I think the view remains similar for the Bank Nifty as well. If you look at the heavyweights from the banking space, then some short build-ups have been seen in stocks such as ICICI Bank, Kotak Bank, Axis Bank in today's trading session. But on the other hand, HDFC Bank has been showing strength. So I think quite a mixed data is there within the banking space. 47,000 was very important resistance, which was broken before the expiry. And I think that now would become a support on any kind of dip. So buy on dip strategy should be kept in the banking index as well. Dips towards 47,200, 47,000. I think that's the good range where in case if you get such dip, then no buying should be done over there. So similar to Nifty, I think similar view. Buy on dips for Bank Nifty as well. When 47,200 to 47,000 should be the buying range for this index.
Okay. Well, that's as far as your Bank Nifty is concerned. Very quickly, taking a look at the exact chart which is on your screen right now. Now, HDFC Bank is in the green by a little less than 1%, but HDFC Bank has a lot of weightage on not only the Bank Nifty but the Fin Nifty as well, and that can be an influential stock just by itself. Well, it doesn't really tend to be extremely volatile. But since its earnings in the third quarter, it has seen a little bit of an increase in terms of its implied volatilities, which perhaps causes your option premiums to be relatively higher. That said, if you consider some of your other counters, such as ICICI Bank, something like an Axis Bank, all of them are declining at the moment, and that's the reason why you're seeing a little bit of a weakness coming through as well. Kotak Mahindra Bank is, of course, quite flattish, and we don't see a lot of traction in SBI either. I reckon that today, it could potentially be just about consolidation in today's day of trade. So that's something to keep an eye on. On that note, we will slip into a short break. But on the other side, we get you about stocks and a lot more. Stay tuned, and we'll be back in just a bit.
Hi, I'm Tanuj Bhojwani and I run MedPlus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created. But this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a...
Welcome back to the F&O show. We take a look at all the stocks which are buzzing in trade and perhaps which are seeing traction towards an increase or a decrease in OI. Let's pull that list up as well and see where there is in fact a lot of movement. So Aditya Birla Fashion Retail is an obvious one. We're near 12% up move there, a significant or 14%, pardon me, now. So and a significant increase in open interest. So clearly a case of longs building in there. But there are also longs building in Havells and Atul Limited. Well, Atul Limited, of course, is not the most liquid of the counters, but seeing traction today. And of course, BPCL is the other one, which is also up and about and gaining towards longs. GAIL, of course, on the other hand, is down by around 1.8%, and it's seeing some amount of shorts coming through. To talk to you about all the stocks which are unwinding in trade, let's pull that list up as well. And L&T Tech, something like an Emphasis, Info Edge, all of these counters are losing less than 0.5% at the moment. L&T Tech a little over half a percent. So not too much to speak for otherwise. And of course, Pidilite is the other one which is down around 1%. JK Cement is looking at about a short covering, but that's where the underlying is also advancing by less than 1%. So it's been a fairly quiet day. Perhaps a little bit of indecision coming, or if it's not indecision, maybe I reckon that. A lot of traders are just waiting by on the sidelines to perhaps wait for more cues before they in fact go ahead and place bets in these current markets. But I'm sure that our experts have a handful of ideas for you. So, well, Ruchit, coming to you, stocks on your radar today.
So BPCL is one stock which is looking quite good. In fact, the OMCs have seen some resumption of the positive momentum. And if you look at the data, about 4% open interest addition has been seen in the future segment. Even 620, 630 call options have witnessed good buying today. So I think this is one stock where one can look for trading opportunity. But I would recommend a bull call spread over there. One can look for buying 620 call option and sell 650 call option because there's resistance around 650, and selling that option would lower our net premium outflow. So net premium outflow would be around 11 rupees for this strategy. One can keep stop loss of 6 rupees on that and expect targets around 21. So with a risk of about 9,000 rupees per lot, one can expect gains of around 18,000 rupees.
Of course, the advantage of playing a bull spread is that you actually eliminate the time decay as far as this aspect is concerned. And it's not unlike a futures, but the difference between a bull call spread and a futures is that in a call spread, your upside and your downside is limited, which always plays in your favor. That said, Brijesh, what about you? Ideas or stocks on your radar?
I think there are two stocks from the F&O space. One is the Voltas. I think there's a good amount of buying which we saw in yesterday as well as today's trading session, and I believe this momentum should continue for this entire week. I believe this Voltas can go back to 1230, 1250 on the higher side. So I think it's today from the morning day side there is a slight correction. This can be viewed as a buying opportunity. One can put a stop loss of 1165 for the target of 1230 and then 1250. This again a trading opportunity from the F&O space. Next one, which one is seeing a good buying is Birla Soft, B Soft. So again, at 774 level, it's a quite a good trade. It's a sideways consolidation, and that breakout can be seen on the higher side. 800 is a trade. It's a trading bet maybe for next couple of days, 1 or 2 trading session, that kind of a trade with a stop loss of 760. So both the long trades for the day.
All right, so 2 long trades coming in from Brijesh's point of view. Ruchit, if you can come in on Bharat Electronics, that's BEL. What's happened is today it's making a new life high, and of course it's broken out of the recent high that it made back in March, the second week of March. At the moment, we're looking at a sharp advance coming in, another 5.5% advance coming in. Is there anything that you can see in terms of momentum, and would you in fact perhaps deploy a fresh long in BEL?
Certainly seems to be positive, and I know the stock has surpassed its previous highs as well. So I think the up move could continue going ahead. But previous high resistance were around 216. No, I think that's where about 216, 217 one should have initiated buying. But in case if we get any kind of dip again towards that 216, 217, then the risk reward ratio could become favorable for fresh longs. Now, usually whenever stock hits all-time high, we take some retracements of the previous corrections, which gives us potential targets or the resistances, and those levels are seen around 227 followed by 240. So from a very short term perspective, 227 should be expected, where a small resistance would be there, but positionally I think 240 should be the target area. So if any existing long positions are there, they should continue to hold on. Any minor dips towards 217, 216 would give a good risk reward setup to enter for targets of around 240.
From the Tata Group, of course, Brijesh has already spoken about Voltas, and Voltas has been up and about. And even though it is off its day's high, it is still at a new high, and well, at the moment still advancing by around 2.5%. So keep an eye on that one. We are seeing a lot of traction in Voltas, even the cash markets. But the other stock that I wanted to address was Siemens. Now, Siemens is up by around 0.7%. Sure, it's nowhere close to the kind of gains it has made off late. And off late, of course, it has moved up substantially. In fact, there's no stopping, it seems. There's tremendous amount of momentum, or there has been. At the moment, it is around 5,500 rupees a share. That's where its underlying is. Brijesh, we've seen a staggering up move for Siemens off late. At what point in time could one perhaps start assessing and anticipating a little bit of fatigue? And under those circumstances, what sort of strategy would you perhaps employ in something like Siemens?
So I think the Siemens is already in the quite overbought zone. So I think the rally started from the levels of 4,500 level, and it's almost 1,000 points from those levels. And from the technical perspective, if I see it's in the overbought zone, I think it's a little bit overheated. Somebody wants to take the buy call spread, that can be one trade. And if somebody is taken a positional long bet, I would advise to exit or take the profit booking scenario, because if we see some profit booking in the index, then Siemens would be the one which can easily come back to 5,100 level or maybe close to 5,000 mark. So it's a decent downside from the current level. So profit booking is what one should be looking at in the Siemens.
Brijesh, just a quick follow-up. Would you play a credit spread around, potentially either staying where it is or potentially going down, perhaps selling the at-the-money option?
I'm not pretty confident, because the liquidity is missing. The way I would like to take the trading opportunity, it won't be feasible to take this option bet, because I think even though that time value won't permit to take any benefits of this, so it would be somebody wants to take a naked shot with yesterday's high as a stop loss would be a favorable trade in this particular case.
Okay. All right, Brijesh. Well, in fact, we are out of time. So at least on the segments, I'm going to take a moment to thank both our experts, Ruchit and Brijesh, for joining us and taking us through their views on the markets, as well as giving us a handful of stock trading ideas. And with that, it's a wrap. But before we do, on this edition of F&O Show, my colleague Neeraj spoke to Piper Serica's Abhay Agarwal. This is what he had to say. about how he is expecting the markets to come through based on global macro trends, as well as the uptick in metals in wake of China's manufacturing PMI rebound. Listen in.
We have been tracking China, especially Neeraj, for last 6 months for a couple of reasons. One is that whenever China local consumption gets into distress, we have seen that the Chinese large manufacturers try to get into cash by dumping at cost or below cost their products, and that creates a deflationary cycle unintended globally. And I think Indian companies, a lot of them in chemical space, agrochemical, metals, have suffered because of that over the last 6 months. But whatever research we did, we also started seeing over the last quarter, starting January onwards, that that dumping has ceased and stopped being a problem. And the pricing power was coming back in a lot of categories, especially bulk drugs, metals, chemicals, agrochemicals. So I think the data coming out now of China of PMI increase and to be followed by better domestic consumption, cleaning up of the real estate exuberance, if I may say that. I think that is all my guess. I'm happy to make a bet that is behind us now. So all the pain that the Chinese economy, Chinese domestic consumption, Chinese exporters had to go through are largely behind them, and now we will see Chinese economy recover. The good thing about the Chinese economy is that it's not so dependent on foreign flows, unlike India, where for our capex and capital formation is still dependent on international global flows. China is not. It has a lot of domestic capital. So I think China will grow this year and grow at a level that will surprise the analysts, probably driven by domestic consumption. And this will lead, as you said, your bigger question, will the global growth outlook will be better than estimated? My bet is yes, it would, because I don't see any reasons of, the consumption falling off, interest rates are going to trend down. And when that happens, consumption goes up, the macros continue to improve, especially for India. So I don't want to be sanguine or careless, but I would bet that the global growth, global macros will improve from here on.
Okay, so two investing implications, and I'm coming to that before I come to the macro again, Abhay. The first one, let's talk about the Chinese data since you're tracking it so closely. Usually, China growth is associated with a cyclical uptick in metals. Do you see that happening?
Yeah, I think that is a natural outcome, Neeraj, because there is a limited supply of metals that comes into the global markets, and the Chinese exporters have been the largest ones there, and they have had no pricing power because they have to keep the factories running, and that puts pressure across the board. In a down cycle we saw last year, where global consumption of metals didn't fall off the cliff, but at the same time it wasn't growing in a manner that people were used to. And on the same side, you have supply coming in continuously. I think that is going to even out. And the natural implication will be that the commodity prices, especially metals, will firm up from here on. However, I don't think it will be a very sharp uptake. It could happen in some commodities because we don't really track the exact monthly demand and supply data. But barring some, I think there will be gradual recovery. So if anybody is going to make a bet about sharp recovery in metal prices, I think they would also be wrong. But at the same time, I think the recovery over the next 12 months will be on the higher side. I would expect that generally metals as a commodity basket will not be surprised to see a double-digit growth in pricing from here on over the next 12 months.
AI is revolutionizing how we work, play and connect. It's not just about the tech, it's about the impact on humanity. Discover the secrets behind the world's most powerful technology, from enhancing our lives to shaping the future. Don't miss All About AI, your ultimate guide to AI brilliance.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't
Hello and welcome. You're watching the Small and Mid Cap Show. I am Mahima Vajrajani. Well, before we move on to the two interesting managements that we're going to talk to today, MedPlus Health and Gulf Oil, let's take a quick check on how the markets are panning out to be. Well, in terms of the benchmark indices, Nifty is down around 0.17%. Nifty 50 is down around 0.3% now. The Nifty is dragged down by companies like Hero MotoCorp. This is because their auto sales number came in yesterday and they were down 5% versus the expectation of up 5%. Then there's ICICI Bank, which is down, SBI Life, Bajaj Finance, Hindalco. Well, in terms of contributions, HDFC is contributing the most, Bajaj Auto again contributing the most, Dani Ports. In terms of Sensex is down around 0.2%. In terms of the broader markets, if we see broader markets in terms of mid-cap 100 is up around 0.45% now. So broader markets are clearly performing better than the benchmark indices today. Well, mid-cap 100 is clearly being led by ABFRL today after the news of the demerger that ABFRL is planning from Madura, and also TCNS is also up in trade today because of this. Recently ABFRL had acquired TCNS. Then we have Aditya Birla Capital, which is adding to the gains, Tata Tech, which has recently executed a JV with BMW Holdings Netherlands. Then we have Prestige Estates, which is up We have Tata Tech, which is up. We have Kajaria Cements, which is up in the Nifty Mid Cap 100. Then moving on to Small Cap 250. Small Cap 250 is up around 0.5-0.6%. Now gains in the Small Cap 250 are led by defense stocks today. MTR Tech, data patterns. Well, there was a Jefferies note that has suggested that India can expect US dollar 100 to 120 billion opportunity over the next 5 to 6 years in the defense industry. 13% CAGR is what they're expecting from FY23 to 30. Data patterns, well, Jefferies has initiated a coverage for data patterns today. Then there's Schneider Electrics, which is up. Tata Investment Corp, which is up. MMTC, which is up. Now, in terms of the breadth of the market, if we can pull up the advanced decline ratio, well, there are around 2,400 stocks which are running in advance, and there are around 600 stocks which are declining. Well, in terms of sectoral indices, Nifty Realty is up around 1% today. The least gaining sector, actually IT sector, is down around 0.6%, we cannot say least. Well, Nifty Realty is being led by Prestige, Oberoi, Godrej Properties, Phoenix Mills. Nifty IT is being dragged down by stocks like L&T Tech, Wipro, TCS. We also have certain stock-specific actions where IREDA, which was up around 5% in the opening on a monthly business update again, and Uflex up, which was up around 3%. Well, company started its commercial operations in CPP film production line in Russia. The stock today in focus on the small and mid cap show is MedPlus Health. Well, it is one of the biggest chains of drug stores. The company has added over 4,200 stores. The net addition in Q3 FY24 was around 144. The share of private label pharma is going up for this particular company, which is aiding to their margins and revenue. Well, the company have recently, in a recent news, the company was imposed a 15-day suspension in February. Its subsidiary. To discuss more about this and the future outlook of the company, we have with us Mr. Madhukar Reddy Gangadi, MD and CEO of MedPlus Health Services, who joins us now. Welcome to the show, sir.
Thank you. Thank you for having me.
Right. Mr. Reddy, my first question to you would be that the net store additions has been around 144 in the last quarter. But however, if we see that sequentially the net store additions has been declining, what is the reason for the same?
So, no particular reason, honestly. We kind of guided last quarter that we'd be at around 600 stores. The goal this year has been for us to really focus on getting the private label, the MedPlus private label up. So a lot of the bandwidth of the company is going into that. And so we said, let's just go slightly slower than the 800, which we had actually thought originally. So we will most likely end up doing a similar amount next year too. But yeah, I mean, it's just that we want to be more focused on the private label. That's all.
Right. So you're saying that 600 to 800 store additions in FY25 again is what you're expecting, correct?
No, last year we had actually guided around 800. We ended up doing 600. This year we'll most likely do only 600. That's what we said in the last call.
Okay. And what is the guidance for FY25?
Similar number.
Okay. And so I just wanted to understand that your share in terms of revenue from home delivery is increasing compared to, your in-store revenue. Now, do you think that will this lead to cost efficiencies, one thing? And secondly, do you think that because of this, the per square feet revenue will go up?
No, for us, online is a small portion of our overall business. Because, it is still a large business compared to the other small pharma retailers out there. Although it is 7 or 8%, it is still okay. But the thing is, no, I don't really expect these numbers to move the needle for the overall business in any significant fashion. What we are actually focused purely on, our own brands, and that's been the big thing. That is what we expect will be the key, let's say, USP for the company as we go forward.
Right.
Not the online.
Okay, so even if the home delivery keeps on increasing, your in-store size will not change and this will not anyway affect your revenue per square feet, right?
I don't think it'll do it. No, it isn't increasing, but on a small base, so it's not enough to move the needle.
Okay. And in terms of your store level operating, the return on capital employed has also been decreasing sequentially. Why is that, if you can just guide us?
That's because the overall percentage of newer stores has gone up significantly in the last, year or so, last couple of years. Today, the percentage of new stores versus old is around 45 to 55. I mean, stores which are less than 2 years. And that obviously kind of decreases the overall return. That's about it. I don't think there's anything more to look into it, honestly.
Right. So from this 45%, when do you think that they will be at par with the stores that are, fully operational, full revenue and margin generation is taking place from those stores?
Given that we are such a small portion of the overall country and the opportunity out there is so big, I really don't expect that we will completely, get to a point where our new store growth is not going to have any impact on the overall size of the company, overall, numbers. This year, yes, we'll be adding only 600 mainly because we want to be more focused on the private label. But given that the opportunity is so big, I expect that as we go forward, we'll accelerate the openings a little bit more. And the way I would look at our own performance is to only look at stores which are more than a year or more than 2 years specifically. We'll see if we can, start coming out of those numbers as we go forward. We don't publish those, but we have said this in the past, that a store level EBITDA of 10% is usually possible only for stores which are more than 2 years. So as long as that number continues to remain stable and continues to go up, we are fine. We are a growth company and we'll continue to have a little bit of drag because of the new stores.
Right. And since you said that your focus is on private label sales, I'm sure that they're more margin accretive. I guess that they're around 20% of your total revenue right now. Where do you see this percentage going forward in FY25, FY26? How much do you think it will grow to?
Let me just step back and give a little bit of an overview of the overall private label thing and why it is so different here. Right. See, in India, 85% of what most pharmacy retailers sell, and it's probably true for most of the other guys too, I'm of course speaking for ourselves, are all products which are confined to maybe around 800 different compositions, strength, and even if you account for the strength and different combinations of the products, it's only 800 odd. So these are sold as hundreds and hundreds of thousands of different brands, super fragmented and everything else and all. They're all the same product, same this thing. Now, MedPlus is at a stage where it can actually make the same products. In fact, it has started doing that at the same level of competency as any pharma company. Given that we don't have any other marketing cost and we don't have any distribution cost and everything else, we are able to keep the cost really low. We are able to give a 50 to 80% discount on these products. We expect this platform which we have created, which allows us to actually manufacture all these drugs or get them manufactured and to be able to deliver at such a low cost, will allow us to take market share from the rest of the companies, rest of the small operators out there across the country. We expect this will drive our top line and profitability as we go forward. So while typically one would expect a private label to be super accretive to the bottom line, and that is because private labels are typically sold at 5 or 10% below the brand's prices. Given that we are selling them at nearly 40% or half of the cost of the brands, our margins, while they will be better, they'll not be as accretive. But where we'll really gain is by basically taking market share from the rest of the market out there. So that's the big story for us. As we all know, it is only in India where you actually see for the same product hundreds and lakhs of different brands out there for each product out there. Pharmacists have a huge problem just stocking all of the products which are asked for or prescribed by various doctors. But when you go abroad, when you go to a store like Walgreens and all, you either get the product which has been made by the original discoverer, or you would get the store brand. And that is because the stores there have the size and capability to make these drugs on their own. In India, that is not possible. Now we are doing it. We expect to actually go change the entire industry.
Right. So when you say market share for your private label, can you just give a figure as to where it is right now and a ballpark figure where it will be by FY26?
See, the last quarter, we reported a 8% sale of the total sales. Given that 80% of our overall sales is medicines, so 8 out of 80 would be around 10% overall. But this number, it actually be much higher in volume, mainly because our product sells for, let us say, on a hypothetical 100 rupee MRP for brands and us, our product sells at 40 versus the brand selling it at around 83. So volume wise would be much, much higher. So anyway, so that's where we are, and that's what, and we are continuing to build on that very rapidly. We just started. We expect to actually become, by volume today, in our stores, our brand sells more than any other brand.
Okay.
And it is growing very rapidly. Yeah.
Okay. Okay. And my last question to you would be that in terms of your diagnostics business, in the Q3 commentary you had mentioned that it's a pilot in Hyderabad and you would want to expand in other cities. Basis how it goes, what are the kind of developments that have taken place in this, and how are you planning to expand this diagnostic business segment?
As of now, we have actually put it on hold. Our growth is going to be confined, or at least our operations are going to be confined to Hyderabad, at least on the integrated side, which is radiology and pathology and all. We are still, working on the subscription numbers. While we are very happy with where we are, I think we're still a little short of where we want to be. Today, I think last quarter, we reported a number of around 130 or 133,000. We expect this to go up continuously, and we will only make a move after we get to the roughly around 200,000 odd numbers, or at least, we'll take a call at that time. So as of now, diagnostics will be only in Hyderabad. That's why we basically do the QIP and all, the resolution which we had set up. So for us, while we are at it, I want to address the other question which you had actually brought up. One of the stores which we got shut down and all. See, so bear in mind that we have around 4,300 odd stores.
Yeah.
And it's a heavily regulated business. There's always some small location here or there which could get violated. So once in a while, one store here or there shuts down. It is, and this has always been the case for us and for all the other retailers, I'm pretty sure. But only now, given that the SEBI has changed its rules a little bit, we are having to report it on a regular basis, but it is not material. That's all I can tell you.
Right. Well, right. Well, that's a good insight to what you said. Well, thank you so much for speaking with us at NDTV Profit, taking out your precious time and speaking with us.
Thank you for having me. Bye.
Let's take a quick break now. Non-news and updates continue on the other side. Tune in.
Hi, I'm Tanuj Bhojwani and I run MedPlus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created.
Good morning and welcome. You're watching the small and mid cap show here on NDTV Profit. I'm going to, quickly have a chat with Gulf Oil, and we have that management on the back of the fact that they are foraying into EV. Of course, outside of the general business, how they're foraying into EV charging, how that play is going to work out for them. What's the kind of capex plan? They also have roughly 700 crore of cash on the balance sheet, trying and understanding and breaking some of those down. And we have with us Ravi Chawla, who is the MD and CEO at Gulf Oil, to break all of those trends for us. Good morning, sir. It's a pleasure having you here.
Good morning. Thank you for being on the show.
Right. So, sir, do talk to us first off with regard to the traditional business, how the mix will change as you foray into EV and other ancillaries. How does your revenue mix grow maybe over the next 2 years, and how does maybe not the mix grow, but how does the revenue number grow, and how does the mix change for you?
Well, you see the core lubricants, the industry, as we know, because of better lubricants, is growing at 2 to 3%. In fact, 3 to 4%. It's both in automotive industrial. This growth is going to be intact in spite of the EV penetration, which we are seeing today at 6 to 7%. If you take two-wheelers and three-wheelers and passenger cars and buses. So we are definitely, as we look at the outlook of the industry, and we have seen various studies in India, this growth is going to be intact. And in spite of EV coming and growing over the next 4 or 5 years, as we anticipate, we see core lubricants growing 3 to 4%, and we have been growing 2 to 3x the market. We are number 2 in terms of our in the private sector in volume, and of course there's a lot of competition. We are also in the top 3 brands, we believe, in terms of our brand recognition. So we'll continue growing 2 to 3x, and we have lots of pockets of growth in terms of our segments. We do businesses right across B2C, B2B with OEMs. We have very strong portfolios in motorcycle, diesel engine oil. We continue doing that and growing share in our passenger car, industrial, infrastructure, and across, tractor, rural. So we see a lot of shoots of growth, and our trajectory is to at least look at 2 to 3x the market growth, and of course our revenues are going in line with that.
Understood. And how should your revenue evolve? The Tyrex acquisition, the foray into EV, say FY26, how should your revenue break up across businesses be? Lubricant, battery, charging, and the like.
Yeah, like you rightly said, we are across this. We've also made some shoots of investment, I would say, in the EV mobility chain. Definitely core lubes is tracking well, and that's where we see the 2 to 3x growth. In fact, the value growth as per the industry should be at least 5-6%. So we'll try to grow 2 to 3x of that. And the reason to make the investments in the EV mobility is definitely we have EV fluids which go into the EV vehicles. That's going to be a very small number in terms of overall demand, but we are already there with 7-8 OEMs. We're looking at our brand distribution, our network, our OEM partnerships as a strength for us. And given that EV mobility is really going into the next stage, I would say, we want to play a role. And we have made 3 investments. One at a global level with a company called Indra, which is making car chargers. They're UK based. They already have good market share there. There's an investment from our parent company and partly by the India listed company. This is about car chargers. We're talking about slow chargers, what we call as AC chargers. So this is a product which we want to bring to India. In addition, we have a stake 2 years ago in Electrify, which is software as a service. We have 26% stake there, so the software is being made by them. They are currently India's top 3 kind of downloaded app, and they provide the software as a service for mobility. And the third investment we made end of last year is in Tyrex, which is a DC manufacturing company on fast chargers. They provide chargers from 30 to 300 kilowatts for buses and for other applications. These are fast chargers. So this is a 51% investment, and we are expecting that these 3 investments will help us to play a good role in the charging space, and definitely looking at more opportunities here. But just to give you a ballpark, the DC charging market in India, Tyrex has 8 to 10% market share today, we believe, and this is obviously the good strong technology company. They would continue to have this kind of market share. So this could mean that in 5-6 years this could generate 500 crores plus worth of revenue as the whole company Tyrex. We will evolve, and I think core lubricants continues to be our engine of growth also.
Okay, so core lubricant to maintain growth, Tyrex to add maybe 500 crore odd of revenue. Your current revenue trailing 12 months roughly 3,200 odd crore. So this should start comprising of maybe 15 odd % of the mix in terms of revenue, maybe 2 years down. Is that how one should look at it? All 3 of these companies combined?
Well, I would say Tyrex is in DC charging. The figure I gave you of 500-600 crores would take a little longer than that. It would be about a 5-year horizon, I would say. Okay. But we are looking at definitely getting the slow chargers, AC chargers that could give us a little revenue. And I think overall we want to evolve and really, it could be even better figures once we see that the businesses are picking up what we're investing in. And right now we would like to be a little cautious here and say that definitely we want it to be a good part of us, but continue to focus on our core, which is, as you mentioned, a cash generation business, low capex, but that is again an area where we have a lot of scope.
I take your point. And what should this do to margins? Are some of these businesses margin accretive for you? Are you more positive with regard to where the margin trajectory will go as a result of some of this revenue which is accruing to you?
Yeah, so our current margin, as you know, is 12 to 14%. Last quarter we had 13.5% margin. Of course, there's a lot of businesses and factors that play into it. I would say that we want to definitely look at our mix in the lubricants area, the segments we are in, to try to keep this 12 to 14 and probably take it a notch higher. We have had higher margins in the past. There have been lots of and right now the cost is stable. Maybe last 2-3 months again you've seen a little warming up, but the cost is stable. Everything is margins are improving, and we would say, like the DC charging business, what we are looking at is a similar margin to what we have currently in our lubricant business. Definitely it will pan out. It won't be from day one or year one. It will take some time, and we would like to look at a higher margin trajectory. Currently we're looking at 12 to 14% as an outlook for the next 6 months at least.
Okay, so possibly higher once the new businesses come through. Is that how one should read into this?
I would say lubricants, we would like to look at better segments growing better. So definitely look at that. It would also depend on competitive pressures and raw material cost. And Tyrex, which is DC charging, would be similar margin to what we have currently.
Okay. So point taken. Now, when it comes to the way in which your balance sheet is shaping up, I want to try and bring that into focus. Roughly 700 crores of cash. What's the kind of capex plans pursuant to these 3 acquisitions that you have now, and how should cash balances therefore evolve, and what's the plan here?
So our current lube business requires about 20-25 crores of capex, which is normal maintenance capex. In a couple of years, we might expand capacity, so that will come in. And as you said, in terms of Tyrex, we have put in 100 crores plus. 60% or 65% is in the primary. So Tyrex will be looking at expanding its technology, its expansion, its production base. So I think most of it is taken care of as we look at the growth in terms of the investment made with Tyrex. We are definitely having cash. We would look at some if there are any other interesting areas in EV. But as of now, our capex is going to be limited to the maintenance capex in the core lubes, and Tyrex we've already invested in the primary. So that is going into the next I would say 3-4 years plan for Tyrex.
Got it. So would that mean a distribution for shareholders in some form and shape?
Yeah, we have been, obviously dividend has been one way to reward the shareholders. Yes. The board obviously approves this time to time, and I think that is going at a healthy, commitment in terms of doing that. But there is cash on hand if there is something we want to look at.
Which would be? What would you be considering?
What would be areas of the EV mobility? There are areas we have a lot of, our own independent garages, which we call Gulf bike stops and car stops. So there's a play in the charging area. There's a two-wheeler strength, which we have. So definitely looking at areas, and we would like to definitely examine some of these quite closely before, trying to get it in with a firm commitment.
Okay, and any kind of ticket size that you will be looking at, if at all anything comes on cards in terms of both capex as well as acquisitions?
We are a debt-free company, so we don't have any debt. So based on the business proposal, I'm sure we can manage the ticket size. But as we said, we want to first examine the segment, and definitely we don't want to get into a lot of heavy capex-oriented kind of investments.
Okay, I take your point there as well. Now, help us understand capacity utilization at this point. You seem to be very comfortable with the fact that there's no major capex in the pipeline. What's the capacity utilization like at the moment?
So I think our volumes of lubricants is around 105,000 for the 3 quarters. We would obviously expect it for March quarter is a good quarter. We have capacity of 90,000 in Silvassa on 2-shift basis and 50,000 in Chennai. So on a 2-shift basis, we are working well. It's a 95% utilization. We can make a 3rd shift happen. So we have enough capacity currently for our 2 to 3 years growth in lubricants. So we really have enough capacity. Obviously, we don't run all 3 shifts every day. So there is, given the growth plans we we have, which is 2 to 3x of the market growth rate in volume, we have enough capacity right now. We would have to make some extension on filling storage, which we do periodically. So we'd be able to take up the capacity to, a third more than what it is today with these changes.
Okay, understood, Mr. Chawla. It's been a pleasure speaking with you. Thank you so much for all of those insights. Of course, a big opportunity with regard to EV awaits, and we'll see how that unfolds, and we'll keep chatting with you for more perspective on that. So thank you for that. For now, we're going to have to tell Mr. Chawla goodbye, but stay tuned to NDTV Profit for more. We'll slip into a very, very short break. More on the other side.
AI is revolutionizing how we work, play and connect. It's not just about the tech, it's about the impact on humanity. Discover the secrets behind the world's most powerful technology, from enhancing our lives to shaping the future. Don't miss All About AI, your ultimate guide to AI brilliance.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
How to decide?
Good morning. You're watching Ask Profit. I'm Smriti Chaudhary and with me is Alex Matthew. And this show is all about your stock-related queries. So for the next 30 minutes, we'll take all your stock-related queries, be it a short-term query or a long-term query. So to write to us, you can send your queries on the WhatsApp number that's on your screen, or through any of our social media channels, or through the YouTube live chat, and we'll take your queries from there. But before we jump into that, Alex, let's take a quick check at the markets. Nifty and Sensex are both losing ground. However, there seems to be some positivity in the sectoral, in the sectors. Apart from two sectors, all are in green. So what's pulling the index lower today, and tell us a little bit about the constituents and how they're doing.
Absolutely. In fact, let's pull up the Nifty 50 just to give you a sense of how the intraday move has been. It's down about 0.2% right now. Remember, it's trading comfortably above the 400 mark, or not comfortably, but it's trading above the 22,400 mark, and it has hit life highs in the past couple of sessions. Now, let's also pull up the key contributors on the Nifty 50, and we started with more losers than gainers on the benchmark. You have a couple of the private sector banks. HDFC Bank continue to lead the way. Bajaj Auto, strong set of numbers in the month gone by, and in fact better than its peers, certainly better than Hero MotoCorp, which reported a decline in wholesale numbers for the month of March, where it was expected to post a gain of about 4% or 5% or thereabouts. But the action is in the broader markets today, and you have the mid-cap 150 index that's gaining about 1% or so at this juncture, and you have the small-cap 250 index that is up about 0.7%. So I would hazard a guess to say that the market breadth is favorable towards the advances. In fact, let's pull up that metric just to give you a sense of how it stands right now. In fact, there you go. So there are nearly 3 gainers for every decline on the exchanges as things stand right now. Smriti was pointing out to a few of the sectoral movers. The underperformers are in the way of IT as well as healthcare and pharma. Pharma is just about flat right now, but the gainers are in the form of the realty index, which is really leaps and bounds above everybody else, gaining about 2% in trade today. But let's focus on Aditya Birla Fashion. That's arguably the stock of the day. It's up as much as 12.5% because there is a vertical demerger that is on the cards for this company. To find out what this is about, we're joined by Mahima, just to give us a sense of how the financials will look when this demerger does take place. Mahima, what can you tell us?
Right. So, Alex, just to give you a brief idea, well, Aditya Birla and the Madura Fashion Lifestyle will be demerged, and all investors will have identical shareholding in both of these. Now, just to understand, the resulting company will have premium brands like Louis Philippe, Van Heusen, Allen Solly, and Peter England, American Eagle, Reebok, and the innerwear part of the Van Heusen. And the demerged entity will have the value retail like Pantaloons, the TCNS, the ethnic segment TCNS, Masaba, etc., and luxury brands as well, and the digital part as well. Now, in terms of the financial impact, well, if we see, Madura segment has contributed around 6,000 crores in 9 months FY24 to the total consolidated revenue of ABFRL, which constitutes around 63% of the total revenue. In terms of EBITDA also, well, in terms of EBITDA contribution to the consolidated revenue of ABFRL by Madura is around 75%, and in terms of margins also, Madura has performed very well, 15.6% margins versus the normal margins of ABFRL at around 7%. So, if we see, the demerger will actually have two separate entities and will have different capital structures, and this will help augment the growth in terms of both demand and in terms of profitability. Now, there was a city note on ABFRL which came out, and they've given a target price of, they've maintained sell, of course, with a target price of 220, and they've said that it is MFL has relatively witnessed a moderate growth and higher profitability as compared to ABFRL as a whole, so it will be beneficial to MFL, and they've said that it will ABFRL will witness some kind of equity dilution due to this proposed funding that they've said that they'll make funding in the next 12 months. And the demerger and fundraising should aid the investors, will take away the concerns around the capital structure and the capital allocation that was there in the ABFRL before. It believes that the impact of ABFRL growth and profitability will be the highest amongst their coverage. And lastly, in terms of stock, the stock is run up today. However, the stock was under pressure since the past 1 year. So this is the overall view of ABFRL.
Well, thanks Mahima for that. Let's get in our guests. We have Rohan Mehta, founder and portfolio manager, Total Wealth, and Swati Hotkar, senior equity technical analyst research at Nirmal Bang Securities. Welcome to both of you. Let's start with you, Rohan. You heard about Mahima talk about the details of this demerger that's going to happen. Now, while the stock hasn't done too much in the last 1 year itself, we're seeing this rally today. What are you making out of this demerger? We saw Citi continues to maintain a sell rating on this. Do you see some sort of value creation happening post the demerger?
Yeah, see, 1 plus 1, if you can do 1 plus 1 or 1 minus 1, it doesn't multiply, right? It has to have a reason out of it. And I don't know, it's just a structural, demerger which is going to happen because both of the brand individually were doing decent enough to it. But see, I would look forward for a very, very competitive space about this products, right? Because it's a too crowded space. A lot of, startups are coming, a lot of, different fashions are coming. And here it is the space of a huge capex and, again, a lot of spending on the brand. And that is what we are focusing on. And we are seeing in the numbers also. If we see it made a loss of nearly about 600 crore rupees. So not very bullish on it. Maybe let us see once it is done. But I don't see a very, really a big value creation happening because of this demerger.
Okay, so it would be a void. And if you have the opportunity, considering the kind of run-up that you are seeing today, it would be a sell, right, Rohan?
Yeah, sure.
Okay, fair point. Let's jump straight into the questions then. And we've got Karthik from Chennai who's asking the first question. It is not a specific question, but he's asking about a space. So he's asking about renewable energy and the power sector in general, based on valuations and based on potential right now. Rohan, what would be your top picks?
Yeah, see, if you see onto the renewable energies, I think a lot of the stories has been already been discounted, and that is what the premium we are paying to a lot of companies which are exceptionally high. Let us not forget it's a pure capex wise business, plus a lot of competition, and the price is dropping. Giving an example, solar panels which happen to be nearly about 28-30 rupees a year back. Now it is 14 to 15 rupees. So see, it's good, it's futuristic, but do I want to give like in 80-70 times revenues to it, P multiples to it? This is a questionable point. So as of now, we are not looking forward for too heavy structures. Let us see onto the point. But if you are holding, I don't think so there is any problem into holding for it.
All right, understood. Next up, we have a question from Sri Kishore Sharma from Bihar. Now, we're talking about two counters here, BSE and CDSL. Now, this is from a longer term perspective. For 3 years, they've already bought the shares at 762 BSE, so quite a considerable profit there. And CDSL at 1,241 a piece. Now, Rohan, we're seeing the stock, BSE stock, over 1.5% up in CDSL. A bit of a downturn there, about 0.5% down. From a 3-year perspective, what would you suggest somebody who's holding on to the stock?
Yeah, first of all, congratulations to the investor, because BSE happens to be now the best performer stock in Nifty 500 in last fiscal financial year. And CDSL also looks forward for very interesting thing, looking the growth story of the whole financial market. So I believe both of them should be hold. And if you're getting CDSL a bit more deeper, nearly about at a valuation of somewhere around at the price of 1,500 to 1,700, it should be added more. So both a buy from my side, buy and hold.
All right, sorry to keep you waiting, Swati. I'm coming to you on this next one. Hari from Chennai is asking about Imagica, and he's looking at a short-term and a medium-term view on this particular counter. I don't think that he's bought yet. He's asking whether to buy at this point and what the view is for the short to medium term.
Yes, the overall view on this particular counter, Imagica, is really positive. I believe that on the technical front, the stock is trading above all the important moving average, and it's on the verge of giving the breakout of its 52 weeks high, which comes to around 90 levels. From the past few trading sessions, we are witnessing that this particular counter is in the consolidation phase, and it was in the accumulation phase between 72 to 75, 76 levels. And I believe that this rally is likely to be extended up to at least 100 to 120 levels. So definitely fresh positions can be accumulated. And if you're getting any dips towards 270, one can add on. Maintain the strict stop loss of 67 rupees for immediate target of 120.
All right, Swati. Next one is also for a shorter term perspective for 6 months. This one's from Lavish from Indore. Talking about two counters, Snowman Logistics that they bought at a price of 74, and it's currently trading close to that only. And the other one is Jamna Auto that they bought at 135. We can see what Jamna Auto is doing. It's close to that price as well. From a 6-month perspective, do you see some sort of upside in both these two stocks?
See, Snowman Logistics is definitely one of the strong counter on the daily technical charts pattern. The stock has given the formation of the flag pattern and it's on the verge of the breakout itself. 77, 78 level that is acting as a cluster resistance zone if we look towards the past history. Once the stock manages to give the breakout of the same level, I believe yes, positive momentum can be seen into this particular counter, which might take a stocks towards to 90 to 100 levels. Yes, definitely one can hold their long positions because his buying price itself is close to the current market price. I will give a stop loss of 70 rupees and hold your long position for immediate target of 90 to 100 levels. Jamna Auto, as of now, the view is a bit cautious because from the last 4 months, we can say that it's facing a very strong resistance of 140 levels. Now, this will be the third to fourth attempt the stock manages to, if it manages to give a breakout of 140 levels, then only we can witness some sort of a positive momentum. But as of now, it is just in a sideways zone within the range of 115 to 140 levels. I will suggest to hold the counter but maintain the strict stop loss of 125. If it's break that level, more selling pressure is likely to be witnessed into this particular counter. So as of now, it's a hold from my end, but maintain the strict stop loss of 125.
All right. I'm going to take Mohit's question next, and he's asking about Campus Activewear, which is bought at levels of 289. His time horizon is about 2 years. Rohan, what's the view on this particular counter? And in the footwear space, would you suggest that this is the best option available?
Hello.
Yeah. Rohan, tell me.
So Campus, if you look forward, we've seen Campus very detailed, and that time it was trailing in 120, 130 times, and then stock nearly fell nearly about more than 50%, if I'm not wrong, 30 to 40 or 50%. So I still find there is nothing more onto the point. It's the highest selling shoes, we can understand, but there is a huge competition over there. But I still, the Mirza International Red Tape would be a better option than Campus.
All right, got it. Next up, we have a question on YouTube. Now, this is a very interesting question from JJ. And Rohan, this one's for you. They say that if they can do a SIP for the next 5 years in any stock, which one would it be? Is there a pick within the across sectors maybe that you would suggest investing into?
I think I know the answer of this one.
So I'll tell you, I've been a fund manager of a SIP stock, and believe me, it doesn't work.
Yeah.
It doesn't work. See, the best stock if you want to do a SIP is Junior Bs, that is Nifty Next 50. Believe me, it is an auto flush philosophy. You not have any emotional point of view. Any investor who is looking forward for a decent return of 15 to 18% on a longer term scale, close your eyes, buy Nifty Bs. Nifty Junior, sorry, not Nifty Bs.
Yeah, Nifty Junior. HCC, okay, I must admit that I'm not too sure of what is being asked here, because we've got a viewer who's tuning in right now, and he's Balasubramaniam. He's writing in and he's asking about HCC, which he's bought since 2017 at an average price of 39. It's currently trading and it's available at 34.75. It's up about 1.3%. He's asking about what he should do with this, and he's wondering whether it's trading currently. I see that it is. Rohan, do you have any specific advice on this counter?
No, sorry, I don't track it very close.
Swati, can you tell us anything about the technical levels?
Yes, on the technical spurt, as of now, it is just into the consolidation phase between 30 to 36 levels, and it's facing a very strong resistance of 50 days moving average from the last couple of trading sessions. I believe that he can hold the long position but maintain the strict stop loss of a 30, because 30 is acting as a very strong support level provided by its 200-day moving averages. So hold your long positions, and I believe up to this rally can be extended up to 40 to 45. At that point of time, he can book the profits or exit the long positions.
All right, got it. It's time to slip into a short break, but after the break, we'll take more questions, so stay tuned.
Hi, I'm Tanuj Bhojwani and I run PeoplePlus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money,
Welcome back. You're watching Ask Profit. Let's start with the questions again. This one's from Sujay from Kolkata and this one's on Bandhan Bank. Swati, this is for you. This is from a 3-month perspective. Now, they've bought the shares at 180 a piece. It's currently trading around 191, so a bit of a profit there. Would you suggest holding on to for the next 3 months?
Yes, definitely, because he has bought at a very low levels. The stock as of that point of time was trading in under the oversold zone. Yes, definitely, we are going to witness some sort of a reversal in this particular stock. I believe its risk-reward ratio is also favorable at the current market price, and the stock has just given the breakout of a downward sloping trend line. That is a very short-term trend line as such. Upside rally can be extended up to 210 to 220 levels. So this will be the target for the coming few trading sessions. So you can definitely hold on this particular account and maintain the strict stop loss of the CMP itself. 180 will act as a very strong support levels and hold for a target of 220 rupees.
All right. The next question is coming from Jay Krishnan. He's writing in from Kozhikode and he's asking about Suntech Realty, which he's bought at levels of 477 for the medium term. He's asking whether he should sell this and shift to something like an ABB. Rohan, what's the view on this one?
So Suntech, I would not recommend to hold, but at the same time, I would not say, to put money into ABB. The reason is ABB is already into that spree, getting it at 100 times of valuation. Great company, but not recommended to go forward for it. So Suntech is a sell, but, I would not recommend an ABB to swap with.
So then let me follow up with which company you think that you can get into if you sell Suntech right now.
So if it's into realty space, I don't have much of an option. But if you look forward for a recent buy, which we did, we like a company Indigo. I think so. It's a pure turnaround story. The stock has done decent, but there are a lot of space here. We are expecting nearly about 6,000 to 7,000 rupees of price in 1.5 years.
You're talking about Interglobe, right?
Yeah, so Interglobe, sorry. Yeah.
All right. Next up, we have a question from Amit Rastogi. This one's on Nuvama. Now, this is for a longer term perspective. Rohan, they bought the shares at 3,400 a piece. And if you look at the stock performance in the last 6 months, it's doubled the price. But for the next 3 years, okay, it just says long term. Okay, so from a longer term perspective, would you suggest holding on to this, or would you suggest maybe shifting to some other stock within the space?
No, I think so. It is doing superior. Being into the same space of the business, I understand what they have achieved and what they are going forward for it. And I believe that as an asset management company, they are doing fantastic. So keep holding it. Numbers would be much more better in coming 2 to 3 years. At 17,000 crore of market cap, I think so. Still, it is available at a much decent valuation.
All right. Shivram from Hyderabad has got a question on two frontline companies. One of them is Tata Steel, which he has bought, I believe, at levels of 105. Let's pull up the chart and see where it's currently trading. It's at 163, so he's making quite a bit here. And he's got HDFC Bank, which he's bought at levels of 1390. And the stock again is up. So he's bought very close to the low point, if I'm not mistaken. Swati, on these two counters, what would the advice be? Would you hold or would you exit at these prices?
See, both the counters are really doing very well on the technical front. Regarding the HDFC Bank, he has just picked up at a very right point of time. I believe, yes, definitely we are going to witness very strong rally into the HDFC Bank, at least up to 1560 to 1600 levels on the high side. So it's a hold from my end on the HDFC Bank. Tata Steel, yes, we have seen a very strong momentum in this particular stock also. Now it has just touched its all-time high, new all-time high, which comes to around 163. 90, it has surpassed that level. And I believe this pullback rally, or say this positive momentum rally, can be continued towards to 175 to 180 levels. If he wants to keep a trailing stop losses, I will suggest to maintain the strict stop loss of a 158. That will act as your profit stop loss, and you can hold on your long positions.
All right. So the next question is from Samir from Kolkata, and we're talking about Birla Soft. They haven't mentioned the buy price of the stock, but what kind of target do you have on this stock, and any sort of other levels that you should watch out for?
Yes, as of now, the immediate resistance level comes to at around 790 to 795, which is acting as a strong resistance level provided by its 50 DMA. Once it manages to give a breakout of level, I believe the smooth rally can be seen into this counter up to 850 to 860 levels. So I will suggest to hold on as long as this particular counter maintain the strict support of 745, which is acting as a previous range low. So maintain the stop loss of 745 and hold your long positions for a target of 860 to 850 levels on the high side.
Okay, coming back to you on Ashoka Buildcon at levels of 161. This is a question, I'm trying to get the name, from Rakesh Reddy. He's bought, I believe, at levels of 161, and he's looking to find out whether to hold or sell for the short term. What's the view, Swati, on the charts?
Yes, it's a hold from my end because this particular counter is on the verge of the breakout. It's forming the W-shaped pattern on the technical front, which is a very strong technical setups on the daily as well as on the weekly chart. I believe this momentum rallies can be continued and can see the level of a 180 to 190 level. So hold the long positions. If possible, maintain the strict stop loss for 160 and carry the long positions for a target for 190.
All right. Next up, this one's from Vikram from Gujarat, and he says he has purchased Peninsula land at 4.7 a piece, and this was years back. Now can you pull up the chart for this one? Yes, it's trading around 51 rupees right now. Rohan, do you have coverage on this stock?
No, I'm sorry, I don't have a coverage on that.
All right. So Ati, now the question here is, if from the charts, if you can tell us this, is this a good time to book profits into this stock, and considering there's quite a profit there from being the buy price at 4 rupees or 5 rupees, and now it's at 51, or should you maybe continue holding on to it for a bit longer?
Yeah, I will suggest to continue for a longer duration as well, because he has picked this particular counter in a single digit and it has given a very good reward as such. And as of now, the counter is just trading above all the important moving averages. And if we look towards the last few years data, at least 3 to 4 years data, the stock has never given the breakdown of 200-day moving average. It's always test that levels, and again we see the new bounce back rally on the higher side. So as long as it's maintained that support level, I will suggest to hold on. Now, as of now, it comes to at around 45 levels. So hold the stop loss of a 45, carry your long positions as long as it continues on the higher side. I believe for a medium-term target could be a 70, and above that levels we are likely to witness the stock will enter into the 3-digit as soon as possible. So what do you founder with a trailing stop loss of a 45 levels on the downside?
That's quite an impressive target for Peninsula Land. Very quick question. Satya is asking about Indus Towers. He's sitting on profits of as much as 30%. He's asking if we should switch not just the company but also the sector, Rohan, to something like an Indian bank. Would that be a good idea?
See, I don't understand how Indus Tower and Indian
South
Bank.
Indian Bank.
South
Indian Bank. Sorry, apologies.
Yeah.
South Indian Bank.
So I think so. Comparison of Indus Tower, I think so. South Indian Bank and also Indian Bank both look much more interesting. So it's a good swap, but I would recommend an Indian bank more better than a South Indian bank.
All right.
All right. Thanks, Rohan and Swati, for joining us on the show today and for answering so many questions for us. And viewers, thanks for tuning in. And if you were not able to take your questions today, we'll definitely try and take them tomorrow. But don't go anywhere. We have lots more lined up on the other side. Stay tuned.
AI is revolutionizing how we work, play and connect. It's not just about the tech, it's about the impact on humanity. Discover the secrets behind the world's most powerful technology, from enhancing our lives to shaping the future. Don't miss All About AI, your ultimate guide to AI brilliance.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Benchmarks trade with marginal cuts after a flat open. Sensex trades at 73,900. Nifty hovers around 22,400. Most sectors trade in the green, led by consumer durables, media and realty. On the other hand, IT sees weakness. And woes deepen for Vistara as the airline asks pilots to sign a new pay structure by March 15th. Sources say more flight cancellations and delay expected during the day. Meanwhile, Aditya Birla Fashion jumps over 12% in trade as the company evaluates vertical demerger of Madura Fashion. And Tata Technologies gains on executing JV with BMW to deliver automotive software for the auto giant. Hello and welcome. This is Hot Money. I am Agam Vakil, and in this show we take you through all the stocks which are buzzing in trade and of course stocks which have been the flavor of the season of late. But before that, a quick look at the markets, and we are looking at very quiet cues coming through. It's a subdued day of trade, to say the least. We have seen marginal weakness as far as the benchmarks go. The Nifty is down by around 0.2%. And the Bank Nifty as well is largely flattish. We haven't seen too much change there either, as you can see on your screen there. And not too much to speak for when it comes to the key contributors of the Nifty as well. Let's very quickly pull up that list. So while we do have some amount of weakness in ICICI Bank as the key contributor towards the decline, HDFC is balancing that bit out by advancing. Of course, HDFC has a higher weightage there. We have Bajaj Auto and Tata Motors, of course, also reacting to the kind of trends that we've seen with respect to the volumes for the month gone by. It's something that we're going to talk about that in the show as well. And L&T and Reliance Industries and Infosys, on the other hand, weighing on the indices. Let's move on and talk about the broader markets. And again, this is where we have seen a little bit of an outperformance coming in. And the mid-cap index, in fact, is near its day's high. So we certainly are seeing a lot of traction there. Even in terms of the small cap index, we do see a lot of gains coming in, and of course up by around 0.7%. That's largely how things are panning out. In the broader markets, we do see gains to the tune of nearly 12% in Aditya Birla Fashion. We also have another Macquarie note on Aditya Birla Capital, which has led to the stock advancing by around 9% as we seek. So, a lot of gains coming through. Tata Technologies is the other one, which is also picking up steam, up around 7%. And Varroc Engineering up by just as much. So a lot of counters out there were showing substantial gains in today's day of trade, and we don't have too much to speak for when it comes to declines. There's hardly any momentum on the declines. If you consider something like an Anand Rathi, that's down around 3.6%. Remember, Anand Rathi's had a tremendous run, and Kaplan Point is the other one, which is also down around 3.5%. But none of these counters, at least as far as some of your relatively larger mid and small cap counters go, are losing more than about 3.5%. That said, let's take a look at all the stocks that we're going to talk about in the show today. So we are talking about Aditya Birla Fashion and the potential demerger which is on the cards. We're going to talk about a whole list of, defense companies, of course. Data Patterns, of course, is one of them. But Tata Technologies, on the back of the tie-up that it has had with BMW, auto stocks, metal stocks, as well as Bata and what's going on. And to take us through all this, where we are going to be in conversation with Avinash Gorakshakar, the Director of Research at Profit Mart Securities, who is also joining us on the show. Avinash, good morning. Thank you so much for joining in. Avinash, before I come to you, let's get in my colleague Mahima to give us the latest update on Aditya Birla Fashion. Mahima.
Right, Agam. So, as you rightly mentioned in the start of the show, Aditya Birla Fashion is set to demerge its Madura fashion business from its entities. So, there will be two separate entities. And now, in terms of both these demerged entities, they will act as independent growth engines, and both will have different capital structures. Now, the resulting company, that is the Madura Fashion Limited, will have brands like Louis Philippe, Van Heusen, Allen Solly, Peter England, and also have brands like American Eagle, Reebok, and the innerwear part out of Van Heusen, whereas the ABFRL will consist of value retail like pantaloons, ethnic portfolio TCNS, which is recently acquired, luxury brands, and the digital brands like TMRW. Now, in terms of financial impact, well, the Madura segment contributed around 6,031 crores in 9 months FY24, which is around 63% of the total consolidated revenue. In terms of EBITDA, also the Madura segment contributed around 75% to the total EBITDA. In terms of margins also, where Madura segment margins stood at 15.6%, the consolidated margins stood at only around 12.5%. Now, this merger will basically augment the business, and it will revive the business of ABFRL, and it will also help augment demand and growth in terms of the competition that the retail sector is facing. Now, there was a Citi note on ABFRL's demerger. They've maintained sell with a target price of 220. They've said that the Mudra fashion lifestyle will witness a relatively moderate growth and higher profitability, even in terms of cash flows. And they've said that the demerger and fundraising should aid the investors, and it will also get around the complexity of the business and capital allocation that was there previously, and it believes that the impact of ABFRL growth and profitability will be highest amongst their coverage. Now, the stock has seen a lot of pressure in the past 1 year. It has been down around 2%. However, it's been up in trade today. So this is the overall view of what the street is making out of ABFRL's demerger.
Well, that's an overall comprehensive view on how things could pan out for Aditya Birla Fashion. Mahima, thank you for getting us those details. Avinash, welcome to the show. Your take on this one?
I think definitely, in terms of value unlocking, I think this is definitely a positive development, and I think the stock has also been reacting positively to this development ever since this news flow came to the market. My sense is that the management is planning a vertical merger, which means that shareholders of ABFRL would be given equal amount of shares for the business based on the valuation of the Madura kind of fashion business. And this has been a very stable contributor to the top line, to the profitability for a very long period of time. So my sense is that this is a welcome move. I think the markets would definitely look at the fact that this branded entity, once it gets listed, is definitely going to enjoy, fair to premium kind of valuations, and where growth potential is, quite solid considering the kind of consumption, trends which we are seeing in the market as of now. And I think even future numbers going forward, especially for FY25 and 26, once the management throws some more light on the kind of growth potential the management sees in this business as an independent entity, that would actually drive valuations even going forward. So I think net it's a good positive for ABFRL. And obviously, for the shareholders, because they would be able to bet on a premium kind of garmenting business as a separate entity.
All right. Well, there you have it. That's the view on this particular, demerger, which is on the cards. Let's move on and talk about the defense sector. Of course, one stock in particular does stand out, but I'm going to get in my colleague Anushi to talk to us about the latest that we have. Anushi.
Right, Agam. So a whole host of defense stocks are in buzzing today. Well, this is on the back of the Jefferies note that has come out specifically discussing about the defense themes that has been going on. So they have emphasized on the growing space for the defense area, about $100 to $120 billion of opportunity over the next 5 to 6 years, which will accelerate their CAGR growth to about 13% in this course of between FY23 to FY30. Again, with this now further expansion in this defense opportunity is seen at a further 21% of CAGR growth between FY23 to 30. Now, coming to some stock specific action over here, the note has initiated coverage on data patents with a target price of about 3,545, which implies about a 39% of an upside compared to yesterday's closing. So a couple of reasons they have cited. One is the revenue that they expect to go about 5x between the period of FY23 to 30. Again, another theme that has been playing on for most of the defense companies, the indigenization or rather the localization of defense spaces in India, which is expected to boost the demand going forward. Also, special focus remains on the company's key ratios improving, which is the ROE and the reducing working capital that are expected to be drivers for the company going forward. However, key risk also remains on the tech management for the company, so that remains on the watch out. Apart from that, there has been two special calls for other companies as well, which includes Hindustan Aeronautics. So this also has a buy call with about a 15% of an upside over here, with the projected product business to be driving growth for the company going forward, and the 22% EPS CAGR growth is what they are expecting in between FY24 to 30. The other one is BEL, wherein the company has set a target price of about 260, which implies about a 23% upside. Do note that BEL is already a market leader in the domestic defense space, and the current mix is like 70 to 75% of their revenue generates from the Navy and Army related business. So now going forward, it is expected to benefit from the zero debt and comfortable working capital balance sheet going forward.
Okay, well, Anushi, thank you for getting us a roundup of that particular report from Jefferies. Avinash, we've all known and have been talking about the defense sector for a few quarters now, and at the end of the day, they still are, a lot of them are trading at life highs. What's your view here? I know while the prospects are good and positive, but the valuation will also perhaps come into play now.
Yeah, I think you're absolutely right. I think, if you look at the order book of all these companies like Bharat Electronics, Data Patterns, Hindustan Aeronautics, Bharat Dynamics, all of them are sitting on at least the next 15 to 24 months of order book, which is giving them very strong visibility. And I think, the latest Promotional deal, which has been culminated, is going to obviously benefit players like Data Patterns. Bharat Electronics, which also was mentioned on the show, obviously is sitting on a very large order book of almost 30,000 odd crores. So my sense is that, going forward, if one were to take a position in any of these defense companies, while the opportunity is extremely attractive and large, I think one needs to take a slightly longer term view of at least next 12 to 18 months. One could definitely see significant upside over the longer term, but in the short term, I think most of the stock prices have multiplied significantly. So you could expect kind of a shorter term kind of, a normal kind of price range, some consolidation happening here. But I think these are defensive bets, and most importantly, post the elections, once the new government comes in, we could be getting some further announcements, on the defense budget, which the market is keenly awaiting. So I think, from a portfolio point of view, one can definitely chip in at current levels, but keeping a time frame of at least, 12 to 18 months. In the short term, the stocks may remain range bound, but longer term, yes, the risk reward still looks pretty good.
Okay, all right. In the long term, the risk reward is still favorable. And from there on, let's move on and talk about the metal sector. But before I do that, we spoke to Lloyd's Metals Rajesh Gupta on what to make of China's PMI data and the outlook on Chinese growth, because that certainly has seemed to have some sort of an impact when it comes to, the metals industry in India as well. Let's listen in.
In terms of the PMI data, etc., coming in, definitely the manufacturing cycle is a little bit down than, say, a year back, a little bit better than just before the winter. And again, I think that is also very seasonal as far as China is concerned, because from November to February, they are very, very slow in terms of their manufacturing process because of the weather, because of the holidays, etc. So I believe that the Chinese growth story is still there. When I visited the smaller areas, I still saw a lot of development that would take place, areas which are still quite backward, and I could see highways being built, railway tracks being built all over. So I can see that a lot of growth is still going to happen there.
Right, Avinash, let's talk about that little bit of a resurgence that we're seeing in the metal sector. Of course, yesterday some of these stocks were lending and leading the indices as well. The question really is that, can this level of revival that we've seen in China lead to perhaps better prospects for the commodities and thereby have an impact on the metal sector in India as well?
Yeah, I think clearly, demand trends seem to be showing that there has been some uptick, specifically in metals like copper, where prices have shot up quite significantly. My sense is that, you'll have to wait for at least another 1 or 2 months to, confirm whether this is a sustained kind of rise. And once, China sees a very resurgent demand and starts buying metal in a big way in the global market, then that is definitely going to impact prices positively. We have been seeing that China has not been a big buyer in the metal market for a very long time. Demand has been quite depressed for a long period of time. So I think yesterday's up move is definitely welcome, but I think you need to have at least 1 or 2 months of confirmation to ensure that these trends are slightly sustainable and medium term in nature, because commodity prices are volatile. But I think copper specifically is definitely showing good signs. I think globally the prices have shot up. There's been some supply constraints. So I think we'll have to wait and watch. But definitely I think metals as a kind of an asset play, specifically, looking at companies like Hindalco or for that reason Vedanta, Tata Steel, they could be considered for a slightly medium to long term position because most of the risk has been factored into the price. So I think you will have to wait for the March quarter to get over, and obviously hear out the commentary from most of these companies, which would give you a better indication of what things are going to happen in the current financial.
Sure, Avinash. Well, on that note, stay with us. We'll just slip into a short break and be back with more stocks. Back in just a bit.
Hi, I'm Tanuj Bhojwani and I run PeoplePlus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit.
Welcome back to Hot Money. Well, we have another company which is actually doing very well in the bourses today, and that's Tata Technologies. And of course, it's in focus because of a joint venture agreement with BMW Holdings. But let's get in my colleague Puneet to tell us a little more about this particular JV. Puneet.
This agreement is very, very key for Tata Technologies. Looking at the key details as per the exchange filings now, this JV expected to deliver automotive software, which includes software-defined vehicles. Now, for the premium vehicles, there is a very high content for software, and Tata Technologies works with a lot of these EV as well as the premium players. While they said that the automotive software-defined vehicles solutions for BMW is what they are going to offer. The current stake is 50-50 by both parties in this particular JV, and they say that they will establish automotive hubs in Bangalore, Pune as well as Chennai in India. Now the focus will be delivering automotive software and as well as SDVs, the software defined vehicles for BMW, while they say that this will lead to transformative solutions for business IT solutions as well. Currently, it's very interesting that lately JP Morgan had written a report on the ER&D segment where they had an underperform rating on Tata Technologies, which had a target price of roughly 800 rupees, which is roughly 20-25% below the current market price. Now, they had said that high client concentration was a key factor which was a problem for Tata Technologies, and JVs such as this with the likes of BMW will be key to get out of this high concentration. They had also mentioned that 46% was the current revenue from these anchor clients such as VinFast previously that they had worked with in 2021, and they say that they needed big evidence such deals like JV with BMW to have a positive view on the stock. So this JV is going to be definitely a very big key trigger for Tata Technologies, and more details are awaited from the same. Back to you.
Right, that's a view on Tata Technologies. But Avinash, came up with an IPO which was offered at a discount to its peers like Kpi Tech and a handful of others. Since then, on the day of the IPO, it had gone all the way to the mark of 1,400 rupees per share and then corrected all the way down to, well, 1,050 odd rupees. Now, once again, we are looking at a spark here. How would you deal with Tata Technologies?
I think, the stock looks pretty interesting considering this JV between BMW and Tata Technologies, which is a 50-50 joint venture, looks to be a very promising opportunity. Of course, we would be getting more data points, once the March quarter numbers are released by the company, and we could get some interaction from the management commentary on this deal. But I think, fundamentally, Tata Technologies appears very promising considering the fact that, the cash flows in this business are extremely robust. They are a debt-free company. And most importantly, they've got a decent order book, at least for the next 12 to 18 months. And they operate in the niche ERD, kind of space where I believe, they've got marquee clients. They've been working in the aerospace sector with Airbus also in a very close manner. So my sense is that probably this year should be a good takeoff year for them. FY25 looks definitely much better compared to last year. And if they sign up some new deals, the markets would get definitely a solid comfort from this fact. In fact, you're right in saying that after the listing, the stock touched a high of 1,400 rupees, then it got corrected to 1,000 odd rupees. And again, now the stock has again started showing some positive momentum. So I think, from a longer term perspective, this could definitely be added in your portfolio. I think definitely looks promising, but I think you need to give a time frame of at least 12 to 15 months to get a decent risk reward going on from here.
Okay, there you have it. Just give it some time before you get in, but very, very strong fundamentals as suggested by Avinash. And the final theme that we want to address today is butter, where we talk about how things are going on there. Now, Bata says that it is looking to explore opportunities via new products and wants to improve its focus on youth management, said in its recent analyst report. Now, we all know about the kind of challenges that Bata is facing. In fact, at one point in time, about 3 years ago, it was one of those priced stocks to have in your portfolio, but has since come off substantially. But, with respect to the latest, we have my colleague Sasha, who's joining us to give us more details with respect to what it has in store going in.
Bata has braved ups and downs since 2000, but the brand's legacy held it in good state. But now what it seems is that Bata is struggling to stay relevant in the market. Even the once loyal customers are making a switch to upstart brands like Metro, Asics, and a host of private level entrants in the online space. Now, in the past, utility products and affordability helped Bata become the go-to brand, but its low fashion quotient is averting repeat purchases, and hence the growth has been missing. Now, if we look at the last 5 years, the household footwear retailer has seen its net sales grow a meager 5.6%, which is the slowest compared to its peers, Metro brands and Relaxo footwear. Now, this number is even bigger disappointment since the brand has been trying to sharpen its image and it's selling more premium brands such as Hush Puppies, often ignoring its own, the Bata. Bata's shares have plummeted 16% over the last 6 months. Now, while this could be partly because of the inflation-led slowdown in the mass segment, from a long-term lens too, the stock is in red. it has given a negative return of 3.6% in the last 5 years versus Metro's 144% return and Relaxo's 94% return. Now, the management has made multiple course correction in terms of brand perception, marketing, distribution, expansion, bringing new products to resonate with the youth, and even management churn. But that has not really given a positive return. Analysts believe that Bata is still far from being an aspirational brand. Incremental benefit from the online channel shall be limited given the current portfolio. Similarly, gains from a widened wholesale channel would be limited as it is a value-driven channel, which is a category where Bata lacks. Overall, it is clear that Bata is facing an uphill task against the competition. However, with the right adjustments and a focused approach, there is still hope, according to some analysts, for the brand to regain its hold in the market and appeal to the evolving demands of today's consumers.
Right. Thanks so much for that, Sesha. Avinash, Bata has always been a tough one, and it's been a tough one of late. What's your take on this one?
I think my sense is that once inflation starts coming down, I think you're going to see a rebound in the footwear market. And I think a lot of downturn has already happened across the footwear sector. We've seen most of the footwear companies posting tepid performances in terms of top line growth, in terms of margin kind of erosion. So I think Bata has been facing not only competition, but definitely some demand compression. I think how the management now tackles the youth market by introducing some new products, by ensuring that its marketing is more aggressive, I think that is going to decide the next phase of growth for Bata. I think from a fundamental perspective, over the next say 12 to 15 months, if the company does its marketing right and hits out at the right target segment, then I think you could see numbers improving. And I think probably the first quarter of this financial year, that is FY 24-25, would be a very keen season to watch. My sense is that they already have now transformed into a lifestyle brand, but how they focus on the youth segment is going to be important. So I think valuations apart, the market would be looking at the kind of the company puts in. So it's a hold, but fresh buying is only after we see the numbers, when they come out.
Okay. All right. Fair enough. Avinash, on that note, taking a moment to thank you for joining us and taking us through your views on the stocks and sectors that you addressed. And with that, we are completely out of time on this show. So that's a wrap on Hot Money. But don't go anywhere. Stay tuned to NDTV Profit.
AI is revolutionizing how we work, play, and connect. It's not just about the tech, it's about the impact on humanity. Discover the secrets behind the Brokerage, from enhancing our lives to shaping the future. Don't miss All About AI, your ultimate guide to AI brilliance.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices.
an exceptional year it has been for Maruti Suzuki. Stock, of course, is trading at almost all-time highs. Highest ever annual sales, 15 straight months of highest ever monthly sales. And the person who has been leading the sales task force at Maruti is here with me, Mr. Shashank Srivastava, Senior Executive Director, Sales and Marketing at Maruti Suzuki. Thank you so much for joining us today. Exceptional year. What led to this growth?
Yeah, so multiple of factors. There's no one factor, but multiple factors. First of all, the economy did really well. And as you know, there is a very high correlation between economic growth and the fortunes of the auto industry. So it's been, in that sense, very good overall economy. We saw some really good capex expenditure by the government, especially in the rural infrastructure and so on, which also is related and has a multiplier effect on the demand for automobiles. Third, we saw, as Maruti Suzuki specifically, we introduced the 4 SUVs, and that impacted our sales very positively because SUV is now the biggest driving force for growth in the industry. 26-27% growth for the SUV sector, whereas the overall growth in the industry is around 8.5%.
You spoke about rural. So what has rural growth been for Maruti, and how do you see it panning out from here on?
So rural has been very positive. In fact, this year, the growth is around 11.2%. That compares favorably with urban growth, which is around 7.2%. And in fact, rural, our overall contribution of rural sales in our total portfolio now is around 44.5-45%. So that's pretty large. For the industry overall also, it's grown to about 33-35%. So rural has been doing well. Apart from those capex expenditure on infrastructure that I spoke of, it has been a normal monsoon. Although at the beginning of the year, we were a little afraid that the El Nino will probably reduce the monsoon as such. But it came out to be roughly the average, long-term average was pretty close to that. Kharif sowing was pretty good. Rabi sowing going on is very positive. So I think that has affected positively the sentiment, and we do hope that in the future, the rural sale will continue to show a positive progress.
And what about your urban, what is the expectation from rural and urban growth for 2025?
Yeah, so pretty much similar. We do expect the rural growth to continue, especially if you have a normal monsoon. Of course, it is dependent on monsoon because that affects agricultural income in a big way, and that affects the sentiments quite disproportionately. So, and as you know, car buying is a discretionary purchase, so sentiments are very important. So we do expect rural growth to continue to be in the positive territory.
Earlier it was assumed that rural and small car segment are closely related. But since rural has shown growth, but the small car segment still struggling, do you see the income in the rural areas have shown significant growth?
Yeah, absolutely. In fact, if you look at the data from 2007 onwards, the rural growth I'm talking about auto industry has been higher than urban growth in all years except one, which was, I think, 2012. Otherwise, it's been always on the higher side compared with the urban growth. And largely because the rural incomes have been rising faster than urban incomes. Also, as I mentioned about the infrastructure getting better. So sentiments are quite positive. So yes, these are the factors which have helped rural become so big now in the auto.
Now, let's talk about WagonR has been one of the most successful products, and that's mainly because of commercial vehicle usage, the taxi usage. Now, what is the segmentation between personal vehicle buying and commercial vehicle buying, and what is the trend there?
Yeah, so you mentioned about the higher commercial usage. Actually, that's not true so much anymore. WagonR is the number one vehicle in the industry. In fact, for the last few years, is the only brand which is selling in the industry more than 200,000, sold more than 200,000 this fiscal year which just ended. There is a lot of personal buying in Wagon-R. In fact, the proportion is quite high. Earlier, people used to feel that since CNG is also an option available in the Wagon-R and it's a significant portion of the sale, people used to think that it's largely commercial which takes. It's not true anymore. In fact, if you see cities like Bombay, Pune, Mumbai, Pune, where the penetration of CNG in Wagon-R is like 70-75%. But it is largely the individual buyer which is using it. Of course, there are commercial vehicle sales as well. So that trend for usage of CNG vehicles for personal buyer has actually been increasing over the years, and it's quite substantial now.
And what about the trends in commercial vehicle buying?
Commercial vehicle buying a little muted. We have the super carry as one of our main commercial. That segment, super carry did not do as well. In fact, it had a little negative, and that reflects the overall growth in the commercial vehicle, in the small commercial vehicle space. But I think as the economy picks up, we have found a high correlation. If the economy goes up with a lag, you will see commercial activity also going up, and that would reflect on the commercial vehicle space. Fleet segment has done much better. Remember, in the COVID, it had fallen to about 1.5%, but this year it's been close to 12% or so. So it's taken the uptick back again, and hopefully that segment will also continue to do well.
For next year, Siam has predicted low single-digit growth. What is the expectation from Maruti in terms of growth?
It's actually similar, except that we should grow faster than the industry, of course. Like in this year also, we grew faster than the industry, helping us add to our market share. So we do hope the same thing will happen next year. And one of the reasons why, and people are asking why single-digit growth, and one reason is, of course, the base is pretty high now. Last year, we had some supply issues in the few months in the first quarter of last year. In fact, up to July, we had this issue of semiconductor-related components supply issue, which is no longer the case now. So not only the high base, the number of pent-up bookings which we saw in last year are no longer there, because you have seen much normal production from July of last year onwards. Also, the pipeline in the inventory pipeline is sort of more fuller than what it was last year. Last year, we started the year, I mean, if you see the 23-24 fiscal year, was with only 200,000 stock in the industry. We are ending with about 310,000. So there has been a build-up in that, although less than the 30 days norm, which we have. Average sale this year is been about 3.5 lakh per month, and the inventory of 310,000 is therefore less than a month's stock, but still much higher than what we had. So the pipeline filling may not be the luxury which will be available this year. So based on these combination. Also, the interest rates probably not fully built in the auto loan rates. 250 basis points was the increase in the repo rates. But as you know, auto loan rates are come with a lag. So only 130 basis points have been built in so far. So we expect 120 basis points to come in the next few months.
Okay, now let's talk about some of the plans that you have already announced, including your EV plan. 2025 is when we expect the EVs, but do you think, what is the segment that you would be thinking in terms of pricing strategy for EVs? So
we are first vehicle which we will be introducing would be in the mid SUV segment. So it's like a 4.3 meter vehicle, like the Grand Vitara type of SUV, and it will have a large battery, maybe a 60 kilowatt hour battery. So the driving range will be in excess of 550 kilometers. So that's a very positive thing. At the moment, we are making preparations to make the buying process and the owning process, the ownership experience of consumers to be without any hassles, and so that he feels very happy buying and owning electric vehicles. So we are preparing our plans accordingly.
Mr. Honorable Minister, Mr. Gadkari said that hybrids taxation, they have already sent the proposal to Finance Ministry for regularizing hybrid taxation. They are talking about 5% to 12% for 12% for flexi fuel and hybrids 5%. How significant do you think if this happens, will it be for you, because you are pioneers in a way for hybrids?
Yeah, so economically, if you go by the fundamentals of economics, a lower tax rate should reflect in lower prices, should reflect in higher demand, clearly. But we haven't seen official, we have to see what actually the rates would be, and we are building different scenarios, of course. But hybrids in the last 6-7 months have actually outsold the EV. EVs are at 5% duty, hybrids are at 43%. It's still a substantial gap. But I think the range anxiety which consumers are feeling in a EV still needs to be addressed through the charging infrastructure, which apparently is currently not fully accepted by the consumer. So hybrids do not have that. Hybrids are vehicles where you can they charge on the brake energy of the vehicle. They don't require an external charging. So I guess that makes it so much a good option in the current situation, and that's reflected in the sales figure if you see the last 6 months.
Do you think government should think about, there was a talk of carbon dependent taxation. Do you think that's a structure that should work for India?
I think there are positives and negatives about those type of structures. And we are a growing economy, and our carbon footprint targets also are different from some of the really developed countries. So I guess different philosophy would be, different types of philosophies would apply to powertrains in our country. And we'll have to see what the policymakers think about it.
And during the press conference, you spoke about the powertrain mix by 2030. Can you give us those targets for Maruti?
Yeah, so we have mentioned before, about 15% EV, 25% hybrid, and the balance 60% a mix of CNG, biogas, flex fuel, and gasoline.
Now, let's talk about some of the existing products. One is, of course, Jimny. Are you disappointed with the way Jimny sales have been? Because they have reduced quite a bit from where they started. And in fact, in 1 month, they were a little over 100. So is that disappointing for you?
If you're looking at the recent Jimny figures, yes, definitely. But if you look at the overall thing, it's a very niche segment. So we were at the beginning looking at around 2,000 to 2,500 per month type of sales. And the initial bookings that we had, remember we started the bookings in January in the Auto Expo. The actual vehicles were launched in June. And that's the time when we announced the prices as well. After which we saw some cancellations. Well, so far we have done about 18,000 Jimny sales. And that's around 1,800 a month. Or sort of figures, not so different from that 2,000, 2,500 mark. However, I would have expected it to be higher. But of course, one thing which we have realized is that while the bookings indicated that this segment is really well developed in India, the off-roading type of vehicle, but I think now in hindsight and now with the fresh data available, we think that is probably not the case. And to be sure, there are a lot of people who are passionate about cars, off-roading, adventure drives and so on. But I think that culture needs to be developed in the country.
Hi, I'm Tanuj Bhojwani and I run MedPlus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit.
Welcome back. You're watching Profit Insights with NDTV Profit. I am Mahima Vachrajani. Well, the auto sales number for this month, for the March month, have come by, and we're joined by Abhishek Gaushinde, Deputy Vice President Research Sheikhan by BNP Paribas, to discuss about what is the play between the urban and the rural segment and what these numbers means. Welcome to the show, sir.
Unable to hear any question.
Right. So I was just saying that the auto sales number have come in, and the numbers look pretty much flat for this year. The two-wheelers for Hero MotoCorp has performed pretty badly. There was expectation that the two-wheeler numbers will be up by 5% versus they've been down by 5%. But something like Bajaj Auto and in terms of two-wheelers, TVS Motors has performed well. TVS Motors, the two-wheeler sales has been up around 22%, and in terms of all of these, the two-wheeler stocks, Bajaj Auto has performed clearly very well. Now, in terms of how the numbers have, the Bajaj Auto numbers that came in today, well, the Bajaj Auto numbers suggest that the two-wheelers have performed well. In terms of total sales, they were around 3.7 lakh units versus 2.9 lakh units, which is up 25%. In terms of Ashok Leyland, moving on to how the commercial vehicles were doing, well, the total vehicle sales were down around 4%. The domestic sales was down around 7%. The MNHCV sales was down around 7%. Now, total domestic sales was also down around 9%. So, what Ashok Leyland is seeing that there is a downward trend in terms of the domestic sales. In terms of Maruti Suzuki has comparatively done well in terms of the passenger vehicle segment. The total sales was up around 10%. Domestic sales was up around 15%. Exports were, however, down 14%. So Maruti Suzuki is witnessing some kind of downtrend in terms of their exports. However, it has recorded highest ever annual domestic sales of around 17.93 lakh units in FY24. And in terms of exports, they've recorded around 2.83 lakh units in the FY24. Then we have Tata Motors, whose numbers also came in. Domestic sales were around 90,822. It was up around 2% year on year. In terms of passenger vehicle sales, well, it was up around 14% year on year. In terms of domestic CV sales, that was down around 10% year on year. Now, in terms of Eicher Motors, Royal Enfield, well, the March motorcycle sales were up around 4.6%. The exports were up around 23%. So for Royal Enfield, the exports has grown by 23%. So it's a good sign for Royal Enfield Eicher Motors. In terms of Eicher Motors commercial vehicles, well, The VECV sales is at around 11,242 units, down around 5.6%. The domestic sales are at around 10,500 units, which is also down around 6.6%. In terms of exports, well, it's only around 461 units, which is down around 11.4%. Now, in terms of auto sales in M&M, the total sales is up around 4%. 68,000 units roughly. The passenger vehicle sales has witnessed around 40,000 units versus that of 35,000 units. So it's up around 13%. So good set of numbers for M&M in terms of passenger vehicles. In terms of three-wheeler sales, well, they stand at around 5,200 units versus 5,600 units. So the three-wheeler sales have come down by around 7%. Now, total tractor sales at around 26,000 units versus that of 35,000 units. So the bigger commercial vehicles, the tractors are taking a hit completely this year. They're down around 26%. The total exports have also come down by 26%. And in terms of escorts, well, the total sales are down around 16%, domestic sales are down around 16.1%, and exports are down around 24%. But, well, there was a news flow around Bata. Well, Bata, to explore opportunities via new products and wants to improve, it's focusing on youth management, said in its recent analyst meet after witnessing a flat store sales in last quarter. But does this mean that Bata is losing its footing in India's crowded footwear space? My colleague Sesa joins us with more details.
Bata has braved ups and downs since 2000, but the brand's legacy held it in good state. But now what it seems is that Bata is struggling to stay relevant in the market. Even the once loyal customers are making a switch to upstart brands like Metro, Asics, and a host of private level entrants in the online space. Now, in the past, utility products and affordability helped Bata become the go-to brand, but its low fashion quotient is averting repeat purchases, and hence the growth has been missing. Now, if we look at the last 5 years, the household footwear retailer has seen its net sales grow a meager 5.6%, which is the slowest compared to its peers, Metro Brands and Relaxo Footwear. Now, this number is even bigger disappointment since the brand has been trying to sharpen its image and it's selling more premium brands such as Hush Puppies, often ignoring its own, the Bata. Bata's shares have plummeted 16% over the last 6 months. Now, while this could be partly because of the inflation-led slowdown in the mass segment, from a long-term lens too, the stock is in red. It has given a negative return of 3.6% in the last 5 years versus Metro's 144% return and Relaxo's 94% return. Now, the management has made multiple course correction in terms of brand perception, marketing, distribution, expansion, bringing new products to resonate with the youth, and even management churn. But that has not really given a positive return. Analysts believe that Bata is still far from being an aspirational brand. Incremental benefit from the online channel shall be limited given the current portfolio. Similarly, gains from a widened wholesale channel would be limited as it is a value-driven channel, which is a category where Bata lacks. Overall, it is clear that Bata is facing an uphill task against the competition. However, with the right adjustments and a focused approach, there is still hope, according to some analysts, for the brand to regain its hold in the market and appeal to the evolving demands of today's consumers.
Well, those were some interesting insights about Bata, but one stock which is clearly the stock of the day today, that is ABFRL, which did announce its demerger with Madura Fashion Lifestyle. They've said that Madura Fashion Lifestyle will be a separate listed entity. So ABFRL and Madura Fashion will be two independent growing entities. Now they will also have distinct capital structures, and going forward will create value creation opportunities. All investors who are invested in ABFRL will have identical shareholding in the newly formed entity. Now, just to give you a brief idea about what the resulting company will consist of, well, the resulting company will consist of brands like Louis Philippe, Van Heusen, Allen Solly, Peter England, American Eagle, Forever 21, Reebok, and the innerwear side of the Van Heusen. And the demerged company, that is ABFRL, will consist of value retail like Pantaloons and Style Up, its ethnic portfolio of TCNS, which it has recently acquired, Tasva, Masaba, Jaipure, Sabyasachi, etc. Luxury brands like The Collective, Galleries, selected luxury brands, and digital brands like TMRW. Now, in terms of what this will mean in terms of financials, how will this impact the financials? Well, the Madura segment has contributed around 6,000 crores to ABFRL's consolidated revenues in 9 months FY24, and this accounts to around 63% of the total consolidated revenue. In terms of EBITDA, well, the EBITDA for Madura segment for 9 months FY24 stands at around 990 crores, which is again 75% of the total consolidated revenue of ABFRL. And in terms of margins, well, Madura segment has better margins. Their margins for 9 months FY24 stood at 15.6% versus that of the total consolidated margins at 12.5%. And lastly, there was a Citi's note on ABFRL. They've maintained sell with a target price of 220. The stock has been under pressure, but today the stock has done pretty well. It's up around 12% right now. But that's all we have for the show today. Stay tuned to NDTV Profit.
AI is revolutionizing how we work, play and connect. It's not just about the tech, it's about the impact on humanity. Discover the secrets behind the world's most powerful technology, from enhancing our lives to shaping the future. Don't miss All About AI, your ultimate guide to AI brilliance.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
you can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's
Benchmarks trade with marginal cuts in a flat day of trade. Sensex trades below 73,900 while Nifty hovers around 22,400.
Sectoral action mixed. Media, consumer durables, realty trade higher. On the other hand, IT sees some weakness.
And woes deepen for Vistara as the airline asks pilot to sign the new pay structure by March 15. Sources say more flight cancellations and delays expected during the day.
And Aditya Birla Fashion jumps over 11% in trade today as the company evaluates vertical demerger of Madura Fashion.
Tata Technologies gain on executing JV with BMW to deliver automotive software for the auto giant.
Good afternoon and welcome. You're watching Market IQ here on NDTV Profit. I'm Harsh Saita. With me is Priti Chaudhary. And we'll try and cover as many stocks as possible today, especially the ones that are buzzing on the back of news, try and get you some IQ on that. But first off, with regard to where markets are at, you're looking at 0.1% of a cut on the Nifty 50. And, it is definitely a day where the markets are looking range bound, 110 point kind of a range or a band in which markets have been trading. And in terms of who the contributors are, it's been HDFC Bank all the way. When it comes to both the contributors yesterday as well as today, both days we've seen HDFC Bank come out as the top contributor, at least as of now for today. 37 points odd contributed to the 60 points among all, or 80 points among all positive contributories that we are seeing. So definitely that one seeing good traction. Outside of that, you're seeing on the other hand, another bank, ICICI Bank, RIL, both of them facing some amount of heat, some amount of pressure in trade today. You're seeing 1.5% lower on ICICI. TCS also seeing a bit of a cut in trade today. Among the top gainers on the Nifty 50, you're seeing Bajaj Auto lead the way, 2.5% higher. You're also seeing BPCL up 2.5%. Bajaj Auto coming out with a strong set of numbers again for the month of March. That one is up and away above the 9,000 rupee mark now in trade, very close to its high of roughly 93.57, which it clocked, which is also the 52-week high on the stock. So doing very well in trade. Let me quickly take it to some specific names as well, which are doing fairly well in trade. Let's pull up something like a JTL Industries. That one record numbers posted, 7% higher in trade. ABFRL also doing very, very well, 12% higher. Uflex doing fairly well in trade as well, 7.5% higher. Tons of stocks on brokerages as well, and we'll cover that, Smriti and myself, in some of the stocks that we need to look out for. Smriti.
Yes, definitely, Harsh. We'll do that. But before talking about more stocks, we have a guest today with us, and that's because Mumbai is looking at a scorching summer as heat wave between April and June, as the Indian Meteorological Department warns of rising heat wave days higher than usual this year. To discuss the impact of the rising temperatures on the upcoming general elections, the El Nino impact and more, we're joined by DS Pai of IMD. Welcome, Mr. Pai, and thanks for taking the time out.
Hi.
So we're seeing IMD come out with a warning about higher than normal temperatures, especially when these months are also the time for general elections, we're going to see the election officers and other staff members out in the heat. What parts are we talking about for these where these warnings are issued?
See, first of all, we are giving the seasonal forecast, which we had released yesterday, that giving a forecast for the next 3 months, April, May, June, which is the most prone for heat wave over Northwest India, Central India, and Eastern part climatologically. In addition to that, we are also giving a weekly forecast for the next 4 weeks, and then daily forecast for next 7 days. So this will give you an idea about which are the region likely to impact, heat waves are to be above normal, day to day or week to week or in the season itself. So just like yesterday we had said that this year we are expecting above normal heat waves over generally heat wave prone area of Northwest India, Central India and Eastern part. And almost in the southern part also, except that along the west coast and Northeast India, most parts of the country we are likely to get. And accordingly, based on this forecast, the local government also takes appropriate action for elevated temperature rise, which are impacting, posing significant risks to vulnerable populations like elderly, children, and those with pre-existing health conditions or who are more susceptible to heat-related illness such as heat stress, etc. So that the local government can take appropriate actions.
Sure, Mr. Pai. Harsh also joining in. So if you can give us some overview with regard to how long will this heat wave last for? Will it be the full 3 months? Are we only seeing the month of April as a major concern?
See, we have got, if you take month-wise, April, May, June, in the early part, it will be more in the southern part. As the sun moves the northward, May and June, it will be more over Northwest India and eastern part of coastal region like Andhra Pradesh, Orissa, etc. As the monsoon will approach, once at around 1st June generally, as the monsoon progress more northward, the heat activity will get abate in that region. So it will depend on how fast the monsoon will move to central part or northern part. So as such, climatologically, May and June are the most two months when you get maximum number of heat waves, particularly over Northwest India, eastern part and central part like Maharashtra, Vidarbha, Marathwada, Madhya Pradesh, etc. But this is about seasonal for this one. But within the season, there can be some period when in certain region you will get more heat waves than the normal. So for that, we will give you day-to-day forecast and week-to-week forecast. It is not that heat wave will continue together. So it may be for few days continuously for some region. So you have to go through our day-to-day forecast to understand exactly where it will be there.
Mr. Pai, also talk to us about the La Nina conditions. We're supposed to have a bountiful monsoon this year. But are we seeing this maybe in the later half of the monsoon, or are we expecting, or there may be some sort of a delay that we're looking at?
See, first of all, let me tell you that any year which is, followed by the El Nino, itself, you have got a, monsoon will be normal or, a good monsoon. So now that some of the model forecasts are also indicating this El Nino condition will abate by, will weaken by June, and it will become a neutral condition. And by end of this monsoon season, maybe around September, La Nina conditions will develop. So, so that itself is a good. We have seen that when La Nina followed by by El Nino, 8 such cases has been there. Out of that, all years rainfall has been more than 97%, and 4 years, the rainfall was more than 106. So, which means that if La Nina takes place, the monsoon is likely to be normal or above normal. However, said that, The other parameters are also important, like Indian Ocean dipole or mid-latitude forcing, snow cover during spring season, etc. So we will get an idea, better idea in the month of May, particularly because of spring season barrier that we talk about in the weather forecasting. Even the La Nina forecast will be much more become clear only in the month of May. So though as of now we are saying La Nina conditions are likely, we have to wait for a May month forecast to become more confident. But anyway, even with that also, monsoon is likely to be normal to above normal, but we will have an exact forecast we will come up with in the middle of this month, April.
Okay, and with regard to the impact on agricultural output production, what's the sense you're getting? Would there be an adverse impact in a major way?
See, as we interacted with the agriculture specialists, particularly the wheat, crops, that is in the harvesting stage now. And, state like Madhya Pradesh, we understand that 90% has been harvested. So only 10% is remaining. The otherwise, Himachal, the other places like Punjab, Haryana, UP and all. So the harvesting will be completed within the next 10 to 15 days. So they say that grains are in the, in the mature stage. Therefore, there will not be any impact of temperature on wheat crops, as of now. So there will be good crop production will be there. That's what they said. But however, for any crops or vegetable, etc., in the next 3-4 months, the regions where you don't have an irrigation facility or groundwater is very less, there can be huge, temperature stress can be experienced. So because of those, whatever impact that can take place, that will maybe there. So people has to understand that, because of temperature, what stress that it can, crops that can happen. Accordingly, that crops or vegetable varieties and all has to be selected accordingly.
All right. Thank you so much, Mr. Pai, for joining us and for sharing all these inputs with us.
Thank you. Thank you.
All right. But let's also, Harsh, look at some of the stocks that are moving mostly because of this. There are stocks like Symphony, Voltas, and even Blue Star that are up in trade today. And this obviously comes after this the prediction for a heat wave, and we're going to see more sales of ACs and cooling appliances. So you can see something like a Blue Star that's up over 2.5%, Symphony is up 9.7%, and Voltas also up 4% as we speak. But let's focus on the macro part of it now. Now, India's March manufacturing PMI has ended FY24 with a bumper number. Manufacturing PMI rises to a 16-year high as output and orders jump to highest since October of 2022. But let's shift focus to the auto space, Harsh. Now, yes. Maruti, Tata Motors, Eicher, M&M, Escorts, Kubota came out with their March auto sales figures yesterday, and we have Puneet joining in on more on this.
Yeah, thanks for that. So, as you rightly said, the results started flowing in for the month of March for the sales figure from yesterday and today. Most of these guys have released their numbers, so let's divide them by segment-wise. So, for the two-wheeler space, we've seen Bajaj as well as TVS Motors do really well as per expectation, roughly 10 to 15% of volume growth. And the other two players in the two-wheeler space, such as Hero, have not met analyst expectations. So starting with Hero, the total sales is down roughly 5% versus an expectation of 4% growth. So that is a 9% divergence there for Hero. They say that the domestic sales is also down to roughly 450,000 units. For TVS Motors, there has been growth of roughly 12% versus an expectation of roughly 19% growth. So it has done really well on compared to last year, but the growth numbers are a little lower than analyst expectation. Bajaj Auto numbers are 25% growth in the domestic sales and have done really well. Moving on to the commercial vehicle space, we see that the numbers were supposed to be a little subdued. For Tata Motors, the sales have come down 10% versus a degrowth expected of roughly 7%. So it's come down a lot more compared to what was the expectation by certain analysts. For Ashok Leyland specifically, we see that the sales have fallen 4% versus expectation of a 10% fall. So the fall has been a little less for Ashok Leyland, a little more for Tata Motors. So that's the divergence that we are seeing in the commercial vehicle space. For Ashok Leyland, also do note that they are present in the bus segment as well, and the EV buses have also been doing well via Switch. Finally, on the passenger vehicle space, we see that Maruti has been doing really well. The sales have come in at a 10% growth versus 12% previously, and the other makers such as Tata Motors as well as Mahindra and Mahindra have done really well, roughly 10 to 13% growth shown. For Tata Motors, the EV space has been doing really well, while from Mahindra, the SUVs have been doing really well as well. Finally, just a couple of more points. We have got brokerages who have released their notes today this morning. Most have similar commentary that the PV and the two-wheeler space has done well, while the commercial vehicle and the tractor space has been majorly affected. They say that commercial and tractor vehicle should come back in the second half of the next financial year. So for City, they have a buy call, and Maruti is one of the top picks, while for someone like MK, they have TVS as well as Escorts. So they are betting that Escorts will come back in the next financial year. And finally on BOFA, they have a buy call on Tata Motors as well as Maruti Suzuki. Back to you.
Okay, thank you for that very comprehensive analysis of those numbers, Puneet. But when you're looking at the top gainer as well as the top loser on the Nifty 50, you'll see both of them are auto stocks. Hero MotoCorp doing probably the worst performing Nifty 50 stock today, and Bajaj Auto 2.5% higher is the top performing Nifty 50 stock. But let me quickly take it across, because my colleague at NDTV, Mugdha Mishra, caught up with Shashank Srivastav, who is the executive committee member at Maruti Suzuki, and he spoke about their March auto sales numbers. Listen into a slice of that.
Yeah, so multiple of factors, there's no one factor, but multiple factors. First of all, the economy did really well. And as you know, there is a very high correlation between economic growth and the fortunes of the auto industry. So it's been, in that sense, very good overall economy. We saw some really good capex expenditure by the government, especially in the rural infrastructure and so on, which also is related and has a multiplier effect on the demand for automobiles. Third, we saw, as Maruti Suzuki specifically, we introduced the 4 SUVs, and that impacted our sales very positively, because SUV is now the biggest driving force for growth in the industry. 26-27% growth for the SUV sector, whereas the overall growth in the industry is around 8.5%.
It's time for a short break, but before that, let's listen into Gautam Adani, the chairperson of Adani Group, sharing a heartwarming moment, talking about his family during an event in London. Listen in.
I love to spend time with my granddaughters. They are my biggest stress reliever. I have only 2 worlds, work and a family. And for me, family is a great source of strength.
Hi, I'm Tanuj Bhojwani and I run MedPlus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Welcome back. You're watching Market IQ here on NDTV Profit. Quickly switching focus onto the airline industry that's been in focus since today morning. Vistara going through some turbulent times after flight operations were hit on Monday, with disruptions extending into today as well. Pilots have called in for a massive sick leave in protest over a new salary system ahead of the merger with Air India. Civil Aviation Minister Aditya Birla seeks reports from Vistara on how the management is handling this issue and the situation. In the latest, sources tell NDTV Profit that Vistara has submitted a preliminary report to Scindia's office and will submit a detailed report by tomorrow. We also spoke with Ajay Avtane, who closely tracks this space, about the issue with Vistara and if other players might try and capitalize on this situation. Listen in to that.
This is one of those issues that arises at all airlines from time to time. This has happened at Indigo, this has happened in the past at other carriers as well. So it's a passing storm, it will pass, and I think hopefully the pilots and the Vistara management are able to sit across the table and hash it out between themselves. But I don't think this is a significant up move for one of the other carriers. I mean, Indigo will always be ready to, absorb any pilots which are available in the market because it's the same A320 fleet for both of them. But so far, we haven't heard of any such moves being made in the market so far.
Well, with today, 2nd April, is the World Autism Day, and a day to raise awareness and acceptance for individuals with autism spectrum disorder. This year's theme is color, highlighting the possibilities of a vibrant life that those on the autism spectrum can lead. Today, as part of our initiative, Samarth by Hyundai, in partnership with NDTV, we try to understand what it means to be on the spectrum and how the right tools can help those on the autism spectrum and enrich and can live an enriched life.
If I can't learn the way you teach me, then teach me the way I can learn. This single line sums up the philosophy at Muskan, a Delhi-based training and employment center for individuals with intellectual disabilities. Many of the students training here across various skill development programs such as food and beverages, bakery products, candle making, hospitality and more are on the autism spectrum disorder. Autism spectrum disorder looks different for everyone, and each person with autism has a distinct set of strengths and challenges. Pritender Singh Soin, also known as Preet, is an alumnus of Muskan. He has come over to meet his classmates and his teachers. He trained at Muskan in this cafe and later was placed at Microsoft's Gurgaon office, in whose cafe he has been working for the past 6 years.
For a long time, we did not even understand what he has, till he was almost 14. We changed institutions for him. One institution just sent me some journals on autism. So once I started looking at those journals, I realized that there's so many things dawned on me that he has to be handled in a different way.
And that different way is different for every single individual who is on the autism spectrum. To understand neurodiversity and customize skills for individuals on the spectrum, it's crucial to understand where that individual is on the spectrum and what the nuances of their specific condition are.
Every individual with autism can be a unique individual. You know, somebody can have high IQ but very low in social communication. But somebody can be a bit more social but low on IQ. So these parameters change. So that is why it is called that there is a spectrum in this particular disability.
Mridula Sakle has been a teacher at Muskaan for the last 20 years. She has been instrumental in creating assembly lines for each vocational course based on the individual's capacity and strength. The constant goal is to equip these individuals with their varying intellectual disabilities with employable skills.
हम उनकी स्ट्रेंथ्स पर ही काम करते हैं. कॉपिंग उनकी स्ट्रेंथ है और वो बहुत अच्छा कर पाते हैं. हम करते हैं कि अगर उनको बता दिया कि ये टेबल की एज पर रखकर आपको फोल्ड करना है, वो एग्जैक्ट उसी एज पर जाएगा और फोल्ड होगा.
We have also been placing our students after training in mainstream employment. So they are working in many hotels, they are working in corporates, they are working on petrol pumps. We believe that every organization has such kind of jobs which can be identified and they can be trained for that.
Samarth by Hyundai, in partnership with NDTV, seeks to build a world that is inclusive and accessible for those with disabilities. But the best lesson in inclusion and how to make individuals who are neurodivergent feel safe comes from Preet himself.
कैमरा मैं काम करता हूँ, लॉक से काम करता हूँ, लॉक से नॉट सो बच्चे.
AI is revolutionizing how we work, play and connect. It's not just about the tech, it's about the impact on humanity. Discover the secrets behind the world's most powerful technology, from enhancing our lives to shaping the future. Don't miss All About AI, your ultimate guide to AI brilliance.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks: large cap stocks, mid cap stocks, and small cap stocks.
Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah, and over the next 20 minutes or 25 minutes, we'll talk about 2 or 3 key topics around mutual funds. Some data crunching, some back testing or looking at the historical returns and trying and figure out what's happening. And of course, there are some queries that have been given by our viewers, some of you, and we'll try and answer some of those. Our guest today, Dipali Sen, founder and CEO of Sujan Financial Services, and Nikhil Kotari, who is director of Etika Wealth. Dipali and Nikhil, thank you so much, both of you, for taking the time out and being with us on the show. Really appreciate your time.
Hi, Nikhil.
Hi, Dipali.
Great. Okay, let's try and talk about the first topic and the data that AMFI as well as NSE have put out seems to suggest that share of passive funds are rising in the overall MF assets. Now, we know for a fact that if you take a look at the last 5-year or 10-year history, passive funds have outperformed at least the large cap category. Some data suggests even the mid cap category, but let's stick to the large cap category for a while now. And the share of passive funds are rising. So my question, and I'll start off this with you, Dipali, is that if somebody wants to put in money in the large cap category, and there are a lot of people who are advocating that move money from mid caps and small caps into large caps, is the passive fund route the better route to invest in the large cap space?
I think so. Passive funds routing the large cap exposure of your portfolio through passive funds does make sense, because I think the information dissemination is across quite uniform through various research outfits in the large cap, less amount to be discovered, so to speak, as surprises, and therefore in a large cap index fund with lower expenses versus an active managed and the lower cash component, it does warrant one to have a decent exposure of large cap allocation to index versus actively managed.
Nikhil, is your view different?
Yeah, so the view is similar, but I'll just say that, see, when you're comparing, right, you're normally comparing with a TRI when you're comparing active managed fund. Now, TRI is not an investment universe, right? Because the thing is that when there's an expense ratio, there's a tracking error, and so on and so forth. So when you're comparing to a large cap active fund, we should be comparing with the index fund, and then the ratio, the number which we are highlighting may be slightly lower. That few active funds would have outperformed the index fund as such. Now, so that's the one philosophy. Now, the second thing is that I'm saying core part of your large cap portfolio should be an index fund, but you can have 1 or 2 active funds which are slightly more concentrated bets. Because at the time, what happens is that when you take a concentrated, so in large cap, the only way you can outperform the index is to a large extent that when you take concentrated bets, and then if the fund manager really does good, he can generate alpha on that. So core part of your large cap portfolio should be index, and 1 or 2 active funds you can take it as a part of your portfolio, but that should be more of a concentrated bet depending on the fund manager's view and the fund house view.
Okay, but the core part of the portfolio should be the index, which is the passive way to do it. So are there any favorites first amongst equals within that universe? It seems to be a straightforward yes from both of you, and I'm sticking to the core part of the portfolio as the large portion of your answer, Nikhil. So are there some favorites out there that people should keep an eye out if they want to use the passive route to do the large cap investing?
See, large cap investing to be very simple. When you're doing a passive, there's nothing called as a favorite because all are same funds in them. Now, the only thing is again in large cap, there are two different universes. One is a Sensex 50, and there's Sensex 30, and there's a Next 50. So there are three different categories, right? So now when you're taking a large cap fund, Next 50 will have a slightly higher volatility as compared to Sensex 50. So when you're doing the passive investing, I will normally recommend that you can divide into both the things, because both are comes under universal large cap, where you can take a next 50 also as well as the Sensex 50 also.
Dipali, usually there is at times when there is not much to choose between firms as well, people still have a first amongst equals. I'm just trying to understand. I heard Nikhil's answer and he was correct. Do you have a favorite though amongst the passive fund?
Not really actually, because it does have very little differentiation, and also that keeps changing. So, an index fund with a low tracking error, with a lower cash component is what you should look at that point of time to go for.
Okay, fair call. We are moving tracks a bit. This seems to be a straightforward answer, so we are moving tracks a bit. Viewers, here's the point. I urge you to do your own research about whether large caps can give you a better bang for the buck versus mid caps and small caps. It would depend a lot on your time horizon as well. If you are convinced though that you want to either invest into large caps or move a part of your mid cap or small cap portfolio into large cap based on your own study, then the passive route might actually be a good route. Historical performance suggests that, and our advisors also have said that might not be a bad idea either for a core part of your portfolio or even for your overall portfolio. So it's the first topic out of the way. Then a SPIVA report the data suggested that ELSS funds have actually performed extremely well relative to the universe, which is BSE 200, S&P BSE 200, which is usually the universe at which they are compared with. Nearly 30% or nearly 70% of the ELSS funds over a 5-year period have outperformed that index. Now, at a point of time when large caps and to an extent even select mid cap funds are struggling to beat the index, here's a category which is beating the index quite handsomely. 70% beating the index is a big thing. So my question, and this one I'll start with you, Nikhil, that while ELSS funds are usually thought of only and only from a perspective of tax saving, can the forced staying invested measure in ELSS funds, because you can't sell them ahead of 3 years, make them a good candidate for non-tax saving investing as well?
Okay, so first I'll say that ELSS as a category is a great category. Since you are logged in for 3 years, I'll say investor experience, right, will be very, very good, because you are by default, you're logged in for 3 years. And if you're doing SIPs, effectively your last installment, by the time you can withdraw the full amount, will be 6 years. So as a category, investor experience will be very, very good in ELSS. Okay, so and because it's a 3-year lock-in, so you have a good time frame to stay invested. But do I am firm believer of that? The answer is no, because I always believe that the money should always be available to me when I want to redeem, right? And should be accessible to me. So I normally don't recommend logged in products apart from the tax saving, which we need to do in ELSS, because that's I'm comparing with the PPF, and over 15-year period, ELSS will outperform PPF hands down. So for a non-tax saving instrument, I'll say that there are a lot of large cap fund, large and mid cap fund, and there are a lot of multi cap fund would have also outperformed BSE 200. Right, so it's not only ELSS universe, but BSE large and mid cap fund and multi cap funds have outperformed BSE 200. If I take a slightly longer history, so I will recommend that if you're not looking for logged in investments, then I will recommend to be an open-ended fund. But ELSS as a category is a great investment, I'll say, because from an investor perspective, if you don't have any control over your emotions, and if you don't have, then ELSS as a category makes sense. But I'm not firm believer, because that's why I'm against tulips also. The reason is very clear that I don't want to lock in my investments. I want that money should be available to me when I want to redeem it, and I should not be locked in by any fund manager or any fund house.
Dipali, I'll try and rephrase the question a bit as well, and this comes from how people who've invested for long in PPF, for example, right? They may not have had to do so, but people have put in money in PPF at the end of the term, which is 15 years or extended period by 5 years or for the 5 years. This forced saving habit at times keeps them disciplined, keeps them invested for better returns. So my question is, and I take on board Nikhil's answer, I mean, if you have choices, why lock in? But does the lock-in actually help performance because the fund manager knows that the money is there for 3 years, and is that probably a reason why so many of the ELSS funds as a category are outperforming the benchmarks, and should therefore, even for non-tax reasons, should they be considered?
Okay, so I'll answer this question in two parts. While I completely agree with Nikhil that money has two functions to serve, liquidity and returns. And why should I hamper liquidity if I can get commensurate returns from an open-ended? Now, coming to the second part, I don't think the lock-in gave superior performance. Now, since we are comparing it to benchmark you mentioned, that is largely a large cap benchmark, and most of the ELSS currently are holding flexi cap portfolios. And the fact of the matter last year was that mid and small cap clearly outperformed large cap by 20%. We have seen outperformance of ELSS because the benchmark you are comparing it to is largely large cap. And on the investor behavior, I completely agree with you, Neeraj, that I think it does make sense to nudge the investor to keep it locked in, because this forced behavior does represent at a later stage a higher net worth versus the tendency to pull out because you can. So even when the markets are bad, you may not be able to cut out the noise, so you may pull out. And when the markets are good, you could be tempted to book profits, which could let you forego future profits as and when. So while I principally agree that largely most investments should be liquid, hands reach away, but in the ELSS case, I would, to nudge people to have a longevity of their holding capacity, I would say that they should use ELSS even when it's not for tax saving. So for other long dated investments for equities, yes, ELSS is a very good tool.
By the way, viewers, one way or the other, by this questioning, I'm not indicating that you as a viewer, or I don't think either Dipali or Nikhil are indicating that you as a viewer or as an investor don't have control over your habits. But if you are that kind of investor who gets tempted to book profits once the market move up over a period of 6 to 12 months, whereas the long-term staying invested might serve you better, then maybe, just maybe, ELSS might be the right thing for you. Bear that in mind. So I think if you see here, the dichotomous answers from both our experts, they take into account in some fashion investor behavior, and if you know what kind of an investor you are, you might be able to better use ELSS schemes or otherwise for your investing. Having said that, if you are tempted to invest into ELSS schemes, at times, by the way, viewers, it's great to start your tax saving from the month of April for the whole year, as opposed to doing it straight in the months of Jan, Feb, March, just before the year is ending. So for both these reasons, let me ask our experts, what are the kind of ELSS schemes that might be that they like within that? Dipali, can I ask you, I mean, this will not be an exhaustive list, just an indicative 1 or 2 ELSS schemes that you like.
Okay, so you could look at SBI long term, you could look at DSP tax saver, to name the couple of them.
Okay, and remember, viewers, these are not the only ones, but a couple of indications coming in from Dipali. Nikhil, maybe a couple of things from your end. Let's assume, because you don't say that they should be used for normal investment purposes, but for tax saving purposes, they might be a good. Then for tax saving purposes, a couple of schemes, and why do you like them?
So basically, I'll give you, I use ELSS from pure tax saving, and my whole family's investment goes in tax saving in ELSS.
Okay.
And I'll tell you, I've come from a place called Jorhat, okay, which was recently covered in Economist magazine, where that they have every household has a SIP more list there. Right, and there we do a large business in ELSS, because normally ATC is the one, I'll say, carrot for everyone to start investing in mutual funds. So we have done a lot of investments in ATC in the native place of Jorhat. And I'll normally do is the DSP tax saver. And recently we have also started doing Parag Parik tax saver, because with the philosophy, we like that fund house philosophy. And historically we have done DSP tax saver is one of the scheme which we have invested a lot of money there.
Okay, sorry, would you just repeat before we hit that break, Nikhil? What is the name of the place that you spoke about?
Jorhat. So it was recently covered in Economist magazine, right? That I'm saying if you try to locate at your end, you will hardly find a place called Jorhat, right? It's a city in Assam. Okay, it's a very tier 4 city. Okay, and personally at our house we have 160 crores of EUM from a place called Jorhat. Okay.
Wow.
if you really go and do a survey there, most of the household will have every household will have a SIP there, right? And this was covered by the Economist magazine recently.
Well, who says investing in India is restricted to the metros and the larger cities? This is quite fascinating a statistic. I'll look up that article. Stay on, both of you. We need to slip into a quick break. We'll try and take some queries on the other side of the break, and we'll also try and talk about small cap funds and the mid cap and small cap funds. There is a contrarian indicator maybe out there to performance. We'll try and talk about that on the other side. Stay tuned.
Hi, I'm Tanuj Bhojwani and I run PeoplePlus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Back with the Mutual Fund Show right here on NDTV Profit, and let's try, because there are so many queries, let's try and take a couple of them at least, and then we'll maybe talk about the third topic. So the first query is from Mohammed. Mohammed is aged 22 years. The goal, well, is guidance. Interesting. Okay. Mohammed says that I have 2 lakh rupees in savings and would like to start investing in mutual funds. Can you recommend me some funds? Nikhil, I'll start off with you on this. It seems that Mohammed, a young chap, but doesn't have any investments in mutual funds currently. He's got 2 lakh rupees. I'm presuming that he wants to do a lump sum and then may want to continue in SIP. That's an assumption on my part. For now, I only know that he's got 2 lakh in savings. Any thoughts here, Nikhil?
Yeah, so I'll say that first of all, since he's 22 years old and it's a long-term money, he should be purely equity funds. Now, since markets are slightly overvaluation in terms of expensive, then I'd rather recommend instead of doing the one-time lump sum, because he never invested in mutual funds, I recommend him to do a STPs over next 10 months so that he can withstand the volatility which can happen over next 5 to 6 months because of election. So I'll recommend he can initially start with 2 funds. One is a multi-cap fund, which will give him exposure to large mid-cap and small cap, which is Kotak multi-cap fund. And one is a flexi cap fund, which will be Parag Parikh flexi cap fund. He can do 1 lakh investments in either arbitrage fund or a debt fund and start STP over next 10 months. So that over next 10 months, all the money from debt or arbitrage fund will go to equity funds. And additionally, he should keep on increasing his SIP. He should start SIP and then keep on increasing every year on year. And this will, I'm saying over next 20-25 years, he can create a large portfolio with this.
Mohammed, I hope you got your answer. We have a lot of queries, so I can't really ask Dipali for your answer, Mohammed, but Nikhil has given you a very nice answer, so I hope that helps you. And we need to move on to the next query. That's coming in from Rushabh. Now, Rushabh is aged 31 years. Rushabh's goal is a retirement fund. Everybody in that age bracket currently thinks of retirement. Very interesting. Now, Rishabh is saying that he currently has SIPs. Okay, I'm quoting him verbatim. I currently have SIPs in 6 funds and would like to retire by the age of 51. He can additionally invest 3,000 rupees in new funds. Which funds would you recommend? His current SIPs are Parag Parikh Flexi Cap with a 4,500 rupee amount, Nippon Small Cap 5,000, Quant Small Cap 2.5, HDFC Mid Cap 1.5, Mirae Asset Large Cap 2.5, and Mirae Asset Mid Cap 2,500. Dipali, too many funds, too much data, I know, but if you could get a gist of what I was trying to ask you, what would your advice be?
Yeah, so I think he has 6 funds, which to me is enough. He need not look at others. Second, I think his small cap exposure is quite high in terms of percentage. So he may not want to reduce the current ones, but he can at least try and see that he chooses a, let's say, SBI large and mid cap for the either if he's wanting a new one, or he could add on more to Parag Parikh Flexi Cap, his additional 3,000.
Okay, so Dipali, but your advice seems to be that he doesn't need to invest in a 7th fund, reduce the small cap exposure and use this money in the Parag Parikh fund.
Yeah.
Got it. Okay. So Rishabh, you seem to be on the right track. Just make a few alterations here and there, and the additional corpus can be put in, as Dipali suggested, into the Parag Parikh fund as well. Now, let's move on. And before we get to the third query, but the third query is kind of related to the topic that we wanted to bring out today. There's a lot of talk about moving to large caps, so on and so forth. Now, if traditionally, when mutual funds have underperformed an index, the subsequent years, it has happened a number of times that they've managed to outperform as well. Typically, when an index does really well, fund managers find it difficult to outperform that index. So my question, Dipali, I'll start off with you on this one. After having a period of significant underperformance, if you will, relative to the index for a better part of 2023 and maybe a couple of months of 2024, can mid-cap and small-cap fund managers actually outperform the indices over the course of the next 12 to 24 months? And is that a good reason to stay invested in small-cap funds or start SIPs in small-cap funds?
Okay, so why don't I just step back and kind of throw light on the logic, so it'll be easier for people to decipher on their own. An index is made keeping largely the market cap of companies and the liquidity of stocks, whereas a fund manager is expected to build his portfolio based on the quality of those stocks and growth, which he expects in those companies which he holds in his portfolio. Now, at times, things may not converge. And especially in the last 1 year, where we had seen so much of momentum, we got some 41,000 crores in small cap segment and 23,000 crores of rupees in mid cap. So in such laughing your way to the bank kind of markets, each and every stock tends to go up, irrespective of whether they are quality or not. So last year has been quite an aberration, and a fund manager who is looking to buy quality stocks need not be able to be close to an index, whether mid or small. And also he has to maintain cash for redemptions, and he has a higher expense in connection to a index or a benchmark. So with those things in mind, a momentum market and the fact that his common list may not be as per the index, and he's having a higher expense ratio by at least 75 to 80 bips and higher cash component, which is not getting deployed for redemption reasons, it is normal to see a fund active manage mid and small cap in such one-way markets to underperform a benchmark. With that perspective in mind, what I would suggest, based on client's risk appetite and whether his goals are at least 7 years plus, one should, some simple thumb rules, but please refer to your professional, whosoever you're seeking. Mid and small cap component can be of the equity portfolio can be 20 to 30%, and the balance can be in the large cap. Where the fulcrum of this lies will depend on your advisor.
Okay.
That's my broad thought. So
sure.
Nothing stark which has happened, it's expected. So therefore, we need not take stark reactionary moves, but keep in mind our asset allocation, our risk appetite, and our advisors' recommendations.
Got it. Nikhil, your thoughts?
So I'll just add to Dipali's point. So one was cash component, but apart from that, what we need to understand when you're looking at small cap index, it only has small caps, right? But when you're comparing a small cap fund, it will have small cap exposure, but it also have a mid cap exposure, it also have a large cap exposure. Now, if you see all the three indices, the small cap has given 76% return as compared to large cap, which has given, like say, 25 to 30% return. So the difference is 40%. So if a small cap fund has some amount of large cap and some amount of mid cap, he will bound to underperform the small cap index, right? So because small cap fund can never have 100% money in small cap because he has to manage the liquidity. And that's why the SEBI came out with the stress test that whether the fund manager will be able to liquidate his portfolio when there's a redemption, right? So fund manager has to manage the liquidity also. So whenever there's a one-way bull run, a small cap fund, an active small cap fund will always underperform a pure index. Most of the active managed fund will underperform the index. But if you look at last 1 month, when the small cap had some correction, right, many active managed fund outperform the small cap index. So I'll say that, see, market will never be a one-way direction. Markets always have volatility. So if I take a 7-year picture when there will be some volatility and there's some downward markets, at that point of time, the active managed small cap fund will be able to outperform the index. And over a long period of time, if you look at it, because when you're looking point to point, the 1-year return makes a huge difference. But if you look at rolling return over a long period of time, many small cap active managed fund would have outperformed the index. So I'll still say that active managed funds in a small cap segment makes sense. Now, allocation to small cap depends on your overall portfolio, how much you want to have, depending on your time horizon, depending on your risk appetite. You can have a small cap active managed fund in your portfolio. And 2024 may not look like that we'll have a continuous one-way rally. So if it's not a one-way rally, then I think many active managed fund will catch up with the underperformance what they had in 2023.
Well, from an investor's perspective, cross fingers for that and more. I wish I would have taken the query, but really out of time on the show. So we'll have to wrap it up here. Nikhil, Dipali, thank you so much for taking the time out and being with us on the show. Really appreciate your time.
Thanks so much.
And viewers, with that, it's a wrap on this edition of the Mutual Fund Show. Stay tuned. Lots more coming up on NDTV Profit.
AI is revolutionizing how we work, play, and connect. It's not just about the tech, it's about the impact on humanity. Discover the secrets behind the world's most powerful technology, from enhancing our lives to shaping the future. Don't miss All About AI, your ultimate guide to AI brilliance.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? when to buy, when to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
There are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the category.
Don't listen to anyone and everyone.
When it comes
Hello and welcome back to NDTV Profit. You're watching Large Trades, a show where we talk about all kinds of bulk and block deals, large trades and stocks buzzing on the back of volumes. I'm your host Mihika Barve and with me is Agam Vakil. But before we go on and talk about the stocks that have been buzzing today, Agam, how do the markets look like right now?
Sure, it's a quiet day today, Mihika. We've not seen too much traction and well, the Nifty is coming off by 0.25%, but largely it's been a very, very range bound market, and it's not just for the Nifty, it is for the Bank Nifty as well as the Fin Nifty. Now at the moment we are holding on to 22,400 for the Nifty. The Bank Nifty is well marginally in the red. It's in fact absolutely flat. It's very close to where it closed yesterday, and it's been the case through the course of today. So it's been a steady course where we have seen a lot of decline in option premiums, at least as far as the Fin Nifty is concerned. But let's start by taking a look at how things are panning out when it comes to the constituents of the Nifty 50. And we do see advances for HDFC Bank cancel out the declines for ICICI Bank, and those are the two of your largest banks as far as the private sector is concerned. M&M along with something like a Tata Consumer Products up and about, but what's also weighing down on the indices is Reliance Industries, L&T Tech, L&T and Infosys. So that's as far as your benchmarks are concerned. What about broader markets? Outperforming the benchmarks by just a bit, and we do have substantial gains in the broader markets, but among those which are in fact advancing, we have the likes of Aditya Birla Fashion, where we have an update, and we're going to talk about that in the show today as well, which is up as much as 12% at the moment. We have Tanla, which has picked up quite substantially over the last I would say 1 odd hour, and that's up around 11.5% as well. AB Capital from the Aditya Birla Group, once again perking its head quite well, and it has maintained the substantial gains that it came through over the course of the last 4 hours. Tata Tech is the other one, and this is also one of the counters that we're going to address in the show today. That's up around nearly 8%, and Varroc Engineering, that's up around 7.6% as well. We don't have too much in terms of losers, save for something like an Anand Rathi, which is under pressure. It's down around 4.4%, but we must also take into context that Anand Rathi has been one of the big movers over the course of the last 12 months. Kaplan Point is the other one, under pressure, down 4.3%. And of course, India Mart is also declining by around 3.5%. But on the whole, it's a fairly quiet market when it comes to the benchmarks, and I reckon that we're most likely to have a quiet closing too, or at least that's where we are driving at, Mihika.
So let's take a look at the large trades that we do have in focus today. We have something like an Epigral, which is a chemical company, Sami Hotels, Aditya Birla Fashion, as Agam mentioned, Symphony and Tata Tech. But up first, we have Epigral, which has been buzzing in volumes as well as its stock performance today, up about 12.5%. And my colleague Varsha joined in to give us more details about the company.
Hi Mika, so as you rightly said, so Epigral has seen an intraday high of 16%. Now this is on the back of volumes. Volumes are buzzing over 9x. If you see the stock performance in last 1 year, company has given 27% returns to its investors, while in last 6 months returns has been around 31%. Now let's see the background for this company. So this company has been renamed from Make Money Fine Chemical to Epigral. Now this is a part of Make Money Group. Also this company is simply a manufacturer of chemicals. So this company is 4th largest manufacturer of caustic soda, chlorine and hydrogen. Now let's see what's working for this company. So this company, they have increased revenue from derivatives product. So simply it means high growth. So they are going into high growth products. And so revenue from derivatives, which was 27% last year, is now 42% currently. And this 42% will increase as future expansion plans by the company are done into these high growth derivative products. Now growth, what we saw in Q3 FY24 was majorly coming from new products that company commissioned in FY23, and they are actually focusing on to continue expansion in high growth products as well. Similarly, this year they'll commission almost additional capacity of CPVC resin of 45,000 tons per annum and new capacity of CPVC compound of 35,000 tons per annum. So basically they are increasing their capacity and adding new capacity. This will drive the volume growth for FY25 and 26 as well. Now both capacities are expected to commission in Q4 FY24, and capex for FY25 is estimated around 300 to 350 crore. Lastly, if you see, there's been guidance given by the company that they'll do revenue of around 5,000 crores in FY27 with EBITDA margin of 20-25%. So this is all we have on Epigral.
Okay. Well, thanks so much for that, Varsha. Of course, bringing a lot of context into what's happening there. But yet another very interesting company that is on our radar, and that's Sami Hotels. What's really happened at Sami Hotels is that today we saw a sharp knock as far as this particular stock's concerned. And what is even more noteworthy is that it has tested the mark of 200 rupees per share thrice, including today, in the last 1 month. But let's get in Anushi to give us more perspective on what's happening here. Anushi.
Right, Agam. So just adding more to this, so if you have to look at just today, what has happened to Sami Hotels, the stock has hit about an intraday low of about 5% now. Well, this is on the back of the large deal that has happened over here, with about 8% of equity changing hands in just today's trading session itself. Now, taking this in consideration, the volumes were also comparatively higher over here, about 21 times its 30-day average. So just to get a key perspective on who are the kind of buyers or the people who have more than 8% stake in the company. So most of these are like FIIs. If we look at that, there's ACIC Mauritius and Blue Chandra, which holds about 15.2% and 8.67% stake respectively in the company. But just to get an overall perspective on what kind of other buyers we have in the company, mutual funds hold about 12.4% stake, while Goldman Sachs hold about 7.8% and Government of Singapore has about 7.1% stake in the company. So quite some notable names over here if you have to just look at the company's key shareholders. Now on to the analyst recommendation for the company. Not much of a coverage over here. 3 hold about a buy rating for this, so which culminates to an upside potential of about 35%. On to the stock performance, if you see, Sami Hotels, do note that this is a newly listed company and it's a new entrance in 2023. So if you have to look at we'll just look at the 5 days and the 1 month performance for this. So 5 days, the stock has been about a 2% drag overall, while in 1 month the stock has been about 6% lower comparatively. So just to take today's perspective, Sami Hotels is down because of the large deal, about 8% equity changing hands, due to which the stock is under pressure today.
Thank you so much, Anushi, for those details. And up next, we're going to talk about Aditya Birla Fashion, which has been in focus throughout the day following the news of its planned demerger with Madura Fashion. The stock is trading on high volumes and it's up about 12% right now. Let's bring in Mahima with more details about the same.
Right, Mihika. So before I move on to talking about the demerger, a quick view on the volumes. Well, the stock is trading at 20 times its 30-day average. The stock did touch an intraday high of almost 17% today, and there was a large deal that took place of around 0.8% equity that changed hands in trade. Now, this is after a long time. The stock has been under pressure since past 5 years. Past 1 year, the stock has been down around 2%, and today, however, the stock did touch an intraday high of 17%. Now, talking about the demerger, well, post the demerger, ABFRL and Madura will be two separate entities. Both of these will have separate capital structures, and both of these will work as independent growth engines. Now, all investors post the demerger will have identical shareholding in the newly formed entity also. Well, the resulting company, that is the Madura Lifestyle, will have brands like Louis Philippe, Van Heusen, Allen Solly, Peter England, American Eagle, Reebok, etc. And the demerged one will have Pantaloons, TCNS, Masaba, luxury brands like the Collective, and digital brands like the TMRW. Now, in terms of how this will impact the financials, well, Madura's segment itself has contributed around 63% to the total consolidated revenues, and in terms of EBITDA, it has contributed over 75% to the overall consolidated revenues of ABFRL. And even in terms of margins, if you see, Madura segment's margins are at around 15.6% versus that of consolidated level margins at 12.5%. So basically, the demerger will be, it will step up to augment the business of Madura as well as ABFRL, and it will be a step towards reviving the ABFRL business. And we also had a Citi note which is maintained sell with a target price of 220. They've said that MFL will witness relatively moderate growth and higher profitability and cash flows. Well, ABFRL will have relatively higher growth and lower profitability. And in terms of demerger, the fundraising should aid investors, and the concerns around complexity of the business structure will go away. And they see that they believe that the impact of ABFRL's growth and profitability will be highest amongst their coverage. So this is the overall street view of ABFRL, and the stock has been buzzing in trade today because of the demerger news.
Thank you so much, Mahima, for those details. I now want to shift focus on a pack of electronic goods, consumer durable stocks, namely something like a Voltas or Hitachi or even a Blue Star that have been buzzing in trade since the start of the day. They've been in the range of 1 to 4%, but we do have a stock called Symphony. Now, this is a manufacturer of residential, commercial and industrial air coolers, and it's one of the largest air cooler manufacturers in the world. Now, the volumes are over 17 times its 30-day average, with total volumes of 15.24 lakh equity shares, and the buyers were 2.7 times the sellers. Now, Symphony has hit an intraday high of 11.9%, and it's gained up 10% year to date. Now, this is mainly on the back after the Indian Meteorological Department, which is the IMD, released some notes and studies in the last 2 days where they stated that the April to June 2024 period will see above normal maximum temperatures, higher temperatures expected over most parts of India, isolating certain pockets in the northeast and the northwest, and April will see above normal minimum temperatures as well. According to the filing that was put today, yesterday maximum temperatures were in the range of 40 to 42% in many places over Odisha, Telangana, Andhra Pradesh, and they've also put a heat wave, warm night and hot and humid weather warning for the next 5 days. And it was back on these two filings in the past 2 days that these counters have been buzzing in trade today. Now, like I mentioned, Symphony is an air cooler manufacturer, and if you look at its EBITDA margin profile, it's been increasing on a sequential basis. Ending of last year in quarter 4 of FY23, the consolidated margin stood at 7.5%, whereas last quarter it's been at 17.8%. Its business performance, especially in the large space ventilated air cooling, continues robust growth, and it anticipates an industry growth of 10% CAGR, and it's also retained a 50% market share in the air cooler industry. And when you look at its management commentary in the last quarter itself, the company itself has stated that they are anticipating
expecting domestic as well as their overseas business to grow on the intensified heat waves, and they also expect some kind of cost relief from the shipping side as the shipping costs have normalized, which will help its international businesses. And with that, it's time to slip into a short break, but do stay tuned as we have lots more lined up on the other side.
Hi, I'm Tanuj Bhojwani and I run PeoplePlus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit.
Welcome back to Last Trades. Well, Tata Technologies is in focus after executing joint venture agreement with BMW Holding Netherlands. Let's bring in our colleague Puneet to get more perspective on this aspect. Puneet.
Yeah, thanks for that, Agam. And as you rightly said, the stock is also up on large volumes, or roughly 4 times, with an intraday high of roughly 7%. Now, they have executed a JV agreement with BMW Holdings based in Netherlands. This is to deliver automotive software solutions for their premium vehicles as well. Now, the JV will have a 50% stake each by both Tata Tech as well as BMW Holdings, while they will also aim to establish automotive hubs in Pune, Bangalore, as well as Chennai. Now, the focus of this JV will be to deliver automotive software as well as solutions which include software-defined vehicles. So the per content and the technology per vehicle will also go up under this JV. Now, do note that earlier on 28th March, JP Morgan had written a note where they had an underperformed rating on Tata Technologies with a target price of roughly 800 rupees. Now, they had said that the anchor client concentration is a very key concern for them, and only when there is some movement on them, that's when they will revise the rating. Now, with this JV, they should, this is a key positive for the stock as they are diversifying from the anchor clients, which was roughly 46% of their revenues. So going forward, this should be a key positive for Tata Technologies.
Thank you so much, Puneet, for those details. Moving on, my colleague Neeraj spoke to Piper Serica's Abhay Agrawal. Listen in what they had to say on global macro trends, as well as the uptick in metals in the wake of China's manufacturing PMI rebound.
We have been tracking China, especially Neeraj, for last 6 months for a couple of reasons. One is that whenever China local consumption gets into distress, we have seen that the Chinese large manufacturers try to get into cash by dumping at cost or below cost their products, and that creates a deflationary cycle unintended globally. And I think Indian companies, a lot of them in chemical space, agrochemical, metals, have suffered because of that over the last 6 months. But whatever research we did, we also started seeing over the last quarter, starting January onwards, that there is that dumping has ceased and stopped being a problem. And the pricing power was coming back in a lot of categories, especially bulk drugs, metals, chemicals, agrochemicals. So I think the data coming out now of China of PMI increase and to be followed by better domestic consumption, cleaning up of the real estate exuberance, if I may say that. I think that is all. My guess. I'm happy to make a bet that is behind us now. So all the pain that the Chinese economy, Chinese domestic consumption, Chinese exporters had to go through are largely behind them, and now we will see Chinese economy recover. The good thing about the Chinese economy is that it's not so dependent on foreign flows, unlike India, where for our capex and capital formation is still dependent on international global flows. China is not, it has a lot of domestic capital. So I think China will grow this year and grow at a level that will surprise the analysts, probably driven by domestic consumption. And this will lead, as you said, your bigger question, will the global growth outlook will be better than estimated? My bet is yes, it would, because I don't see any reasons of, the consumption falling off, interest rates are going to trend down. And when that happens, consumption goes up, the macros continue to improve, especially for India. So I don't want to be sanguine or careless, but I would bet that the global growth, global macros will improve from here on.
Okay, so two investing implications, and I'm coming to that before I come to the macro again, Abhay. The first one, let's talk about the Chinese data since you're tracking it so closely. Usually, China growth is associated with a cyclical uptick in metals. Do you see that happening?
Yeah, I think that is a natural outcome, Neeraj, because there is a limited supply of metals that comes into the global markets, and the Chinese exporters have been the largest ones there, and they have had no pricing power because they have to keep the factories running, and that puts pressure across the board. In a down cycle we saw last year, where global consumption of metals didn't fall off the cliff, but at the same time it wasn't growing in a manner that people were used to. And on the same side, you have supply coming in continuously. I think that is going to even out. And the natural implication will be that the commodity prices, especially metals, will firm up from here on. However, I don't think it will be a very sharp uptake. It could happen in some commodities because we don't really track the exact monthly demand and supply data. But barring some, I think there will be gradual recovery. So if anybody is going to make a bet about sharp recovery in metal prices, I think they would also be wrong. But at the same time, I think the recovery over the next 12 months will be on the higher side. I would expect that generally metals as a commodity basket will not be surprised to see a double-digit growth in pricing from here on over the next 12 months.
Yeah, well, and with that, it's a wrap on this edition of Last Trace. But before we go, my colleague at NDTV, Mugdha Mishra, caught up with Shashank Srivastav, Executive Committee Member of Sales at Maruti Suzuki, talking about their March auto sales numbers. Listen in.
Yeah, so multiple of factors. There's no one factor, but multiple factors. First of all, the economy did really well. And as you know, there is a very high correlation between economic growth and the fortunes of the auto industry. So it's been, in that sense, very good overall economy. We saw some really good capex expenditure by the government, especially in the rural infrastructure and so on, which also is related and has a multiplier effect on the demand for automobiles. Third, we saw, as Maruti Suzuki specifically, we introduced the 4 SUVs, and that impacted our sales very positively because SUV is now the biggest driving force for growth in the industry. 26-27% growth for the SUV sector, whereas the overall growth in the industry is around 8.5%.
You spoke about rural. So, what has rural growth been for Maruti, and how do you see it panning out from here on?
So, rural has been very positive. In fact, this year the growth is around 11.2%. That compares favorably with urban growth, which is around 7.2%. And in fact, rural, our overall contribution of rural sales in our total portfolio now is around 45%. So that's pretty large. For the industry overall also, it is it's grown to about 33-35%. So rural has been doing well. Apart from those capex expenditure on infrastructure that I spoke of, it has been a normal monsoon. Although at the beginning of the year, we were a little afraid that the El Nino will probably reduce the monsoon as such, but it came out to be roughly the average, long-term average was pretty close to that. Kharif sowing was pretty good. Rabi sowing going on is very positive. So I think that has affected positively the sentiment, and we do hope that in the future, the rural sale will continue to show a positive progress.
And what about your urban, what is the expectation from rural and urban growth for 2025?
Yeah, so pretty much similar. We do expect rural growth to continue, especially if you have a normal monsoon. Of course, it is dependent on monsoon because that affects agricultural income in a big way, and that affects the sentiments quite disproportionately. So, and as you know, car buying is a discretionary purchase, so sentiments are very important. So we do expect rural growth to continue to be in the positive territory.
You know, earlier it was assumed that rural and small car segment are closely related. But since rural has shown growth, but the small car segment still struggling, do you see the income in the rural areas have shown significant growth?
Yeah, absolutely. In fact, if you look at the data from 2007 onwards, the rural growth I'm talking about auto industry has been higher than urban growth in all years except one, which was I think 2012. Otherwise, it's been always on the higher side compared with the urban growth, and largely because the rural incomes have been rising faster than urban incomes. Also, as I mentioned about the infrastructure getting better, so sentiments are quite positive. So yes, these are the factors which have helped rural become so big now in the auto.
Now, let's talk about WagonR has been one of the most successful products, and that's mainly because of commercial vehicle usage, the taxi usage. Now, what is the segmentation between personal vehicle buying and commercial vehicle buying, and what is the trend there?
Yeah, so you mentioned about the higher commercial usage. Actually, that's not true so much anymore. WagonR is the number one vehicle in the industry. In fact, for the last few years, is the only brand which is selling in the industry more than 200,000. Sold more than 200,000 this fiscal year which just ended. There is a lot of personal buying in WagonR. In fact, the proportion is quite high. Earlier, people used to feel that since CNG is also an option available in the WagonR and it's a significant portion of the sale, people used to think that it's largely commercial which takes. It's not true anymore. In fact, if you see cities like Bombay, Pune, Mumbai, Pune, where the penetration of CNG in WagonR is like 70-75%. But it is largely the individual buyer which is using it. Of course, there are commercial vehicle sales as well. So that trend for usage of CNG vehicles for personal buyer has actually been increasing over the years, and it's quite substantial now.
AI is revolutionizing how we work, play, and connect. It's not just about the tech, it's about the impact on humanity. Discover the secrets behind the world's most powerful technology, from enhancing our lives to shaping the future. Don't miss All About AI, your ultimate guide to AI brilliance.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's
Thanks for tuning into India Market Close right here on NDTV Profit. Let's pull up the markets and show you how the day has been like. It's actually been this way. So if you chart the intraday of the Nifty or the Nifty Bank, you will pretty much see a very narrow range move in the session today. Hardly a move here for the Nifty. Pull up the Nifty Bank as well. But if you can get the one with the intraday chart here, look at this. This is the Nifty 50 and this very narrow band that we've seen just around the highs and the lows. Similarly for the mid cap, or similarly for the Nifty Bank as well, it's been a very narrow move that we've seen today. The broader end of the spectrum yesterday was very active towards the second half. In today's session as well, while we started off okay, I think we've perked up and we are now trading close to the high point of the day. So the mid caps have done well, and I dare say the small cap index will also come on the screen in just a moment. That 1% gain on the small cap index too is pretty heartening. So Tamanna will have a lot more to speak, but let me just get the heat map up and show you what stocks are moving and what not on the index at least. So there's a pullback in IT. We spoke about the possibility. HCL Tech down about 1.7%. But the surprising thing is private banks, which are just showing a bit of a spunk in trade yesterday, have kind of wilted. So ICICI Bank, Kotak Bank, both of them down in trade, and that is putting a little bit of pressure on the index. Of course, Hero MotoCorp, by virtue of its sales numbers not looking that strong, is sulking in trade. What is doing well? Tata Consumer, Bajaj Auto, more importantly, because those numbers relative to TVS, relative to Hero, have done much better. So very good showing there. Adani Ports has some gains. M&M has some gains. So some specific reasons for select names, if you will. But by and large, pain in IT, but a lot of positives for the mid caps and the small caps. 3 days on a trot now, Tamanna. We're seeing those stocks do really well.
Completely. And, the whole story or the question about focusing on large caps now belying. Look at the Nifty Mid Cap 100 up over 1% on a day when broader markets are very tepid, so to speak. So what are the winners of the day? We have to talk about ABFRL. This was, in a sense, the stock of the day, buzzing since early this morning, now 12%. What's astonishing it is how it has kept up momentum. In case you missed it, they're demerging their unit, Madura Fashion, which has 4 very key brands, among others, and that has put the stock in focus. ABFRL completely roaring there. There is a heat wave prediction out there by IMD. You are seeing that pair out in a symphony. makes coolers about 10% up, Voltas about 3.5% up, and you're seeing both of those in focus today as well. Servotech is another one. So they have bagged an order for making EV equipment for charging stations. Servotech Power up about 5% in today's trade. Tata Tech, of course, the other exciting one. So now this was reported by some news outlets yesterday, but the company has confirmed it today. A prestige project, in no doubt. It's a new JV with the BMW Group that Tata Tech will be servicing. So that's about 4.5% up now on that stock. CAMS is the other one that I would pull up. So the IRDAI registered arm will now be facilitating issuance of insurance policies in electronic mode. Remember, from the 1st of April, all insurance policies have to be in electronic mode as per the rules. CAMS comes into play because of this, and they're already well positioned to take that up. As a newsmaker, that stock up 6%. So you're seeing a lot of action there in afternoon trade on specific counters. But overall, Neeraj, if you take out these specific pops, the broader markets are not showing too much of an action, and especially not on the key indices.
Yeah, but that 1%, I mean, I thought relative to what the index is doing, that 1% is pretty interesting. Let's see if our guests believe the same way or no. Soni Patnaik, AVP, JM Financial Services, to talk about the technicals and the derivatives. Dharmesh Kant, Head of Equity Research of Chola Securities, on the fundamentals. Both of you, thanks for taking the time out. Soni, how have you observed trade today, albeit over the last couple of days, where the broader markets and the market breadth has been pretty decent? What's your sense on index trades?
Hi, good afternoon, Neeraj and Tamana. Thank you so much for having me on the show. So if we talk about Nifty, it has been quite, sideways trend for today. There's a good support of around 22,200, 22,300, that range itself. You can see that's a strong support. So maybe a day or two of such consolidation sideways movement. There's a resistance around 20 to 550, 600 range. The moment it's able to take out the resistance, you can see it testing towards higher levels of 22,800, 23,000 levels that can be tested. So I think, just maybe a day or two of a sideways movement. But as per the rollovers data from March to April series, there's been significant short squeeze seen in Nifty. And that can add to a positive side, provided that 22,200 continues to act as a very strong support. I think it will be Bank Nifty that one should definitely watch out for in April series. We've seen very aggressive rollovers for Bank Nifty, and the bets have been taking more on the longer side of the trade. I think Bank Nifty, it has tested its first resistance zone somewhere in the range of 47,500 to 48,000, and as long as it's trading range, it may consolidate. But any move above 48,000, 48,200, you can see Bank Nifty retesting its previous all-time highs of 48,600. Above that, it just opened gates for 50,000 levels also. I think it's something that must watch, and it has quite strong support of 47,000. The risk-reward ratio is very favorable with Bank Nifty, and most likely this is the index that's going to lead Nifty ahead.
Yeah. Absolutely. Soni, very good afternoon. In focus has also been the entire auto pack, and I think investors absolutely rewarding or punishing the numbers as they see fit. I'm wondering if anything that you like in terms of the charts, would you, look at Hero at all for accumulation right now at its lower levels, or wait for this to play out?
I think Tamana, Hero is at a very good level. There's very strong support of 4,500, 4,450. As long as this level is getting defended, one can start accumulating in this level. There's a very good support. Keep your stop losses intact at 4,450. The stock should bounce back towards 4,750, 4,800 once more. The risk reward ratio is quite favorable, of course. But this is in a technical part. But if I look at the overall part for the auto space, we've seen good rollovers taking place from March to April series, and two stocks that clearly stand out in this factor in the sector. For the entire series, there are two stocks. One is Bajaj Auto, and the other is Tata Motors. I think these two stocks can significantly outperform the rest of the peers. And if we talk about Bajaj Auto, there's still an upside left of 9,500. We can see for Tata Motors, 1,080 to 1,100 can be seen. So I think these two stocks can be a better focus and compared to the data points.
So Bajaj Auto and Tata Motors on Sony's radar. Dharmesh, very good afternoon. Wanted to know your take on this entire pack. We're seeing M&M doing fairly well today. Bajaj Auto doing fairly well. They've had a 25% growth year on year versus an expectation of about 15% growth. So a big upside over there. The export numbers also looking quite decent. On the other hand, despite slowdown in the tractor business in Eicher and M&M not hurting too much. A Hero though is definitely seeing some pain. How would you break down the performance of this pack?
Yeah, Dr. Tamana, it's actually a mixed bag, depending upon which segment you are looking at. As far as the car sales are concerned, Maruti did very well. At the same time, if you look at M&M, the numbers were, skewed in all directions. Farm equipment did not do well, whereas the SUV segment was doing fairly well. But the other segment, MSUV segment, was again a disappointment to me. At the same time, Ashok Leyland numbers were not that great. Again, there was a disappointment out there. And in farm equipment segment, exports came out with a very poor set of numbers. That was anticipated, but again, it again re-advocates the same anticipation which is there in the market. Two-wheeler, it was a mixed bag. TVS came out with a good set of numbers, followed by Bajaj Auto. And both they, the driver was more of export sales which was happening out there. In case of Bajaj Auto, it was more predominant. And the management has been guiding about that. However, the management did sounded, a bit cautious about this export growth, taking up at a fast pace. They say it's a slow process and a grinding process which will likely to be continued. Hero MotoCorp did disappoint. So luxury segment and the premium segment has been doing well. That we have seen even in the case of car sales, the premium segment car sales were far higher than the entry-level car sales. And same is the case with two-wheelers. The winter rainfall in North India generally happens. It has not happened this time around to the extent, and that is a bit of a worry. So my own sense is the valuations at which these companies are sitting, it makes them more riskier bet from here on. And selectively, I think Bajaj Auto one can still look at along with TVS Motor. Others in the basket, including Maruti, to my mind, either if you are holding book part profit or stay away from fresh entry.
Okay, so that's the breakup as far as the auto pack is concerned, and a very important point that you made there, Dharmesh, that we are in for a heat wave. We are in an El Nino year. You might see even a delayed response further on monsoon. How is that going to play out? One of the stocks that is really buzzing as a result is Symphony, and I'll come back to Sony and Dharmesh on their take on Symphony, even a Voltas. But before that, let me go across to Mihika, who has that whole list of stocks buzzing in trade. Yes, Mihika?
Yes, so up first, the one that's on the top of the list is Sami Hotels, over 21 times its 30-day average in terms of volumes, and it hit an intraday low of negative 4.7%. Now, this was on the back of a large trade where 8% equity changed hands, and the possible key FIIs which could be sellers is ACIC Mauritius, which holds 15.2%, and Blue Chandra PT, which holds 8.6%. Then we had Symphony, which was volumes over 20 times the 30-day average, and it was an intraday high of 12%. This is after the IMD issued a heat wave, humid and hot weather warning for over the next 5 days, and it also stated that the April to June 2024 period will see above normal minimum as well as maximum temperatures. Then we had Aditya Birla Fashion with volumes over 20 times its 30-day average, and it reached an intraday high of 17% as the company announced to demerge Madura fashion segment of its to create two separate entities. And lastly we had TCNS, volumes over 20 times its 30-day average as well, an intraday high of 16%. Now Aditya Birla had recently acquired TCNS, and it's a part of their ethnic segment, and is buzzing on the back of the demerger.
Okay, some interesting names out there, and clearly Symphony kind of standing tall there, but I must say the likes of Voltas, etc. haven't done too badly either in the session today. Not as good as Symphony, because remember, coolers, a cheaper version than an air conditioner, obviously tends to have a larger market in a heat wave, more so in drier areas, and which is why I think fundamentally I can kind of understand why a Symphony would be buzzing more. Just wondering out here, Dharmesh, are you playing this heat wave story and looking at the cooling solution companies fundamentally?
Not really, Neeraj. I mean, Voltas had 2 bad years. And Symphony, I totally agree with you because coolers are more needed in a dry area. But I'm playing this heat wave through the heat which is prevailing in the sectors of the economy like defense and railway infra. So this wave should be utilized for where the numbers are actually heated and your order book is swelling up faster. And the trajectory is becoming more and more clear as far as the compounding of 12 to 15% from the lower single digit or mid single digit kind of a growth these companies are likely to embark on. So that is where the real play is. For trade, I mean, Voltas is budging and it does enjoy a benefit of lower input prices and coming off after 2 years of a bad play. The cyclical play may turn out to be there, but that's a trade to me, nothing more to it. Symphony, I intend to agree with you that 10-15% more kind of an upside, the way things are proceeding and likely to proceed going forward into April, May. So this sentimental play can still be on there, but that's a trade, not a investment play.
I'm not saying it'll go 10-15%. I'm just saying that relative to between Voltas and Symphony, I can understand why Symphony might actually be doing better, simply because of in a heat wave, the demand for a slightly cheaper cooler might be better.
I'm keen to see what's happening with Blue Star, what's happening with, say, Vadilal, Varun Beverages, United Breweries. If you're looking at that entire sort of heat wave kind of a play, and I mean, at least Blue Star doing okay. Varun Beverages, nothing so great. Let's see what Vadilal is doing. And is that, kind of a theme really building up over here? Not really. Not really, as far as at least Vadilal is concerned and Varun Beverages is concerned. Nothing very great there. Soni, any view on a Symphony?
Tamanna, if you look at the charts, definitely you can see this momentum is yet to continue, and it has given a good breakout on charts. There's the 970 level that it tested today, and there's some sort of profit booking from those levels, but it does not seem to be a very strong resistance. The moment it's above the 970, you can see it heading towards 1030, 1040 odd levels also, and this could happen in the coming couple of trading sessions. Good support, multiple support, but the crucial support for right now from current level stands out at 900, and one can just continue to hold the stock, look for higher targets of 1030, 1040 on technical chart.
Stay on. So much more to talk about. We need to slip into a quick break. We delve deeper into today's trade also. The macros are turning so favorable with regards to the PMI data, maybe current account surplus for Q4. Try and talk a bit about that on the other side. Stay tuned.
Hi, I'm Tanuj Bhojwani and I run MedPlus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in.
Welcome back. The weakness in Nifty IT deepening as we speak. IT is definitely not having a good day, but on the other end of the spectrum, you're seeing once again your economy-led stocks really firing up, a trend that Neeraj was also mentioning this morning, and it seems to be continuing. Dharmesh also very bullish on your infra bets, your defense bets, and we're going to get a few calls from him. Dharmesh, what in this space do you like right now? Because we're going into an election season. If we do have policy continuity as the market is expecting with the same party, same government coming back for a third term, you can expect a lot of action, a lot of announcements in the first 100 days of a Modi 3.0, if that's, of course, what eventually happens. What would be your bet or your positioning at this point in anticipation?
See, the top bet in the defense space has been Hindustan Aeronautics. So we have been holding this position from quite some time. And the good part is from 60,000 odd crores of order books to 94,000 odd crores, which it has reached right now. And these are long-term gestation contracts, so this continuity is likely to be there. And the tie-ups are happening. I mean, they have tied up with a French company, then they have tied up with the US company, and all these are for light combat aircraft manufacturing or helicopter manufacturing, where 80% of the know-how would be transferred, the technology would be transferred to them. And this is what is the key, because once you get the 80-70% of our technology being transferred and 60% of an offset clause setting in, so the dependency of the other players on you rises quite a bit. So provided you have proven your track record. So that company is doing well. We have seen the numbers for the Q4 or almost 11% kind of a top line growth they have reported. I do think this is, it's on an inflection point from where 8-9% kind of a CAGR on the top line can catapult to 12 to 15% kind of a CAGR by the, say, next 3 or 4 years. FY26 and 27, this is likely to be established with 25% kind of an operating margin in place. So a long way to go. It's still cheaper if you compare to Bharat Electronics. So that's the top play in the defense. On the railway side, RVNL is still my preferred bet. The management has been sounding very bullish and they're targeting around 1 lakh crore of order book when the next budget is rolled out. And that's the area, railway is the area where, a lot of action is expected once the government comes into power and the full-fledged budget is being rolled out. So these two play is the preferred bet. There are many others as well in the basket, but I think valuation wise in the order book visibility, execution visibility, and the way the transformation is happening in these two companies on the execution front, they made a buy. As of now, I am very sure that the valuation multiples don't justify the stock prices, but that is likely to be the case in a high growth kind of a company. And these are embarking on that trajectory.
All right. So some of the top picks there, RVNL definitely about 284% in the last 12 months. But can the momentum continue is the question. Soni, you want to weigh in on some of these names?
Definitely, Tamanna. The first stock that got discussed, HAL, quite strong, and you can see it heading towards higher targets of 3,700, 3,750 also. And the stock has given a very strong breakout above 3,350. So on a medium-term positional basis, one can definitely hold for higher targets of 37, 3750. If we talk about BEL is also looking very strong. 230 was the target. I think it has already reached, somewhere around 223 today. So maybe a buy on dip for this stock can work out better. Of course, the support lays quite low around 200. So maybe, HL can still give you that figure over BL as of now. And talking about the railway stock theme, RVNL, just looking at the charts, the stock or definitely on a medium-term positional play, we can see it has run up a lot. But from current levels, 240 is a very good support on charts. As long as it's holding, it can retest its higher levels of 285, 290 plus levels. I think the stock can also play in this zone for now.
Okay. The other thing is today, Soni, some of the private banks have kind of slipped. I heard you say that banks would probably be leading, and it seemed like that yesterday. But today they quite haven't done that. So is this ICICI Bank, Kotak performance disappointing, or would you bottom fish here?
I think Neeraj, what we can see is that yesterday Bank Nifty definitely was leading. Today it's very muted, and that's how the trend for Bank Nifty has been overall. If we just make a comparison in the past 2 to 3 months, we can see that's how it performs. Just like one day it gives you that hope, and suddenly it's just muted. So I think what can lead in Bank Nifty, there would be two stocks that one can just focus on. First would be HDFC Bank. Quite well, the correction has happened. It has underperformed. There's a resistance around 1500, but then just we have to look at how it has taken the support from 1400. It has risen from those levels and now slowly heading towards 1500. So I think on a medium term positional basis, we can see that it can head towards 1800 as well from current levels, and the support is very strong for 1400 as of now. I think this could be one stock that can definitely contribute to Bank Nifty, the entire space and the entire index. The second stock in private banks that can also contribute would be ICICI Bank. I think this stock we've also seen it has given out a consistent performance above 1040, which was its resistance zone before. It has given a breakout, and regardless of whatever the volatility movement we've seen in the markets in the last 2 weeks, the stock has been holding out that defending that support level of 1040, 1050. I think ICICI Bank on a medium term basis we see 1200 can get tested. So I think HDFC Bank, ICICI Bank together combined can give that support to Bank Nifty.
Okay. Well, on that note, and we still have to take Sony's calls, but I think what is also important to highlight among stocks which are doing well is Tata Technologies, which is in focus after executing a joint venture agreement with BMW Holdings. Let's bring in my colleague Puneet with more perspective on this. Puneet?
This agreement is very, very key for Tata Technologies. Looking at the key details as per the exchange filings now, this JV expected to deliver automotive software, which includes software-defined vehicles. Now, for the premium vehicles, there is a very high content for software, and Tata Technologies works with a lot of these EV as well as the premium players. While they said that the automotive software-defined vehicles solutions for BMW is what they are going to offer. The current stake is 50-50 by both parties in this particular JV, and they say that they will establish automotive hubs in Bangalore, Pune as well as Chennai in India. Now the focus will be delivering automotive software and as well as SDVs, the software defined vehicles for BMW, while they say that this will lead to transformative solutions for business IT solutions as well. Currently, it's very interesting that lately JP Morgan had written a report on the ER&D segment where they had an underperform rating on Tata Technologies, which had a target price of roughly 800 rupees, which is roughly 20-25% below the current market price. Now they had said that high client concentration was a key factor which was a problem for Tata Technologies, and JVs such as this with the likes of BMW will be key to get out of this high concentration. They had also mentioned that 46% was the current revenue from these anchor clients such as VinFast previously that they had worked with in 2021, and they say that they needed big evidence such deals like JV with BMW to have a positive view on the stock. So this JV is going to be definitely a very big key trigger for Tata Technologies, and more details are awaited from the same. Back to you.
All right, thank you for that, Puneet. Just wanted a quick word from Dharmesh on, what do you say about a Tata Tech versus some of its peers now after this BMW deal? Remember, the biggest, I would say, headwind or challenge for Tata Tech always was its dependence on VinFast, its largest customer. Does this help?
Yeah, definitely, yes. I mean, this is the brightest feather in the cap for Tata Technologies. And demonstration of technology and development of the various softwares was needed through a big brand coming into the client foray. So that definitely goes well with Tata Technology. And see, this is a future concept stock. How I am seeing the Tata Technology is a doubler if you are going to hold it for 3 to 4 years. So forget about the PE multiples, which is there. Numbers will definitely come through, and this is a new age company catering to more of the AI platform, which will be built into the future cars. They are working on that very aggressively, and they have demonstrated their technology prowess as far as the automobile industry is concerned. So 2000, 2200 is what we are expecting on the stock price, but you have to wait for 3 years. It's an investment buy, and this definitely helps them to a big distance.
All right. So, Tata Tech having a great day, and you're seeing that sharp spike up as well. What exactly is going to be the details of the deal is what we're hoping to find out from the management. We'll take a very short break, but on the other side, we talk about our stock of the day, ABFRL. What does this demerger mean for shareholders? We're coming back with all of those details in our special research piece after this short break.
Hi, I'm Tanuj Bhojwani and I run PeoplePlus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Back with India Market Close right here on NDTV Profit, and the markets as they are looking reasonably okay, though you would have to admit that 0.24% lower is nothing dramatic, but it's certainly off from being flattish. But really, I mean, it's not so bad that people need to worry about things. What we haven't done thus far is take Sony's calls. And Sony, can we ask you to give us your recommendations for the afternoon?
Definitely. Neeraj, the first pick is Havels, and it's building very aggressive long built up positions today, somewhere around 18 to 19% of long positions added today already. So Havels is a very strong on charts. Also, we can see 1520, 1500 has had multiple support. From current level to 1560 can be the buy zone. There's a small resistance of 1560. The moment it breaks above that, you can see it firing up towards 1650, 1700 levels. So stop loss 1520 and target of 1700 can be looked for Havels. And this could be also one of the stocks that can perform very well for the whole of April series. So this is the first stock. The second is from the banking space because I'm holding a bit of a bullish view on Bank Nifty. So the stop loss for Bank Nifty, in the banking space is for PNB. So PNB can be bought at current levels. Keep a stop loss of 122 and target of 132, 134 can be seen for PNB.
Okay. So those are some ideas. Keep in mind a clutch of volume buzzers include an AB Capital and ABFRL. Of course, AB Capital has this upgrade from Macquarie, which is leading to this 10% uptick for that stock as well. So much as we talk about Aditya Birla Fashion Retail, AB Capital is not far behind. Some extremely strong showing by that stock too in the session today. We spoke to Piper Serica's Abhay Agarwal on the global macro trends as well as the uptick in metals in the wake of China's manufacturing PMI rebound. Listen in to what he had to say with regards to that sector.
We have been tracking China, especially Neeraj, for last 6 months for a couple of reasons. One is that whenever China local consumption gets into distress, we have seen that the Chinese large manufacturers try to get into cash by dumping at cost or below cost their products, and that creates a deflationary cycle unintended globally. And I think Indian companies, a lot of them in chemical space, agrochemical, metals, have suffered because of that over the last 6 months. But whatever research we did, we also started seeing over the last quarter, starting January onwards, that that dumping has ceased and stopped being a problem. And the pricing power was coming back in a lot of categories, especially bulk drugs, metals, chemicals, agrochemicals. So I think the data coming out now of China of PMI increase and to be followed by better domestic consumption, cleaning up of the real estate exuberance, if I may say that. I think that is all my guess. I'm happy to make a bet that is behind us now. So all the pain that the Chinese economy, Chinese domestic consumption, Chinese exporters had to go through are largely behind them, and now we will see Chinese economy recover. The good thing about the Chinese economy is that it's not so dependent on foreign flows, unlike India, where for our capex and capital formation is still dependent on international global flows. China is not. It has a lot of domestic capital. So I think China will grow this year and grow at a level that will surprise the analysts, probably driven by domestic consumption. And this will lead, as you said, your bigger question, will the global growth outlook will be better than estimated? My bet is yes, it would, because I don't see any reasons of, the consumption falling off, interest rates are going to trend down. And when that happens, consumption goes up, the macros continue to improve, especially for India. So I don't want to be sanguine or careless, but I would bet that the global growth, global macros will improve from here on.
Okay, so 2 investing implications, and I'm coming to that before I come to the macro again, Abhay. The first one, let's talk about the Chinese data since you're tracking it so closely. Usually, China growth is associated with a cyclical uptick in metals. Do you see that happening?
Yeah, I think that is a natural outcome, Neeraj, because there is a limited supply of metals that comes into the global markets, and the Chinese exporters have been the largest ones there, and they have had no pricing power because they have to keep the factories running, and that puts pressure across the board. In a down cycle we saw last year where global consumption of metals didn't fall off the cliff, but at the same time it wasn't growing in a manner that people were used to. And on the same side, you have supply coming in continuously. I think that is going to even out. And the natural implication will be that the commodity prices, especially metals, will firm up from here on. However, I don't think it will be a very sharp uptake. It could happen in some commodities because we don't really track the exact monthly demand and supply data. But barring some, I think there will be gradual recovery. So if anybody is going to make a bet about sharp recovery in metal prices, I think they would also be wrong. But at the same time, I think the recovery over the next 12 months will be on the higher side. I would expect that generally metals as a commodity basket will not be surprised to see a double-digit growth in pricing from here on over the next 12 months.
Right, so that was Abhay Agarwal looking at the big picture, but in the immediate sense, markets completely flat this afternoon. Just a few buzzing stocks here and there. I just want to pull up what's happening with Indigo and Spice. That was another story that we've been covering through the day. A rival, Vistara, has been facing trouble with its pilots. Indigo hit its life high, of course, has come off those highs right now. SpiceJet is not doing too badly, actually, in trade about % odd up. Dharmesh, I'm wondering if you find anything interesting in this aviation space, and are you concerned about this shortage or these sort of personnel HR issues with pilots that Vistara is facing?
Yeah, it's a big surprise. I mean, so many airlines getting shut down and still you're having shortage of pilot. So there's something more to it. That is what it appears to me as of now. Having said that, I don't find this space very attractive because of this sensitivity to the fuel prices which are there. So it's again on the rise. Indigo is right now having a trading bump up just because of the issues with the other airlines. Be it SpiceJet had an issue, Go Air went out of the service. Earlier you had Jet, Kingfisher, all these things are happening in the space. And it's more of a, duopoly kind of a situation coming out. So that is the advantage which this airlines is having. But prices, if you look at the air ticket prices, they are more or less stable to flattish kind of a thing. And they are unable to accommodate, in spite of the traffic, a higher air ticket prices with respect to the rise in the fuel prices. So assuming a scenario where, fuel prices goes to $120 a barrel, it will be difficult for these companies to be profitable, and that is where the entire problem lies. Trading plays are on, and as of now, Indigo is enjoying the trading bump up.
Yeah. For some reason, Jet Airways also up another 5% today. Since we're talking about the airline's current and hopefully future, Jet Airways also on a circuit today. Let's turn our attention to what's happening on the derivative side of things. Agam is standing by with the F&O cues. Agam, is it as flat and listless on your side?
It certainly is. It certainly is. We are looking at a very quiet day of trade today, and the benchmarks have continued to move sideways, largely without any sharp movements on either side of in terms of direction. Even in terms of the futures, while the underlying has remaining absolutely flat at the moment, we are looking at not too much traction with respect to an increase in the Nifty futures. The Bank Nifty futures again, Again, very flattish movements there and very little change in open interest. Even in terms of the options market, what you may realize is that there's a continuation of writing around the 22,500 mark, as you can see here. Both with an increase of calls and puts, and a bit of unwinding around the 22,600 calls and puts as well. Let's move on and talk about how things are panning out as far as your overall open interest distribution is concerned. And surprisingly, 22,500 call is the one which continues to remain active at the moment. Of course, on the lower end, you'll have plenty of other strikes, including something like a 22,000, 22,100 puts, where there is a little bit more of a support building up. In terms of the Fin Nifty, where we have a lot of options expiry, that is also something that we're going to be tracking, but that's also largely flattish. Coming down to stocks, we are looking at shorts in IndiaMart as well as Gujarat Gas. ABFRL, it probably is the stock of the day, or one of them at least, because that's up as much as nearly 12%. A lot of longs building in there, longs for Ramco Cement and Havells as well. And in terms of stocks which see unwinding, that's where we do see short covering for JK Cement and Emphasis, and of course Info Edge, ABB as well as Pidilite. Even though the underlying is not declining by a significant amount, we are looking at some amount of longs and winding coming through there as well. All in all, it's a very, very quiet day of trade, and it's a wait and watch whether or not tomorrow's Bank Nifty expiry also shows similar characteristics.
Well, watch out for these for sure. Agam, thanks for putting that into perspective. So that's some sense of the derivative space as it stands right now, in some select pockets out there reacting the way they are. You look at the F&O activity, you look at the volume uptick that is coming into some of the stocks that have moved around today, and there is the other distinct favor of PSUs catching up. So it's not just restricted to a BEL, which is up today on very high volumes, but if you look at the Nifty 50 gainers as well, a clutch of PSU names have done rather well for themselves. Dharmesh, maybe for a brief while, it seemed that, oh, people will not want to touch PSUs. Is that changing? I mean, I'd rather be bottom up. And if so, are there PSU businesses that you like?
I mean, PSU businesses, the trade is very clear. It's the infra space which we talked about in the defense space. So these are the two spaces which have been doing fairly well, and the order inflow has been great. Valuation wise, since we are not used to the PE multiples or EV by EBITDA multiples of most of the PSUs looking historically, and then it becomes very difficult to justify the current valuation multiples. So, but look at the growth trajectory where these companies are heading to. Like BEL had never had that great order book, which they are sitting on now. HAL, 94,000 outputs of order book. RVNL closing in on 1 lakh crore of order book. So these are the sizes which these companies have not seen. Almost 3x, book to bill ratio is what they are sitting on, and the visibility getting very strong. Also, infra and defense space are there out there. Apart from that, I mean, the public sector banking space, which many people talked about earlier, I don't think there's enough juice left out there. So much of the trade has played out. And one can look at companies in the power play like NTPC, Power Grid, and from the metal and mining space, NMDC. So these are the select pockets where still, I mean, if you look at NMDC or NTPC or a Power Grid, the valuations are not that high if you compare them to their private players. So there's still juice left out there with strong ROEs and return ratios in place. So this basket will be there. I think next 1 year, when I do see a turbulent and a difficult market, in that turbulence and difficulty and volatility, these are the sectors in the public sector undertakings with such businesses will do fairly well.
All right. Well, let's get in one more wise. Arvind Chari, CIO, Q India UK. A keen eye on macros, but with equal aplomb on what themes and sectors might work. Good idea about what the global activity is looking like. Arvind, good having you. Thanks for joining in. Well, the growth numbers across the world seem to be picking up. India PMI numbers also looking strong.
Yes.
Is it a good time to bet on manufacturing? If it wasn't for the last 12 months, that is.
If you take a very long view, I think India kind of lost its way on the overall global manufacturing piece, right? So if you look at value-added manufacturing as a share of GDP, all the large countries, China, Korea, Japan, they had a very high share of manufacturing when they were growing, and India has always remained between that 14 to 18%. So from a global supply chain perspective, we kind of missed out on that. We made up in software services, where India's share in global soft services is very high, but manufacturing less so. But it looks like it is coming back in the sense that there is geopolitics in play, because there is this aspect of broad-based globalization, which was part of 1990s and 2000s, that has it's kind of giving way to countries which seem to be friendly, more strategic, and I think India is very well placed in that perspective, right? Where India is a democracy. India is not sided with anyone, but India is not allies, but also friendly with all countries.
India is not China, basically.
India is not China as well, right? I mean, that we know that from a lot of respects, India is not China. And maybe we are getting into some aspects of that manufacturing value chain as we speak. So I think Apple is a big test case. And yesterday there was a report that it has created the most amount of jobs as in that entire Apple ecosystem. So and I had written a piece last year saying that we need many apples a day to keep unemployment at bay, right? Because India's demographic dividend is subject to manufacturing and getting people jobs. And that is one aspect. The way we see as investors on where we see a lot of government intervention. So if you look at the electronics manufacturing chain, be it mobile phones, laptops, consumer electronics, or even semiconductors, there is a government capital subsidy, and there is a government policy deciding who are winners and who are losers. In that, as an investor, long-term investor, you need to be a bit more careful in terms of how you price those opportunities and the valuation comfort, also in terms of the policy comfort. If government changes, will that dramatically change the way India looks at these picking winners and losers in this entire manufacturing consumer electronics? But otherwise, from a global perspective, sitting out, thinking about where India lies in the overall supply chain, global value supply chain, especially in electronics, we seem to be in the right direction. If you look at the government semiconductor capital subsidy program, I think almost $20 billion of capital subsidy, seems that they have really thought it out and laid out in terms of design, chips, which is a later part, and then packaging. And there will be companies which are listed. There are some of them already listed. Maybe the valuation is not comfortable from a valuation perspective, but there are enough opportunities to play. Yeah. But by and large, I think India has missed the global long manufacturing chain.
We were a services play. Maybe we're shifting now. But I'm curious to know two things. One is you talked about government pushed capex.
Yeah.
What about private capex? Are you sort of in wait for when that fires, and then what happens then?
Yeah, I mean, it's been a story that everybody is waiting out for, right? I mean, if you look at the balance sheets of corporates and banks, which are the two aspects which you need to get that private capex, it's been pretty good for the last 2-3 years. Corporates have deleveraged, banks have written off or cleared off and cleaned off their balance sheet. So both the balance sheets are ready, but we still don't see a lot of private capex. Maybe this import substitution-led capex. So India does not want to import end mobile phones, so they have a tax on the end mobile, but then mobile phones gets manufactured. We're seeing those kind of capex going through, and some amount of steel and cement, but broad capex is still not visible. My sense would be, one could be that it is an aspect of the consumption and the income growth. We still seem to be lagging on the consumer demand and and the income part, and maybe companies which should have put in capex do not see that sustained demand over a long period of time, and that's why they are kind of shying away. They are maybe doing some working capital, some brownfield, but you're not seeing very large greenfield activities. That second is, I think, in this aspect of trying to get manufacturing done in India, both for India, make in India, and then make in India and export, you've seen an increase in import duties for many categories. In some sectors it is beneficial, maybe in some it is not, where if you are an intermediate producer where you're importing some commodity and then you're value adding and exporting, because of the import duty, if the cost of your production is higher, you might not be able to compete. Maybe this is one more reason why you're not seeing that private capex here.
I'm tempted to ask you, in your portfolios, manufacturing is not present?
It is there, but as you know, we are like we desire that discount to fair value, right? So we will play some amount of industrials, we played some amount of manufacturing. But as it gets expensive over our period of cycle of how we think about long-term revenues and earnings, if it goes expensive, then we sell. So we are not we are not constrained to only want to play a theme. We are liquidity cherishers, we value governance, and then we value the fact that we need a margin of safety to play. So we cover all this. The one place where we are seeing some opportunity is consumer durables. Again, getting manufactured in India, it's a manufacturing plus consumption theme. There we are seeing a bit more valuation comfort and bit more opportunity. But in like electronics manufacturing, for example, it's great opportunity, but it's expensive.
Sector of the day today.
Yeah,
consumer durables, at least the cooling solutions.
Consumer durables, Symphony, Voltas. You mentioned valuations a couple of times.
Yeah.
Now, this is a losing battle as far as India is concerned. I mean, it seemed expensive to many for a while.
Yeah.
How do you come to terms with that, and where are you still finding those pockets of opportunity which don't seem obscenely overpriced?
We keep getting asked this question, saying that what is a value manager doing in a country like India, right? But value means different things to different people. And as I explained on I think you're that Money Manager show, that for us, it's just a discount to a 2-year forward valuation. So we value companies over a 2.5 year forward, and we cherish a 25% discount to that. And you'll be surprised, or not surprised, that enough companies and enough sectors come and go through the valuation, because India is essentially a mean reverting market. You would see that across time periods, across time cycles, where you will see some 2 quarters are disappointing and the markets kind of lose a bit of confidence and derate those companies, and we are slightly more longer term in terms of how we look at companies, and we are able to buy in. Or when there's too much optimism, we will kind of trim out and sell out. So as a value manager, we'll kind of buy early. As a value manager, we'll kind of sell early. But we keep getting on. We have a 23-year-old track record, which shows
any sort of direction on what's on that list.
So
of
right
where
now,
you're finding value?
Financials, and for us, financials means banks, private banks, insurance, general insurance, asset management, broking. All these, especially private banks, seem pretty good in valuations. IT services, we've had reasonably large weight. Consumer discretionary, predominantly two-wheelers, where we've had that positions for long. That has done well for us. And as I said, consumer durables is one space, not consumer staples. Although consumer staples are underperformed, but it's still not in our valuation band. But consumer durables is something that we are seeing some. It's very name specific. It's not a broad sector, but there are opportunities everywhere. And as I said, we've have a 23-year-old track record where we keep finding values over what we define value and margin of safety and our horizon. So
my last question.
Yes.
Metals. Are you finding favor there?
As a cyclical play, we have a lower valuation threshold when it's a cyclical play. Couple of names are getting interesting for us, but nothing as of now. But we've been running, as if I can give one name, Tata Steel has been there in our portfolio for some time. But 2-3 other names are getting interesting, but yeah, not yet.
You talked about IT.
Yeah.
IT is, I think, lost favor for a while right now. Are you seeing, a change in that momentum or anything specifically that, you can point us?
I think we have seen this time and again, right? I think just go back to 2015-17 period when digital was supposed to be the big thing, and there was a view that digital will be, like IT services will miss out on the digital play, but it so happened in the next 3-4 years that they were the biggest beneficiaries of the entire digital mode because they were the ones who were implementing digital services across different organizations. Maybe AI is today that aspect of fear plus the global, just the global slowdown. From a long-term valuation perspective and from the long-term cost-benefit analysis of is the Indian IT services or the Indian IT coder cheaper than a Western coder or a same resource in Western, that argument remains, right? And there is so much more. AI will also require so much more digitization and software and services and maintenance, which is what we play IT services. Right? This is the bread and butter of these entities. So from a valuation comfort and from a growth perspective, we are okay. We know it goes through a lot of cycles because it is also global sector. It gets determined a lot because of global cycles.
Yeah.
We're happy to hold it over a period of time.
Great. Arvind, we'll leave it at that. Thanks so much for taking the time out and being with us in our studios today.
Thank you so much.
Your time.
Thank you so much.
Yeah, Arvind Chari there, with that big picture, and definitely IT is in that picture, though it might not be a current favorite. All right, just a few minutes to go for closing. Let me go across to Sony for any last BTST calls.
Right, Tamanna, for BTST, we can look at MCX. I think MCX is looking quite strong. It has given a very good breakout. It's hovering somewhere around 3,600 as of now. So keeping a stop loss of 3,500 and a target of 3,700, 3,730 can be seen as BTST trade.
Okay. And Dharmesh, before we let you go, anything in the recent news flow that has stood out and made you contemplate investments?
Yeah, we have come out with an initiating coverage on a small company, it's a 3,300 crore market cap company, DCX System Limited, primarily into system integration of the PCBs, catering to the Indian Defense Services or DRDO, BEL, HAL are their clients. And they have also a tie-up with Israeli companies who are into defense equipment manufacturing. Recently, they have tied up with Lockheed Martin of US. So it's in a nutshell, it's 1,200 crore is the revenue they do as of now, with around 6% kind of an operating margin with a PAT of 70 crores. We are expecting this revenue top line to go from 1,200 crores to 2,000 odd crores in next 2 years time frame, with these tie-ups coming into play with an operating margin improvement of around 100 basis point and a PAT of around 122 crores. So these are very conservative estimates. I do expect this company to do much better. They have also been developing a system called NIAT for the railway safety thing, and that's around 1.5 kilometers. If some object is there on the track, the system can identify that, and that's a mandate given from the railway ministry itself to them to develop some kinds of projects. So there are many multiple triggers which are happening and playing out there. Primarily, system integration is around 80-84% of the top line. Cable harness wires around 6-7%, and 3-4% is the kitting, which is also picking up in a big way. So 60% of an offset flows for this company, which the government of India mandates for any defense equipment to be manufactured in India, augurs well for this. So this is an interesting play. As of now, it's around 300 kind of a stock price. We have come out with our target price of 379, which is likely to be revised and re-rated going forward.
Yeah. Dharmesh, just one quick take on what I think is clearly the stock of the day. ABFRL looks like it's going to end also on a strong note. How much value do you see in this demerger plan, and would you take a bet on it right now?
Yeah, Tamla, just from the trading perspective and the relative value play, if you compare this with Trent, there's definitely a value in the offering. Around 60-70% kind of an upside can still be there based on this demerger. Because if you look at Trent, it's primarily a business driven not on brands but for quality and value proposition for the pricing of their products. So that is where the entire trigger was there. And through this demerger, this is likely to happen because Pantaloon and the other non-branded items will come into one segment, and the Louis Phillips of the world will come into one. So let's see how scalable and per unit ROC and ROEs this ABRL is able to do it. That is still to be checked. But I do think financial leverage and the operating play will definitely set in, and this relative concept of valuation will give it further upside of around 40-50% from the current levels. But business-wise, I am not at all bullish on this segment, be it Trent or be it ABFRL.
Got it. Sony, Dharmesh, thank you so much for taking the time out and being with us throughout the show today. Really appreciate the times, both of you. And as we wrap up the markets, a quick snapshot of the Nifty heat map, just to show you how we are ending. We are ending flat, and that's why, in fact, you could argue marginally in the green if you will, but the heat map should come up on your screen. And some gains to autos in particular, because you're seeing Tata Motors, Bajaj Auto and BPCL right there in the top draw. There's some flavor of FMCG because Tata Consumer and Nestle are also amongst the top gainers. Not too many losers, but private banks certainly sulking, with Kotak Bank as well as ICICI Bank in the red. IT sulking a little bit, and which is why you have that pressure on the index, but the market breadth has stayed solid, and the broader markets, Tamanna, have better action.
Absolutely. Nothing too much happening here in terms of the key indices. I think auto, IT, as you said, is a real pain point. But look at the mid-cap index, about 1% up. I want to pull up small cap as well and see what's happening there. Yes, absolutely 1% up. Let's pull up your sectoral breakdown and see what's worked. Public sector companies in focus today should be close to the top. Media for second consecutive session has done well. Metals also continue to show that kind of a strength. The auto index overall has not done too badly. Actually, I wouldn't say they're massive losers today, save for an IT. But specific stories that we should also pick up and see at close, I would say in ABFRL, Atanla, some of the buzzing stocks today. Let's see how they've closed. ABFRL finally 12% up. Symphony, another stock that has done well today. I'm curious to see how Tata Tech finally closed. It had a fair bit of news flow, a positive order flow actually, which showed action there. Actually, Neeraj, with the exception of TCS, the entire Tata pack has had a pretty decent day.
Yeah.
If I add in Tata Investments as well. So TCS, the exception there, but a Tamo, a Tata Steel, a Tata Consumer, and I don't know if you can show all of them together or one by one. It's a good day for the Tata Group companies in that sense. Even a Tata Consumer up about 4%.
And most of them have news, especially Tata Tech, but the others too. But it's looked at interesting day in the market breadth. As we wrap up, just show the market breadth, because I think that was important. Yesterday we had fabulous market breadth. I think today too, it's not been too bad. It's pretty much been this way since the start of the trading day. So therefore, 2 days of very strong breadth. May these last.
Yeah. We'll, wait and watch how opening trade is tomorrow. So you know where you have to come back for that. Back to NDTV Profit, and we'll see you back on India Market Open at 8 a.m. tomorrow. But in the interim, from Neeraj, me and the entire team that put this show together, thank you so much for watching. Stay tuned. A lot more coming up on the other side on NDTV Profit.
AI is revolutionizing how we work, play and connect. It's not just about the tech, it's about the impact on humanity. Discover the secrets behind the world's most powerful technology, from enhancing our lives to shaping the future. Don't miss All About AI, your ultimate guide to AI brilliance.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
What an exceptional year it has been for Maruti Suzuki. Stock, of course, is trading at almost all-time highs. Highest ever annual sales, 15 straight months of highest ever monthly sales. And the person who has been leading the sales task force at Maruti is here with me, Mr. Shashank Srivastava, Senior Executive Director, Sales and Marketing at Maruti Suzuki. Thank you so much for joining us today. Exceptional year. What led to this growth?
Yeah, so multiple of factors, there's no one factor, but multiple factors. First of all, the economy did really well. And as you know, there is a very high correlation between economic growth and the fortunes of the auto industry. So it's been, in that sense, very good overall economy. We saw some really good capex expenditure by the government, especially in the rural infrastructure and so on, which also is related and has a multiplier effect on the demand for automobiles. Third, we saw, as Maruti Suzuki specifically, we introduced the 4 SUVs, and that impacted our sales very positively, because SUV is now the biggest driving force for growth in the industry. 26-27% growth for the SUV sector, whereas the overall growth in the industry is around 8.5%.
You spoke about rural. So what has rural growth been for Maruti, and how do you see it panning out from here on?
So rural has been very positive. In fact, this year, the growth is around 11.2%. That compares favorably with urban growth, which is around 7.2%. And in fact, rural, our overall contribution of rural sales in our total portfolio now is around 45%. So that's pretty large. For the industry overall also, it is it's grown to about 33-35%. So rural has been doing well. Apart from those capex expenditure on infrastructure that I spoke of, it has been a normal monsoon. Although at the beginning of the year, we were a little afraid that the El Nino will probably reduce the monsoon as such. But it came out to be roughly the average, long-term average was pretty close to that. Kharif sowing was pretty good. Rabi sowing going on is very positive. So I think that has affected positively the sentiment, and we do hope that in the future, the rural sale will continue to show a positive progress.
And what about your urban? What is the expectation from rural and urban growth for 2025?
Yeah, pretty much similar. We do expect the rural growth to continue, especially if you have a normal monsoon. Of course, it is dependent on monsoon because that affects agricultural income in a big way, and that affects the sentiments quite disproportionately. So, and as you know, car buying is a discretionary purchase, so sentiments are very important. So, we do expect rural growth to continue to be in the positive territory.
You know, earlier it was assumed that rural and small car segment are closely related. But since rural has shown growth, but the small car segment is still struggling. Do you see the income in the rural areas have shown significant growth?
Yeah, absolutely. In fact, if you look at the data from 2007 onwards, the rural growth I'm talking about auto industry has been higher than urban growth in all years except one, which was I think 2012. Otherwise, it's been always on the higher side compared with the urban growth, and largely because the rural incomes have been rising faster than urban incomes. Also, as I mentioned about the infrastructure getting better, so sentiments are quite positive. So yes, these are the factors which have helped rural become so big now in the auto.
Now, let's talk about WagonR has been one of the most successful products, and that's mainly because of commercial vehicle usage, the taxi usage. Now, what is the segmentation between personal vehicle buying and commercial vehicle buying, and what is the trend there?
Yeah, so you mentioned about the higher commercial usage. Actually, that's not true so much anymore. WagonR is the number one vehicle in the industry. In fact, for the last few years, is the only brand which is selling in the industry more than 200,000, sold more than 200,000 this fiscal year which just ended. There is a lot of personal buying in WagonR. In fact, the proportion is quite high. Earlier, people used to feel that since CNG is also an option available in the WagonR and it's a significant portion of the sale, people used to think that it's largely commercial which takes. It's not true anymore. In fact, if you see cities like Bombay, Pune, Mumbai, Pune, where the penetration of CNG in WagonR is like 70-75%. But it is largely the individual buyer which is using it. Of course, there are commercial vehicle sales as well. So that trend for usage of CNG vehicles for personal buyer has actually been increasing over the years, and it's quite substantial now.
And what about the trends in commercial vehicle buying?
Commercial vehicle buying a little muted. We have the super carry as one of our main commercial. That segment super carry did not do as well. In fact, it had a little negative, and that reflects the overall growth in the commercial vehicle, in the small commercial vehicle space. But I think as the economy picks up, we have found a high correlation, and the economy goes up with a lag. You will see commercial activity also going up, and that would reflect on the commercial vehicle space. Fleet segment has done much better. Remember, in the COVID, it had fallen to about 1.5%, but this year it's been close to 12% or so. So it's taken the uptick back again, and hopefully that segment will also continue to do well.
For next year, Siam has predicted low single-digit growth. What is the expectation from Maruti in terms of growth?
It's actually similar, except that we should grow faster than the industry, of course. Like in this year also, we grew faster than the industry, helping us add to our market share. So we do hope the same thing will happen next year. And one of the reasons why, and people are asking why single-digit growth, and one reason is, of course, the base is pretty high now. Last year, we had some supply issues in the few months in the first quarter of last year. In fact, up to July, we had this issue of semiconductor-related components supply issue, which is no longer the case now. So not only the high base, the number of pent-up bookings which we saw in last year are no longer there, because you have seen much normal production from July of last year onwards. Also, the pipeline in the inventory pipeline is sort of more fuller than what it was last year. Last year, we started the year, I mean, if you see the 23-24 fiscal year, was with only 200,000 stock in the industry. We are ending with about 310,000. So there has been a build-up in that, although less than the 30 days norm, which we have. Average sale this year is been about 3.5 lakh per month, and the inventory of 310,000 is therefore less than a month's stock, but still much higher than what we had. So the pipeline filling may not be the luxury which will be available this year. So based on these combination. Also, the interest rates probably not fully built in the auto loan rates. 250 basis points was the increase in the repo rates. But as you know, auto loan rates are come with a lag. So only 130 basis points have been built in so far. So we expect 120 basis point to come in the next few months.
Okay, now let's talk about some of the plans that you have already announced, including your EV plan. 2025 is when we expect the EVs, but do you think, what is the segment that you would be thinking in terms of pricing strategy for EVs? So
we are first vehicle which we will be introducing would be in the mid SUV segment. So it's like a 4.3 meter vehicle, like the Grand Vitara type of SUV, and it will have a large battery, maybe a 60 kilowatt hour battery. So the driving range will be in excess of 550 kilometers. So that's a very positive thing. At the moment, we are making preparations to make the buying process and the owning process, the ownership experience of consumers to be without any hassles, and so that he feels very happy buying and owning electric vehicles. So we are preparing our plans accordingly.
Mr. Honorable Minister, Mr. Gadkari said that hybrids taxation, they have already sent the proposal to Finance Ministry for regularizing hybrid taxation. They are talking about 5% to 12%, for 12% for flexi fuel and hybrids 5%. How significant do you think if this happens, will it be for you? Because you are pioneers in a way for hybrids.
Yeah, so economically, if you go by the fundamentals of economics, a lower tax rate should reflect in lower prices, should reflect in higher demand, clearly. But we haven't seen official, we have to see what actually the rates would be, and we are building different scenarios, of course. But hybrids in the last 6-7 months have actually outsold the EV. EVs are at 5% duty, hybrids are at 43%. It's still a substantial gap. But I think the range anxiety which consumers are feeling in a EV still needs to be addressed through the charging infrastructure, which apparently is currently not fully accepted by the consumer. So hybrids do not have that. Hybrids are vehicles where you can they charge on the brake energy of the vehicle. They don't require an external charging. So I guess that makes it so much a good option in the current situation, and that's reflected in the sales figure if you see the last 6 months.
Do you think government should think about, there was a talk of carbon dependent taxation. Do you think that's a structure that should work for India?
I think there are positives and negatives about those type of structures. And we are a growing economy, and our carbon footprint targets also are different from some of the really developed countries. So I guess different philosophy would be, different types of philosophies would apply to powertrains in our country. And we'll have to see what the policymakers think about it.
And during the press conference, you spoke about the powertrain mix by 2030. Can you give us those targets for Maruti?
Yeah, so we have mentioned before about 15% EV, 25% hybrid, and the balance 60% a mix of CNG, biogas, flex fuel, and gasoline.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Now, let's talk about some of the existing products. One is, of course, Jimny. Are you disappointed with the way Jimny sales have been? Because they have reduced quite a bit from where they started. And in fact, in 1 month, they were a little over 100. So is that disappointing for you?
If you're looking at the recent Jimny figures, yes, definitely. But if you look at the overall thing, it's a very niche segment. So we were at the beginning looking at around 2,000 to 2,500 per month type of sales. The initial bookings that we had, remember we started the bookings in January in the Auto Expo. The actual vehicles were launched in June. And that's the time when we announced the prices as well. After which we saw some cancellations. Well, so far we have done about 18,000 Jimny sales. And that's around 1,800 a month. Or sort of figures, not so different from that 2,000, 2,500 mark. However, I mean, I would have expected it to be higher. But of course, one thing which we have realized is that while the bookings indicated that this segment is really well developed in India, the off-roading type of vehicle, but I think now we, in hindsight and now with the fresh data available, we think that is probably not the case. And to be sure, there are a lot of people who are passionate about cars, off-roading, adventure drives and so on. But I think that culture needs to be developed in the country. And that's what we are now doing for the Jimny, having a more experiential marketing type of activities. And we have very recently started the Rock and Road concept, which is about giving experiential drives to our consumers. And some of them, like in really we call them 4x4 masters. So there is one weekender, which is like for a normal type of consumer. Then there is a 4x4 masters, which is there is expeditions also, which is a longer drive, but still can be done by a normal customer. But the 4x4 masters is like thorough off-roading, and that's where the Jimny excels. And we do hope that with the prowess that you see of the Jimny on those really tough tracks, there would be this not only development of the culture of off-roading in the country, but also that people will realize the great vehicle Jimny is.
You know, you mentioned 1800 average, but if you look at the trend's downwards. Do you think this product itself needs course correction? Maybe like the way we have seen in the competitor, the direct competitor is of course Thar, a two-wheel drive. Do you think that's something that you would want to consider?
We did get this feedback that that the price of the Jimny, if only it was 200,000 rupee less, and that if it was even if it did not have a four-wheel drive. We considered that suggestion, but we came to the conclusion that this is a legacy brand. It's got a 50-year legacy, global brand, and it is known for its off-roading capability. It has to be a four-wheel drive. So we did consider it and said no, because in any case the volumes are that 2000 range. So it is probably better to retain that off-roading type of brand with that four-wheel drive rather than get into the two-wheel drive just to get some extra volumes. And on the recent sales, let me tell you, the retail sales is a little different from what you see. So when you say the wholesale numbers being less, it's true. But the retails are, in fact, in December, the retail for Jimny was 4,500, which is like much above the average.
Now, some of the products that you share with your international partner, Toyota, Invicto, how has the performance been? Are you happy with it?
Yes, so Invicto, actually, we have a supply constraint. We have a lot of bookings. The supply has been in that range of 500 to 700. So really, I would say it has not been tested as such with free availability, and that's the time when it is available freely. That's the time when you get to know the real market situation and how much you can expect from the brand, that particular brand. And it has not been the case because we have had this waiting, and with only 500-700 vehicles in supply, we have to wait and see. When it becomes actually X stock, there is still waiting in the Invicto.
All right, I must tell my viewers that Mr. Shashank Srivastava now leaves this position and moves on as executive committee member, and now will be taking care of Maruti 3.0 strategy as well. Can you tell us what is Maruti 3.0 strategy and what your new role will entail?
See, as was mentioned in the conference, and I can't really add more to that, except that this is a group which is found of senior people from different verticals, and together they will think across vertical and try to see and help strategize for this 3.0.
All right. Thank you so much for taking time out, and best of luck for your future. Thank you.
Hi, I'm Tanuj Bhojwani and I run PeoplePlus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
there are different types of stocks. Large cap stocks, mid cap stocks, and small cap stocks.
How to decide which is the one for you? First, decide on the stock.
Don't listen to anyone and everyone.
When it comes to your hard-earned money,
Join us as we put the spotlight on 6 stocks.
on your show, Hot Money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
You can accomplish all your financial dreams. Let us worry about giving you the right investing insights on the Portfolio Manager. Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody.
Markets snapped the 3-day gaining streak owing to the pressure from IT stocks. Mid and small cap banks lead the outperformance in the broader indices. The Supreme Court grants bail to Aam Aadmi Party leader Sanjay Singh after 6 months in jail in the liquor policy case. Aviation Ministry and DGCA Vistara to submit daily information and details on flight cancellations and delays after pilots' sick leaves affect 200 flights. Tata Technologies and BMW form a joint venture to make auto software for the German car maker. The 50-50 JV will set up R&D in Pune, Chennai and Bengaluru. Bata makes an attempt at regaining its market share, says it will focus on youth-oriented products and will invest in properties to improve brand visibility. The Supreme Court rejects Patanjali's apology for violating the court's order restraining the conglomerate from advertising medicinal products. The court to hear the case again next week. Hello and welcome. You're watching The Reporter on NDTV Profit. I'm your host Pallavi Nahata, and as always, the show aims to bring to you market insights along with national and international news. But before we can move on to the next segment, it's time to see how the markets have performed today. My colleague Mahima joins us for a quick markets wrap.
Well, the benchmark indices have traded in a very flat range today. The Nifty closed around 0.04%, 44 points away from its day's high. The laggards on the Nifty 50 today include Hero MotoCorp, Kotak, HCL Tech. Well, the Sensex also closed pretty much flat, around 0.15%. The broader markets did outperform the benchmark indices. Midcap 100 closed around 1.2% higher. The gainers were ABFRL, Aditya Birla Capital, Linde and Oil India. And in terms of small cap 250 closed 1% higher. Well, the gainers on the small cap 250 index were Tanla Platform, Godfrey Phillips and NCC Limited. In terms of the sectoral update, well, Nifty Media, Nifty Realty and Nifty Metals were the top gaining sectors today. Nifty Media, the gains were led by Saregama and Z. Nifty Realty, the gains were led by Prestige, Godrej Properties. The Nifty Metals, the gains were led by SAIL and Vedanta. And lastly, Nifty IT was the top loser. HCL Tech and Infosys were the two stocks that dragged the index today.
Let's shift focus from aviation to the consumer goods sector. In a recent analyst call, Bata said that it aims to improve its focus on youth. This comes after the footwear major witnessed flat growth in same sales growth last quarter. Sesha Sen joins us with more details. Sesha, is Bata losing footing in the industry?
Bata has braved ups and downs since 2000, but the brand's legacy held it in good state. But now what it seems is that Bata is struggling to stay relevant in the market. Even the once loyal customers are making a switch to upstart brands like Metro, Asics, and a host of private level entrants in the online space. Now, in the past, utility products and affordability helped Bata become the go-to brand, but its low fashion quotient is averting repeat purchases, and hence the growth has been missing. Now, if we look at the last 5 years, the household footwear retailer has seen its net sales grow a meager 5.6%, which is the slowest compared to its peers, Metro Brands and Relaxo Footwear. Now, this number is even bigger disappointment since the brand has been trying to sharpen its image and it's selling more premium brands such as Hush Puppies, often ignoring its own, the Bata. Bata's shares have plummeted 16% over the last 6 months. Now, while this could be partly because of the inflation-led slowdown in the mass segment, from a long-term lens too, the stock is in red. It has given a negative return of 3.6% in the last 5 years versus Metro's 144% return and Relaxo's 94% return. Now, the management has made multiple course correction in terms of brand perception, marketing, distribution, expansion, bringing new products to resonate with the youth, and even management churn. But that has not really given a positive return. Analysts believe that Bata is still far from being an aspirational brand. Incremental benefit from the online channel shall be limited given the current portfolio. Similarly, gains from a widened wholesale channel would be limited as it is a value-driven channel, which is a category where Bata lacks. Overall, it is clear that Bata is facing an uphill task against the competition. However, with the right adjustments and a focused approach, there is still hope, according to some analysts, for the brand to regain its hold in the market and appeal to the evolving demands of today's consumers.
Thank you so much for that, Sesha. Now, moving on, the apology by Patanjali in the misleading ads case has been deemed not acceptable by the Supreme Court. Varun joins us to give us more details. Varun?
That's right. The Supreme Court today came down heavily on Baba Ramdev and his multinational conglomerate for being in open violation of the court's directives in the Patanjali misleading ads case. The court said that the apology tendered by Baba Ramdev to the court last week was not acceptable to the court and said that it was furnished as a mere lip service. It further reprimanded Ramdev for engaging in a press conference right after an undertaking was furnished to the court, saying that no casual statements regarding the medicinal efficacy of a particular class of medicines will be made to the public fora. In addition, the union government drew flack in the case for not making the public aware of the fact that when COVID was at its peak and Patanjali had come out with its COVID medicine, the same was only to be used as a supplement to the primary medicine and not the primary medicine itself. Lastly, Solicitor General Tushar Mehta said that what has happened in this case should not have happened, but he said that he wanted to sit with the concerned councils to figure out a way forward in this case. The court then allowed time to both the union and Patanjali for figuring out a solution in this case, and the case has now been posted for the next hearing on April 10, when both Baba Ramdev and Acharya Balakrishna will again have to be present before the court.
Well, flight cancellations and delays continue to trouble Vistara passengers. Over 100 flights have been cancelled and nearly 200 have been delayed. The Aviation Ministry and the DGCA has asked for a detailed report from Vistara. I'm joined by my colleague Maitri Seth to tell us more on this. Maitri, what are you picking up?
Yeah. So flight cancellations and delays have still remained a concern for passengers who are traveling by Vistara. Over 100 flights have already been cancelled and over 200 flights have been already delayed by the airlines. Now the core issue is that why this has actually happened. So pilots had called in sick in mass and because of that there is a lot of crew shortage in the airlines, which has led to operational related issues. But as per the industry sources, what we have been hearing is pilots are actually protesting and are disappointed with the new pay structure. Now, what is the new pay structure? As per that structure, pilots will be guaranteed a pay of 40 hours of flight time, which is lower than the 70 hours of flight time, which was written in the earlier contract. Now, this has led to a lot of disappointment amongst the pilots, and concerned by this issue and considering the seriousness of this issue, both the Aviation Ministry and the Aviation Regulator, which is DGCA, has asked the airlines Vistara to actually submit detailed reports on the issue. And they have also asked to submit daily reports on the cancellation and delays. On the other hand, what Vistara has been doing is actually planning to even cancel more flights and delay more flights. They are also planning to reduce the number of flights, which is the frequency of flights. Now, this issue is not something which is new. Even a month ago, there was a news that pilots had called in sick, because of which there were flights being cancelled, there were flights being delayed. But this was something which was not a bigger matter of concern at that point of time, because other reasons were also cited. Now, for example, because it was the end of the financial year, so there was an assumption that pilots might have been wanting to exhaust the leaves that they had.
Right. Thank you so much for that. Thank you so much for that, Maitri. We'll continue to bring to you the latest on that. My colleague Ishika Verma also spoke to some of the passengers who are facing the brunt. Let's see what they have to say.
If the flight is delayed or flight is cancelled, so people will face big problem. It's like my friend had said his mother was not well, and after that he was waiting for 3 hours and has not been informed. There is no SMS, there is no people has come, and there is no snacks and then things are to be delivered. So it is a big problem for the passengers. I think words has gone big. Now action must be taken on that. This is my request to the airlines. It must to action must be taken then, and it is a better to, if we go to the other airlines, maybe the airlines will be full and we can't go on change of the airlines. It is not easy to go for the passengers to shift that airlines. So that is very tough for the passengers. So I think better the words has big gone. Now action must be taken by the Civil Aviation Department. So that must be something that will definitely happen.
Investments are coming despite a high PE ratio. That reflects the optimism on India. That's what SEBI chairperson Madhavi Poribak had to say while talking at a CII Corporate Governance Summit. She also said that the regulator is a proxy for remaining public shareholders.
Today, overall, across the market, 44% of shareholding is with the promoters. 56% is with the public. So the regulator is nothing but a proxy for that 56%. And so when industry seeks to build trust with the regulator, it's trying to build trust with the market. And when the regulator seeks to build trust with industry, it is doing so only as a representative of that 56%.
Moving on, Tata Technologies has formed a new joint venture with BMW Holdings, Netherlands. Let's bring in my colleague Tushar Singh with more perspective on this. Tushar, what is the focus area of this JV?
Thank you so much, Pallavi, and a very good afternoon to you. So first of all, this deal is between Tata Technologies and BMW Group to make automotive software for the German car maker. That's the basic of this deal. That will also expand to setting up IT hubs in the cities of Pune, Chennai and Bangalore. So what is this JV structure going to look like? First of all, Tata Technologies will incorporate the JV as a wholly owned unit, which effectively means that the JV will become a related party to Tata Technologies. Secondly, after the merger deals are completed, the clauses are done with, then BMW will invest to the extent of owning 50% equity in this particular JV. After that, this particular JV will become a part of BMW's chain of IT hubs across the world. Now, why is this deal relevant? India is already at the top of ER&D spends that they are seeing so far. It's a great place for automakers to develop their software. We already know that Mercedes-Benz has its largest R&D center outside of Germany in India, that's in Bangalore. Separately, another German firm, that is Bosch, has 18,000 Indian employees working out of India for its largest R&D center. It's basically the software hub for Bosch around the world. Pallavi.
Thank you so much for that, Tushar. Now moving on, volumes in the Forex derivative markets have come down significantly. This comes just a day after stock exchanges issued a circular stating that any rupee derivative transactions must have an underlying foreign exchange exposure. The rules were first issued by the RBI in a January 5th circular. My colleague Mimansa Verma joins us with more details. Mimansa?
Yeah, hi Pallavi. So the data that we see on the exchanges have suggested that the open interest, which is the open positions that traders take in the futures market, in the rupee derivatives market, have come down by 20% in just a day. Now this is the data on NSE website, but traders can trade in futures market through NSE, BSE and MSCI. Now, the RBI had already issued this circular on January 5th that customers will have to have an underlying forex exposures in case they want to trade in the futures market. What the market participants have told us is that this might be because the RBI wants to limit the speculation and arbitrage opportunities in the futures market in comparison to the offshore rupee market. So it's a developing story, and we will let you know the details for it as and when they come. So far what we know is that brokerages have asked for are intending to get some clarifications from the RBI and seek some relaxation on the circular. Although the circular has already been in place since 2017, it's just that they have enforced it now, and that has caused havoc in the rupee derivatives market today. And the circular comes into effect on April 5th. So it's just 2-3 days away from the time when the circular actually comes into force. And before that, traders and clients are squaring off their open positions in the forex market, which has actually led to a lot of drawdown in the volumes.
With that, it's time to slip into a short break, but stay tuned. We have a lot more lined up on the other side.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back. You're watching The Reporter on NDTV Profit. The Supreme Court today granted bail to AAP leader Sanjay Singh in the Delhi liquor policy case after being in jail for 6 months. I'm joined by my colleague Aishwarya Jain to tell us more about this. Aishwarya?
Well, it was in October when Sanjay Singh was arrested after Enforcement Directorate raided Sanjay Singh's residence, and today it was in the Supreme Court where bail petition was heard by a 3-judge bench, in which it was decided that Sanjay Singh should be released, but and Sanjay Singh had also been entitled to do all sort of political activities, but Supreme Court has stated that this case should not be kept as precedent for the other cases. On the other side, it is Sanjay Singh who had earlier categorically stated that he should not make public statements regarding this case after he walks out of the bail. Currently, Sanjay Singh is at one of the hospital because of his illness, and it would be Supreme Court orders which will reach at the Rouse Avenue Court, and after that, that release orders will be sent to Tihar prison, to which Sanjay Singh had to sign that register. We have been told by our sources within the Aam Aadmi Party that Sanjay Singh can come back to his residence by tomorrow, but there is Aam Aadmi Party which is saying that because there was no money trail found from Sanjay Singh's account, and it was only after 9 statements that had been given by Dinesh Arora, and only after those 9 statements it was Sanjay Singh's name which came up, and therefore the reason perhaps Sanjay Singh was arrested on those grounds. Now after 6 months, Sanjay Singh has been released, and he is the first Aam Aadmi Party leader so far to be released in the alleged Delhi excise policy case. The Aam Aadmi Party leaders also are now claiming that if these are the grounds of their release, then they are hopeful that soon the other Aam Aadmi Party leaders, including Arvind Kejriwal, Manish Sisodia and Satyendra Jain, will be released soon.
Thank you so much for that, Aishwarya. Moving on, CoinSwitch is the latest player to enter the stockbroking space. The company's parent, People, has announced its formal expansion into stockbroking with Lemon. My colleague Rishabh Bhatnagar is joining us to share more details about this report. Rishabh?
That's right, Pallavi. We have the latest entrant in the newer, sort of relatively newer stock broking players. You already have Zerodha, Grow, Upstocks. Apart from the legacy players such as Motilal Oswal, Angel One, now you have People Co. and CoinSwitch's Lemon app that you can trade via. Now, what they aim to do differently here is that they aim to solve two problems. They aim to solve the problem of stock discovery. They say that that is broken, as well as decision making. So what they aim to do rather is to empower users into making better decisions on what stocks to buy when. That they will do in the form of advisories by research reports and other sort of discovery mechanisms as they go on. What we're also hearing is that in an effort to woo users, for the first 3 months, they will not be levying any sort of fees. It will be completely based on zero brokerage fees for the first 3 months, that is. Apart from that, CoinSwitch has made, so a bit of background to this is that CoinSwitch started off as a pure crypto investment app. Then last year, sometime in November or December, is when they forayed into a larger asset classes and devised an umbrella brand called People Co. And now Lemon is the second brand after CoinSwitch under People Co. What we're also seeing is that Lemon currently is focused only on equities. It will soon get into futures and options, mutual funds, and also applying for IPOs. So very, very interesting new foray that we're seeing in the stock broking segment here, Pallavi.
Thank you, Rishabh. With that, we're moving on to the tech space. Google will be deleting all of the search data that it has collected through its incognito mode. This news comes after the company has settled over a $5 billion privacy lawsuit. The settlement calls for no cash damages to be paid, but gives an option to Chrome web browser users to sue Google separately in a case they felt that they were wronged by the search engine company. The case was filed back in 2020 and states that even though users can turn off data collection, other Google tools used by websites, for example, its advertising technology, scoop the data anyway. Moving on, my granddaughters are my biggest stress reliever. That was the word from Gautam Adani, chairperson of the Adani Group, sharing a heartwarming moment talking about his family in an event in London. Listen in.
I love to spend time with my granddaughters. They are my biggest stress reliever. I have only two worlds, work and a family. And for me, family is a great source of strength.
With that, it's a wrap on the show. But as we do that, today, the April 2nd is World Autism Awareness Day. A day to raise awareness and acceptance for individuals with autism spectrum disorder. This year's theme is Color, highlighting the possibilities of a vibrant life that those on the autism spectrum can lead. Today, as a part of our initiative by Hyundai, in partnership with NDTV, we try to understand what it means to be on the spectrum and see how the right tools and direction can help those on the autism spectrum live an enriched life.
If I can't learn the way you teach me, then teach me the way I can learn. This single line sums up the philosophy at Muskan, a Delhi-based training and employment center for individuals with intellectual disabilities. Many of the students training here across various skill development programs such as food and beverages, bakery products, candle making, hospitality and more are on the autism spectrum disorder. Autism spectrum disorder looks different for everyone, and each person with autism has a distinct set of strengths and challenges. Pritender Singh Soin, also known as Preet, is an alumnus of Muskaan. He has come over to meet his classmates and his teachers. He trained at Muskaan in this cafe and later was placed at Microsoft's Gurgaon office, in whose cafe he has been working for the past 6 years.
For a long time, we did not even understand what he has till he was almost 14. You know, we changed institutions for him. One institution just sent me some journals on autism. So once I started looking at those journals, I realized that there's so many things. Dawned on me that he has to be handled in a different way.
And that different way is different for every single individual who is on the autism spectrum. To understand neurodiversity and customize skills for individuals on the spectrum, it's crucial to understand where that individual is on the spectrum and what the nuances of their specific condition are.
Every individual with autism can be a unique individual. Now, somebody can have high IQ but very low in social communication. But somebody can be a bit more social but low on IQ. So these parameters change. So that is why it is called that there is a spectrum in this particular disability.
Mridula Sakle has been a teacher at Muskaan for the last 20 years. She has been instrumental in creating assembly lines for each vocational course based on the individual's capacity and strength. The constant goal is to equip these individuals with their varying intellectual disabilities with employable skills.
हम उनकी स्ट्रेंथ्स पर ही काम करते हैं. कॉपिंग उनकी स्ट्रेंथ है और वो बहुत अच्छा कर पाते हैं. हम करते हैं कि अगर उनको बता दिया कि ये टेबल की एज पर रखकर आपको फोल्ड करना है, वो एग्जैक्ट उसी एज पर जाएगा और फोल्ड होगा.
We have also been placing our students after training in mainstream employment. So they are working in many hotels, they are working in corporates, they are working on petrol pumps. We believe that every organization has such kind of jobs which can be identified and they can be trained for that.
Samarth by Hyundai, in partnership with NDTV, seeks to build a world that is inclusive and accessible for those with disabilities. But the best lesson in inclusion and how to make individuals who are neurodivergent feel safe comes from Preet himself.
Camera. मैं काम करता हूँ, लाभ से काम करता हूँ, लाभ से नॉट सो बच्चे.
Hi, I'm Tanuj Bhojwani and I run PeoplePlus AI. We're an organization that helps startups build AI. Will AI take away jobs? Well, that's a mixed bag. Some jobs like customer service or KPOs or even junior level programming will be impacted in the short term. However, we're already seeing a new class of AI engineers, prompt engineers growing fast. We're even seeing a new version of the IT services industry, an IT services 3.0 if you will, come up around building for AI. The idea is that your job and what you do every day will change because of AI. Some jobs might go away, new jobs get created, but this is going to be an exciting time for our economy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could...
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. The case for a chat today, well, you can't not talk about metals, especially after the Chinese data that has come out. So, and the fact that the global growth is looking okay. So, our rising port volumes, I'm using that as an analogy, a hint of improving or healthy global macros. That's the first point on our radar today. Metals, will they rise higher on stronger Chinese growth numbers? And the Chinese PMI number, is that a lead indicator for that? I think that's the second question that we'll ask our guest. In addition, to talk about how would consumption volumes pivot? Will they move higher, staples, or will it continue to be confined to premium consumption? Our guest today is Abhay Agarwal, founder of Piper Serica. Abhay, great having you. Thanks for taking the time out. I hope all is well.
Yeah, thank you so much, Neeraj. As always, a pleasure to be, on the show talking to you.
I know the pleasure is entirely ours, Abhay. I assure you that. Let's start off, Abhay, with maybe wondering if the world has gotten it wrong in the first quarter about what will happen to growth for the rest of the year. US data not looking too bad. Europe, I was reading a Gavical research note which spoke about how the Europe data is not looking all that bad in the last couple of releases. China PMI data that came out was also looking better than otherwise, and we know that India is looking okay. So some of the large pockets, are they turning at the margin, and what would that mean for risk assets like equities?
I think we have been tracking China, especially Neeraj, for last 6 months for a couple of reasons. One is that whenever China local consumption gets into distress, we have seen that the Chinese large manufacturers try to get into cash by dumping at cost or below cost their products, and that creates a deflationary cycle unintended globally. And I think Indian companies, a lot of them in chemical space, agrochemical, metals, have suffered because of that over the last 6 months. But whatever research we did, we also started seeing over the last quarter, starting January onwards, that that dumping has ceased and stopped being a problem. And the pricing power was coming back in a lot of categories, especially bulk drugs, metals, chemicals, agrochemicals. So I think the data coming out now of China of PMI increase and to be followed by better domestic consumption, cleaning up of the real estate exuberance, if I may say that. I think that is all my guess. I'm happy to make a bet that is behind us now. So all the pain that the Chinese economy, Chinese domestic consumption, Chinese exporters had to go through are largely behind them, and now we will see Chinese economy recover. The good thing about the Chinese economy is that it's not so dependent on foreign flows, unlike India, where for our capex and capital formation is still dependent on international global flows. China is not. It has a lot of domestic capital. So I think China will grow this year and grow at a level that will surprise the analysts, probably driven by domestic consumption. And this will lead, as you said, your bigger question, will the global growth outlook will be better than estimated? My bet is yes, it would, because I don't see any reasons of, the consumption falling off, interest rates are going to trend down. And when that happens, consumption goes up, the macros continue to improve, especially for India. So I don't want to be sanguine or careless, but I would bet that the global growth, global macros will improve from here on.
Okay, so two investing implications, and I'm coming to that before I come to the macro again, Abhay. The first one, let's talk about the Chinese data since you're tracking it so closely. Usually, China growth is associated with a cyclical uptick in metals. Do you see that happening?
I think that is a natural outcome, Neeraj, because there is a limited supply of metals that comes into the global markets, and the Chinese exporters have been the largest ones there, and they have had no pricing power because they have to keep the factories running, and that puts pressure across the board. In a down cycle we saw last year, where global consumption of metals didn't fall off the cliff, but at the same time it wasn't growing in a manner that people were used to. And on the same side, you have supply coming in continuously. I think that is going to even out, and the natural implication will be that the commodity prices, especially metals, will firm up from here on. However, I don't think it will be a very sharp uptake. It could happen in some commodities, because we don't really track the exact monthly demand and supply data. But barring some, I think there will be gradual recovery. So if anybody is going to make a bet about sharp recovery in metal prices, I think they would also be wrong. But at the same time, I think the recovery over the next 12 months will be on the higher side. I would expect that generally metals as a commodity basket will not be surprised to see a double-digit growth in pricing from here on over the next 12 months.
Mm-hmm. We were talking to Lloyd's Metal earlier, just to try and get a sense of how is business looking like. And of course, he rightly said that the Indian business looks materially different from what China data may or may not show independently. And was sanguine about volume growth, though mentioned that 13-14% for the last 2 years was a dream. Dreams don't get repeated, so maybe we see 8-9% volume growth. With that and the pricing numbers or estimates that you may have, Abhay, can we see a constructive rally for Indian metal companies in the current calendar, or are there better pockets and more predictable pockets to look at?
So I think these are exclusive things, So I think metal space as by itself, you look at most of the Indian metal manufacturers have not shown any performance over the last 2-3 years. So I think this year may be a year that driven by the volume growth and plus pricing growth, the margins may expand and the balance sheets may get better, improve. The only problem I see in this sector, Neeraj, is that because it's a highly consolidated sector now, just like cement. So anytime there is a volume and price pickup, the companies start working on the next capex cycle to grow, and they have this, all of them, rightly so probably, passion for continuously increasing capacity. And that is why this industry goes through its ebbs and flows, where supply comes up right at the time when the volumes are tapering off or pricing pressure is there. So that is the nature of this industry. So with that caveat, if somebody wants to play a recovery cycle in this space for next 12 months, you have to look out for those purple patches when exactly, I think where we are getting into, which is volume and price uptake, to play that. But I don't think that these are for long-term investors, because these are very cyclical industries at the same time, Neeraj.
Got it. Abhay, the other aspect about these growth numbers, right? And if global growth picks up, what it does to inter-country exchange of commodities and goods, etc. I mean, I was reading a note from Citigroup on Adani Ports this morning, talking about how yesterday the company spoke about comfortably beating the revised guidance. And I'm trying to think if what a port company in India has done is indicative of what the kind of demand is, or is it an isolated case? So my question therefore to you is the strong data release about cargo handled by Adani Ports a company specific thing, or do you think that companies engaged in world trade could actually have a decent run for the next 6 to 9 months, considering that world growth seems to be doing a bit better than what people were factoring in?
I think it is a mix of both, Neeraj, because I think Adani is an exceptional manager of ports business. They really get it, and that can be also seen in the string of pearls acquisition strategy that they have come up with, where they have been acquiring some of these strategic ports and then turning them around, increasing cargo. So I think port management is a very, very complex business. It's a lot of heavy engineering, constant capex, constant improvement in operations, trying to get bigger and bigger ships closer to the port. So I think it requires a very big player that understands that complexity. And there are very few players in the world who do that, like Dubai Ports and Maersk and some of these other guys. So I think Adani is almost at that level. So the fact that their numbers are improving, I'm not surprised, because I think they're a good operator, and in a macro environment where trade into India and outside India is going to only grow, they will benefit more than other operators. At the same time, other operators will also grow. But from an investment perspective, it's not a buy recommendation, or it is not, we may have the stock in our portfolio. With that disclaimer, I would say that, in an environment like this, one needs to look at the best operator, who has the balance sheet strength, technical capability, ability to attract talent, get customers, a vision. And I think Adani Ports rates right up there, on top of that list. So I think it's a mix of both. Adani being a great operator of ports, plus the macro pickup in the trade business.
By the way, standard disclaimer, viewers, Adani Group owns Adani Ports, and Adani Group also owns NDTV, and you're watching this conversation on NDTV Profit, so just wanted to lay that disclaimer out. But Abhay, this has been fascinating thus far, to just get just the brass tags out of the way. Just anything else on the global macro, Abhay, that stands out before we need to slip into a break? But before that, anything else on the global macro that stands out for you, that you will keep an eye out for, that is crude in the picture right now and it's perking up because of the geopolitics? Does that come into the fray, or anything else?
No, crude, I think it's a red herring. It has always been, last 30 years that I have been investing, I've heard this, many times. Crude is going to go to 150, 200, 250. And then, just when people are, gearing up their portfolios for very high crude prices, it corrects. So I think crude has an automatic mechanism, like most commodities, where the large suppliers understand that it is dysfunctional to break the market by charging too high a price. So I'm not worried about crude prices. It will always spike. That's the nature. I'm not worried about commodity price spike. Geopolitical risk, unpredictable, always there. But what I'm looking at, Neeraj, more to answer your question more closely, is the interest rate correction or fall globally. And once that happens, I think that will start a virtuous cycle of capex, which will further lead to demand, and then further lead to consumption and further capex. So I think we can, and people are not budgeting for it, frankly, driven by interest rate cuts, we can get into that virtuous capex cycle over the next 2-3 years, which will see the risk assets also perform well.
Okay, Abhay, stay on. So much more to talk about. We need to slip into a very quick break, but please stay on, because we'd love to talk a lot more about some of the other things, including talk about some of the capital market plays that Abhay Agarwal had highlighted in the last time that he spoke to us on our show, Portfolio Manager. Talk a bit about that. Talk a bit about the big news development for the day, which is Tata Technologies winning a contract or signing a JV with BMW. It's a bit of a landmark announcement. We talk about that as well.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Back with Talking Point right here on NDTV Profit. Tata Technologies is a stock in focus after executing a joint venture agreement with BMW Holdings Netherlands. What is this about and what would it mean maybe for Tata Tech? My colleague Puneet joins in to give some perspective here. Puneet, good morning.
Hi Neeraj, good morning. And as you rightly said, this agreement is very, very key for Tata Technologies. Looking at the key details as per the exchange filings now, this JV expected to deliver automotive software, which includes software-defined vehicles. Now for the premium vehicles, there is a very high content for software, and Tata Technologies works with a lot of these EV as well as the premium players. While they said that the automotive software-defined vehicles solutions for BMW is what they are going to offer. The current stake is 50-50 by both parties in this particular JV, and they say that they will establish automotive hubs in Bangalore, Pune as well as Chennai in India. Now the focus will be delivering automotive software and as well as SDVs, the software defined vehicles for BMW, while they say that this will lead to transformative solutions for business IT solutions as well. Currently, it's very interesting that lately JP Morgan had written a report on the ER&D segment where they had an underperform rating on Tata Technologies, which had a target price of roughly 800 rupees, which is roughly 20-25% below the current market price. Now they had said that high client concentration was a key factor which was a problem for Tata Technologies, and JVs such as this with the likes of BMW will be key to get out of this high concentration. They had also mentioned that 46% was the current revenue from these anchor clients such as VinFast previously that they had worked with in 2021, and they say that they needed big evidence such deals like JV with BMW to have a positive view on the stock. So this JV is going to be definitely a very big key trigger for Tata Technologies, and more details are awaited from the same. Back to you.
Puneet, thanks for putting this into perspective. Viewers, lest you get confused, the JP Morgan note is of the past when this announcement had not come in. Now that it has come in, we may well see JP Morgan change their stance as well, because clearly their note suggested that there is not enough ability to scale up non-anchor clients, and the anchor client exposure is 46%. This may help Tata Technologies balance it out, and which is why I think we're seeing this 5% uptick on the stock today. Abhay, now come in on this one, 6.5% actually, but come in on this one. Tata Technologies, ER&D stock, that space has behaved very differently than the traditional IT services, and